Sharad, joining in this morning for the FNOQs.
Well, there seems to be a big overreaction in the closing session, but seems like the global indices have a different story to talk about. The US futures have interestingly steadied, and look at Japan and the South Korean markets. That AI rally, the sell-off which was there last week, that seems to have come up, and some recovery is happening. And right now also, it's too early to talk about it, but nevertheless, we might see some reversal at least in the opening hour of trade, but do take some time until the market stabilizes for larger trades. Nifty Bank, the story has remained the same, but the most important data in my entire analysis is the 4 straight days of buying in the cash markets for the FIs, and this time it's convincing. Almost 2,000 crore worth of inflows is coming in. So this is a very important data point to track despite what's happening in the volatility. Looking at the shorts, we are still at the highest levels in the series. Yesterday it was 89%, now it has jumped to 91%, but that's not a major concern. The concern definitely is that right now options data is suggesting there is a little bit of a divergence coming in the analysis. At 24,000 levels, most of the congestion is still there, especially if we talk about the put contracts. But the stocks, whatever sell-off was there, there might be some kind of stability, at least in the initial opening segment. Some signs are there. And the realty pack, even after the expiry I had mentioned, there was a good buying coming in. So you can expect some reversals in the realty names as well. But of course, the usual names, ONGC, Oil India, likely to do well in the trade. Opening interest losers, let's pick that list as well to see which stock should be in your radar. Asian Paints, of course, they have a crude derivative angle to it as well. So there will be a little bit of volatility in these counters. But nevertheless, data is pointing out to consolidation, but in a very tight range in the day's trade today.
I wonder if you'll see some initial recovery, because what happened yesterday was sharp and furious when it comes to the way markets reacted, but it was fear about what's happening geopolitically. First on my list is Tata Steel. I'm going to start with Tata Steel, and Q1 highlights is what the key trigger here is. It's a good set of numbers that have come through in your business updates. Crude steel production rose 11% year-on-year due to higher output at Jamshedpur and Kalinganagar facilities for Tata Steel. The auto vertical saw the best ever Q1 volumes at 9 lakh tons. Branded products and retail vertical saw best ever Q1 volumes at 17 lakh tons. Tubes and tin plates saw the best ever Q1 volumes. Netherlands production and deliveries were impacted due to sheet plant shutdown in April 26. Trial runs are ongoing for the sheet plant ahead of restart of full operations. They're setting up a 3 MTPA electric arc furnace at Port Talbot for Tata Steel UK. The second lot of stocks actually are life insurance stocks. So during the market hours yesterday, you had some of their numbers coming in and the growth that they're showing. So their updates came in, some of those on your charts. Of course, Bajaj Life had a good set of returns over there, and APE growth. Kotak Life was also looking decent. Now, here is what that data is being seen as far as brokerages are concerned. Macquarie is saying this is a healthy uptick for the industry. SBI Life and LIC shine. Industry records a healthy growth of 16% year-on-year in terms of individual APE. SBI Life and Max Life perform well, while HDFC Life lags. Ticket size remains a key growth lever as retail policy growth stayed modest. LIC continues its upward trajectory, registering an individual APE growth of 21% year-on-year, although it was aided by a favorable base. Now, APE is an important metric that the life insurance industry tracks in terms of an equivalent of all of the annual premiums you get to adjust for mid-year premium updates as well. So that's an important indicator that is seen. LIC is coming out on top over there. Syrma SGS is the third stock on my radar. HSBC has initiated a buy with a target price of 1,750. High growth manufacturing at scale, leading EMS company with a diversified customer base and original design manufacturing expertise. Backward integration and inorganic expansions are key to growth. Strong competition in lower value segments is a concern. Target price of 1,750, the highest on the street. So watch out for Syrma SGS as well.
Yeah, interesting note. The initiating coverage there, all right, so let's talk about IRB Infra. It's the first stock on my list, and a regular update here. They're talking about the June toll collections. They've risen as much as 28%, so a decent uptick there, coming in at 808 crore rupees. So therefore now you have the full quarter. Remember, in May, they reported a run rate of 842.7 crore rupees, and that was a growth of about 25%. So for the full quarter, you're seeing collection improvement or increase in collections to the extent of 25.6%, which gives you some perspective on what the numbers might look like. Second on the list is also a quarterly update. You have Phoenix Mills. The numbers look actually pretty decent. The retail consumption has gone up by as much as 32% on a year-on-year basis, stood at 4,727 crore rupees. The office occupancy is also improved to 72% from 70% with the increase in leasing in the quarter gone by. And residential sales stood at 64 crore rupees and collections at 51 crore rupees. HSBC is weighed in on Phoenix Mills. They've maintained a buy with a target price of 2,230. They say this is another quarter of strong consumption growth, a third consecutive quarter, in fact, of 25% plus consumption growth. The Agra hotel recorded a good revenue per available room growth, as well as St. Regis continuing to grow or showing strong run rate on a long-term basis. Office occupancy has inched up slightly, while the residential continues to be slow. The strong RevPAR growth is seen across both hotel assets. Finally, Nomura on Indus Towers is what I've picked up, because the stock has been through a little bit of a wobble in the recent past. They maintained a buy with a target price of 505. What they're saying is that the sharp correction is on the nervousness with respect to Jio's tenancy renewal, and the share price correction may be overdone in their opinion. Stock buying from Bharti may provide support, and they see value in the stock even in the unlikely scenario of Indus losing all tenancies from Jio. The stock trades at an undemanding valuation of 6.1 times the FY28 EV to EBITDA multiple. So watch out for this one in trade. If it actually, the stock that you're tagging is wrong. It's actually Indus Tower that we're talking about. So pay attention to that one. Yeah.
389 and counting. Let's see a couple of brokerage notes in recent past. Let's see if it revised the stock, because it fell from 441 all the way to 380 or thereabouts. So the zing kind of went away from Indus. Let's see if there is some buying there. JSW Energy, the first one on my list, not because of any other reason, but for the fact that their declaration seems to suggest that they've commissioned over 1 gigawatt of renewable energy capacity since April 2026, which means April, May, June, or even if it's May, June, and thus far in July, if they've commissioned 1 gigawatts of additional capacity, that's really good execution. I don't know if it brings about a reaction in the stock or no, but if indeed they have done so much in that quarter, maybe it points towards the quarterly numbers not looking all that bad for JSW Energy. So keep an eye out for this one. Also remember, most of the renewable energy companies, their quarterly numbers promise to be good because the run rate of execution has been strong, and maybe the margins could come under a bit of pressure because of the quarter the way it was, but keep an eye out for this one. May react a little bit today. The one that was tagged, which is Standard Engineering Technology, board meets on July 11th to consider a preferential equity issue. Keep an eye out for this one. The word on the street is that some interesting names could get into this, so you want to keep an eye out for these. And SH Kelkar, one more name, which has done a quarter one update. The consolidated revenue increased by about 13.7%. Gross margins remain stable. The net debt stood at 864 crores, which is fine. But the fact that in a quarter which is fairly volatile, if indeed gross margins have remained stable for this chemical company, maybe just it's a sign of things to come for what could happen to a lot of the chemical names as well. We've been talking about it for the last 2 or 3 days. Keep an eye out for these.
Okay, we've been talking about the big story, which is what happens to crude prices, what's happened with the tensions in the Middle East, and the key marker to track is the flow of oil through the Strait of Hormuz. Pankaj Srivastav, Senior Vice President, Commodity Markets of Oil at Rystad Energy, joining in this morning. Pankaj, very good morning to you, and thank you so much for joining. What is your data insight telling you about the actual indicators? Is oil still flowing through the Strait of Hormuz even as all of these comments are being made and there's some extent of firing?
Yeah, so what we are tracking and our observation is that based upon our tracking tools and analysis, the oil flow through the Strait of Hormuz is happening close to 6 to 7 million barrels. And our expectation is that with the war, or I will not say the war is getting started, it is a stop on and off situation, that numbers may little bit go down. But at till this point, till the yesterday, the amount of the tankers which has been passed through Strait of Hormuz is currently close to 6 to 7 million barrels, and we are expecting, currently observing that 3 to 4 VLCCs are coming out from the Strait of Hormuz. And whatever the data we are seeing, mainly the contributor into total flow is Saudi Arabia, UAE, and Iran. And Kuwait has also started exporting, but we have to be a little bit cautious that with the recent incidents, these numbers may go down drastically. If the deals discussions start happening, and whatever we have observed in the past also, these small attacks and these altercation starts happening, and then the US says that yes, we are going on the table. So this is on-off situation, not our expectation, and it is not going to completely stop the flow. Yeah, we will see some spike in oil prices. I think it is touched close to $80 per barrel. But in the long run, deal is going to happen. In case the war goes on full-blown mode, our analysis indicates that we might see $120, $130 per barrel of the crude shortly, whatever,
Yeah.
which we have not seen earlier, but those numbers can be expected within couple of the month. Not in the short term, but yes, in the October time frame, we are expecting close to $130 per barrel if everything comes to the standstill.
If everything comes to the standstill, what about the other end of the spectrum, Pankaj? Because in this case, you have to have both scenarios ready, that there is everything flows through and there is a glut of oil. Then where does Brent go?
Yeah, so if that is happening, we have basically did this analysis based upon our expectations that the 15th of the July was the date when the Strait of Hormuz will start opening up and the issues will not be there, the ceasefire will hold on. We are expecting the crude prices third quarter, end of the third quarter will be in the range of $65 to $70 per barrel. Because if you see that overall demand destruction has already happened globally, and that demand destruction is basically pushing the oil prices down. Supply increase is going to happen. UAE is out from OPEC plus. Iraq is targeting to exit OPEC plus. They have threatened and they wanted to increase the overall production. Then Russian supply is also increasing. And as far as the India is concerned, the Russian refineries has been gone for a severe attack from Ukraine. Ukraine have attacked the Russian refinery 250 kilometers inside the Russia. So that shows the refinery consumption in Russia is going to decrease, and that will again push that oil to the market. And that is the one of the recent observation we have seen, that the Russian crude delivered basis in India is showing.
Pankaj, very quickly, what about the flow of Iranian oil? What have you observed?
Yeah, so till this month, Iranian flows are close to 2 million barrels out of 6 to 7 million barrels flow, which is happening from Strait of Hormuz.
Okay. And just one understanding for us and all of our viewers, when you look at all of this information, how do you get accurate information of what's happening in the Strait of Hormuz? What are some of the tools that you use? Whatever you can share with us.
We are using satellite tracking. We are basically trying to get some data from our industry sources, the people who are sitting in the ground, the custom reports, and vessel information, which vessels are going inside the Strait of Hormuz, which are coming out. Because and there are certain level of the analytics assumptions also, how much crude is being produced, what is the inventory level at the respective country. So it is basically very collective analysis, which includes the production, inventory, vessel tracking data, AIS, satellite tracking, and then after that, we come to the conclusion that these numbers are making some sense.
Thank you for sharing that, Pankaj, because we have to understand the sanctity of where that data is coming from and those insights. Very glad that you've joined us this morning to share it. We'll take a very short break. The Nifty implied still up in the green, but the extent of that upside has gotten shaved off quite considerably. Still about 47, 48 points up is what it's showing. We're taking a very short break. All of the action on the other side. We're going to talk about TCS. We're going to talk about all your picks of the day. Don't go away.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's
Back to India Market Open at the NDTV Profit Suzlon Studios, and let's get in our guests on the morning on the show, Parag Thakkar and Kush Bora, with their thoughts on the fundamentals and the technicals respectively. Gentlemen, thanks so much for taking the time out and being with us. Kush, yesterday was boiler room in the second half, right? Particularly the last 1 hour. Now, today, is it a semblance of sanity or is it too soon to call right now, and will this get sold into?
What a beautiful reference. I don't think too many of them caught that, but what a beautiful reference. Good movie. My question is why?
Why don't you tell everybody else what the reference is?
This private joke.
No, it's not a private joke. Boiler Room. So there are very handful of these, amazingly made market-related movies. Boiler Room, I think 1980s, perhaps, or 90s, around that time. Yeah. It was one of the well-made, market-related movies where they show what kind of stuff happens in the dealing rooms. Not something that you want to get inspired by, but yeah, it is Wolf of the Wall Street before Wolf of the Wall Street.
So it was a boiler room kind of situation yesterday.
Exactly, yeah. So actually, I have a broader question. Why? What is even the point? What kind of fundamental analysis is going to work in a market like this?
Nothing.
What kind of technical?
Kal Trump ka.
Bhai sahab, bas wahi haal hai. what kind of technical analysis is going to work on a day like this? So that's my question. Why? What is even the point of this, right? I spoke to some derivative traders yesterday. They are the most nimble fingers that you will find in the market, right? Always on the screen, always up to something. They said, Kush, the old ways of making money, even in the derivative strategies, is dead. The only reason they're surviving is because they are experienced enough to adapt to their strategies. This is not the capitalism we signed up for. Anyway, for what it's worth, and speaking of days, by the way, 926 days still left to January 2029. Yeah. So, like I said, we've already had 3 breakdowns on the Nifty in this calendar year alone, right? And we've discussed those in the past. The interesting point is we go out, hit that first target or that first resistance level, take that out and then slide. This could well be the norm going forward. For the here and now, if there is any bit of silver lining, it's the first thing that the 23,800 mark has been respected, and if there were any excesses in the system, very squarely they've been taken off. I remain a little more constructive on Bank Nifty right now for a very simple reason. Private banks had run up quite a bit and they've seen some cool off. So that's a good sign. Makes a base for them to move up from here. PSU banks yesterday, we said, वैसे कुछ नहीं कर रहे हैं. They went into oversold territories and could see a rebound from here. So Bank Nifty actually from here looks well poised for a leg of another leg of up move. The 100 DM in here 55,700. That's the level that you have to put as your stop loss if you go fresh long from these levels.
And what are the stocks that you're liking today, Kush?
Yeah, I think I made a mistake yesterday. For the first time in forever, I had only 2 short calls.
Oh, you want to double it now?
I should have had all 3, right? But because of whatever happened yesterday,
you yourself said no one can predict what's going to happen. Yeah, so then it's okay.
See, that's the other thing. What do you do in a market like this? I'll just take another 30 seconds. What do you do in a market like this? Stay nimble, keep tight stop losses, and please keep booking profits. This is not a market where you sit and ride on your profits for a long time. So that said, because a lot of stocks have gone into oversold territories, there's only 1 short call, not 3, going with 2 long calls. One of them, Pondy Oxides. I think the entire space is doing well. This stock also has been in the news. Healthy volume accumulation, relative strength also apparent. So Pondy Oxides is something that you can consider for a long trade. 1500, 1545 targets, 1420 is where you keep that stop loss. The second one, by the way, is a stock that we discussed yesterday as the only long call, Rajratan Global. Now, it went on and hit target 1 before everything transpired the way it did. So strength is there. I will still reiterate a call on this. You can just push the stop loss lower to 450. And a short call on Siemens has been seeing selling pressure for a while now. Could perhaps see some rebound today, I beg your pardon. But the primary structure for this one is negative. So 3370, 3320, these are your targets. 3470 is where you keep that stop loss.
I'm wondering, just taking that forward where we don't know what will happen next, etc. Are occasions like this now a time to calculate what's the time to a taco trade? Because you know that there is going to be a reversal. Hear me out on this. And the base case, we have seen this time and again, that there is a statement, you have a huge upheaval one way or the other, negative upheaval on markets, and then quickly it sort of rebounds. And we've seen that in the last 12 hours, right? We've gone from scum, there's Sikh, Islamic Republic of Japan bhi aa gaya beech mein, all of that. And then you have, okay, they're dying to talk to us. So maybe you see an improvement here. Is that the assessment now people need to make?
120%, Tamanna. The only problem is how. How do you assess when a person's mood is going to swing?
Okay. You have to judge when the next key market is opening.
ये वाला तो लाइव मार्केट में हुआ ना. हमारा इंडियन मार्केट चालू था, यूरोपियन मार्केट चालू थे, those markets were shut. So by the way, there is a handle, I think Kobesi letter. They had mapped out, Tamanna, in the first 6 months of his presidency, they had mapped out that he comes on, gives a statement and then reverses that trade in about 5 or 7 steps. It played out to perfection for the next few events, that he himself started. Now that is changing because perhaps even he's realized the market is adapting to that. So how do you predict it is the question, but that's the only analysis that could work. I mean, if someone can get it right, wow, kudos to you.
No, I mean, if Iran knows that their statements are also moving the market, they'll play the game as well.
Yeah,
so Trump is not the only player in town.
No, he's the biggest one.
Of course.
Let's give him credit for
most powerful one.
Most powerful one. Let's give him credit for that at least.
The loudest voice. But what comes from the other end as well.
The one person on this table so far who has not said anything is Parag Bhai. So why don't we invite him to comment on this, to say that in this kind of a scenario, as we said at the start, fundamental analysis kind of has to go out of the window, but then it comes back. It comes back.
Only in the window.
Oh, that's the only thing that matters.
Because I'm telling to my colleagues also, now don't try to predict what is going to happen today. That is out of the window. Okay, actually fundamental analysis is the only thing which is in the window. Excellent. Because you know the intrinsic value of business in a limited circle of competence which you have about certain sectors. Right? For example, I keep saying this, I say my view is 1750 hona hai. Okay, so, now this is a small hurdle which has come. Stock has corrected. Yesterday also I said it might cool off, right? Without knowing what Trump was going to say. So because it had rallied 200 rupees, it might cool down by 40, 50 rupees, right? That gives me another opportunity to buy if I have cash. That is how you have to play this market.
So, but okay, a small counter to that, Parag Bhai, would be that you are, at the start, maybe 2 months back, you were making assumptions with crude at 100, right? Crude has fallen to $70 per barrel, and immediately people adjusted those assumptions. We're back at $80 with the possibility of us moving higher. In that context, that one metric, as we've said in the past, this is a fulcrum that can move the Indian markets. So how do you judge earnings for the rest of the year on the basis of that?
I'll tell you. Just to take banks or large banks or ICICI Bank in perspective, even during COVID, okay, and this is what ICICI Bank has told us publicly, that even during COVID, when government gave them guarantee, okay, to give loans to the SMEs and MSMEs, only 3% of that actually went into default. Okay, and they had imagined that actually they'll get hit by 20-25% and that they'll have to recover from government. So even when businesses were closed, the NPAs were lesser. So then, what we are talking that oil is going to 85, 90, so many people will say, I am defaulting. I am not a believer of that thing. And plus, as we all know, and as Tamanna said, TECO can play out. So
TECO is the only thing that you can bet on, is my point.
So that's what I'm saying.
That's the biggest uncertainty. That's the biggest certainty.
So when market corrects like this, or there's a knee-jerk reaction like this, you have to deploy cash. Stocks. You have to deploy cash into stocks where you understand the intrinsic value is significantly higher than the current price.
Sure. Okay.
It just gives you entry opportunity.
Let's see if that opportunity is there with TCS. TCS is expected to report a muted first quarter with modest revenue growth, but pressure on margins and profitability could take place. Samit Sarkar joining in with the preview. Samit, what's largely penciled in for TCS?
Yes, a muted set of numbers is what the street is anticipating, though there will be a revenue growth of around 1.4% on a sequential basis. The EBITDA or the EBIT is expected to decline by nearly 3%. Margins are expected to contract by nearly 112 basis points to close to 25.3%, while the net profit is expected to decline by around 2% to close to 13,500 crore rupees. Now the key number, that is the constant currency growth number, that is expected to come. Our analysts are expecting this number to be anywhere in the range of around 0.3% to 0.5%, and most of this constant currency growth will largely be on account of inorganic acquisition. Inorganic acquisition will contribute nearly 20 basis points to this constant currency growth as per analyst estimates. Now they are also expecting that the wage hike and the conflict in Middle East will have an impact along with weak macros. They are expecting some impact of this to be offset because of the Indian rupee weakness that we had seen against the US dollar. But the key thing to watch, or the key commentary to watch from TCS earnings, would be on deal wins, when they are expected to close the BSNL deal, because that has been an overhang on TCS. Apart from that, what is the kind of revenue that they are getting from AI, and what has been any additional impact of AI implementation in their markets is something that we need to watch out for from the TCS earnings.
For that, put this succinctly, and let's get in Sushovan Nayak, who's the lead IT analyst at Anand Rathi Institutional Equities. Sushovan, thanks so much for taking the time out. Is the quarter known to be bad and therefore no big negative surprises, and therefore all eyes out on the commentary, particularly the deal wins and the nature of the deal wins, or is there something else that you're watching out for more keenly?
Okay. Is my voice audible?
Loud and clear, Sushovan.
Yeah, so basically, I think most of the impact of the Middle East, as well as the fact that AI deflation is going to have an impact on the revenues, I think that is more or less being built in. And if you look at the multiples also now, I think TCS is possibly at 12.5 times FY28 price to earnings, right? The only thing, I guess, which was nicely summarized by your anchor there was effectively people will be looking for the commentary, which we believe the TCV should be around $7 to $9 billion. And I think the other bit will be the AI sort of revenues and what is happening from data center business, because I think they have to make some investments there. TPG has already invested there. So what exactly is the status, and when do you think you'll be able to generate revenues? Possibly there'll be a point in this financial year wherein the capex would possibly increase because those investments will go towards the data center part of the business. I think that is the way we would look at it from a TCS standpoint.
So Shovan, hi, good morning. Tamanna here. What are the key metrics that you're going to be looking at, and is AI revenue top and front and center for you in terms of commentary as well? What are the key points that you're looking out for?
So Tamna, what we are basically looking at is I think there are these wage hikes which are going to happen in TCS this quarter. So possibly there'll be an impact of 150 to 200 bips, but the rupee also has depreciated by almost 3.3% quarter on quarter. So because of that, that should possibly benefit the margins, but I guess the margins will remain constant. So that may be because of two things. One, are they making some incremental investments? We need to see where those investments are, or if there is some productivity related benefits passed through on account of AI deflation, right? So these are the two things that possibly would want to watch out. And obviously, as you mentioned, the AI revenues, how much has that increased quarter on quarter? I think that would be another monitorable. The TCV bit is the other thing, because as you'd be aware, there is these TCV compressions which the street is talking about. We'd want to see if they're able to maintain that between the 7 to 9 or 8 to 10 as we want to deem fit. Right?
So Shovan, hi, Alex here. So TCS, of course, called the bellwether for the sector, but I'm just wondering, now more than ever before, whether you can take the numbers and the guidance and extrapolate for the rest of the sector. Would you be cautious when you listen to the management commentary to say that this may not be applicable or replicable by the rest of the industry?
So Alex, basically what we are seeing here is there is a revenue deflation that is going to kick in, and that has kicked in starting last year, right? The Middle East conflict obviously has created a further sort of a headwind for the IT sector as such. The numbers that we see for the CC growth across the large caps, I think will be possibly close to 2%. But then what everyone else is doing is they're going for these acquisitions. TCS has done these acquisitions of Coastal Cloud. Infosys has done a couple of acquisitions, Stratus as well as Optimum Healthcare. Wipro has been on an acquisition spree. So I think these acquisitions will add another, let's say, 50 to 100 bips to the growth. So possibly we'll see somewhere between 2.5 to 3% would be the growth for FY27 is what we'll possibly see there. Yeah.
Got it. Okay. All right. Thanks so much for taking the time, Sushovan. Pleasure speaking with you as always.
Yeah. Thank you.
Parag bhai, what do you make of what we just spoke about with TCS?
So I think the expectations are very muted. 0% CC growth, margin also because of the salary hike, margins also might dip a bit. What I am looking for is what they say. First of all, deal wins first, but and second is what they say on deflationary impact on the revenues. Whether they are close to peak, whether they are in transition, whether it is still to happen. This is what something I would watch out for. And as far as the stock price is concerned, I think everybody knows that this quarter is going to be muted, and there are so many other noises also. So I think it's in the price, yeah.
Okay, the other big one that I quickly want to talk about before we get into pre-open is that the SBI IPO opens up today. It's the largest fund house coming to D Street, India's first $1 billion IPO of 2026. That's SBI Funds Management. The price band has now been set at 545 to 574 rupees. Face value at 1 rupee per share. IPO size is 11,690 crore and is entirely an OFS. 10% stake is being sold. Market cap is at 1.17 lakh crore rupees, and retail quota is 35% of the total IPO issue. So let me ask you from two perspectives, and we're going to come to what it means for State Bank of India as well. But since the retail quota is 35%, if I'm a retail investor, I'm looking at this right now, should I be applying to this IPO?
Yeah, it is much better than a new baby on the new on the block. So much better IPO than many others, I would say. See, it is close. It must be at a slight discount to HDFC AMC. HDFC AMC is trading at 39 times trailing earnings and same market cap. 1,17,000 crore. SBI AMC is coming at I would say P multiple of 37-38x on a trailing earnings. So slight discount to HDFC AMC. It's a great distribution. SBI has a superb distribution. So I would say that ultimately you have to see one thing, that equity AUM has to grow more than other parts of the like debt and all or ETF and all for these companies to keep growing. Equity AUM has to, so you are taking a call.
Active equity.
Yes, active equity AUM has to grow because there the yields are maximum.
Because they have a substantial portion that they derive from the EPFO through the Nifty 50 ETF as well.
But in SBI mutual fund case, what I've seen was that their yields have also improved over a period of time because their equity AUM has gone up significantly. So it's a good thing. And it's as I keep saying, it's an infinite ROC business, annuity business, great business to be in for long term, if you're a long term investor.
Yeah. You know, the thing about the four large ones which are listed as well, that one, the price returns are fairly diverse. So it's not predictable as to which one is definitely having, because all of them per se are doing well, and the natural progression of per se, it may not happen in the last 2 years, but otherwise you add 10% to that overall funds managed, and therefore the yields naturally improve even if other funds were not to come in. Somehow it's not happened for all. UTIMC, for example, is really disappointed on terms of performance, but Aditya Birla Sun Life has done well. So it's chalk and cheese, if you will.
But in the top five, I would ask you, right, if you talk about HDFC, AMC, now ICICI, and SBI coming to the party, right? So these are all in the top five. So out of these three, with SBI now also coming through, what is your pecking order?
So difficult to decide because all three have same kind of pedigree, same kind of...
which is why I'm asking.
None of them are new babies, like you call them.
Yeah, so I like all three, actually.
Exactly.
It is very difficult to right now because ICICI Pro AMC has also gone up after the listing. Otherwise, I would have clearly said that. But it has also now gone up. So the valuations are not that...
If you think about fan favorites or other investor favorites, right, each of them have their own selling point. You have Nareen in ICICI. You have, for HDFC, AMC, people swear by the flexi cap fund. For SBI, there's a contra fund that a lot of people say this is the one thing to look at.
Yeah, but the beauty there, I think, from whatever we've heard the managements now say, that they don't want the AMCs to be recognized by one particular hero fund manager. They want it to be recognized by the house that is.
It doesn't make business sense for any business to do that. I want to ask about the knock-on impacts for State Bank of India, but before that, let me go across to Sumit Sarkar. He's waiting by for all the chatter from the dealing rooms this morning. Sumit, what's on your plate today?
Well, firstly, it's Divi's Lab and Page Industries. Now, there are buy flows on the institutional desk is what dealers are indicating, and this is largely because they're expecting a strong Q1 numbers to come in from both the counters. When it comes to delivery, there are sell flows on the HNI desk. Dealers expect a block deal very soon when it comes to delivery. For SBI, there are sell flows on the DI desk. Dealers indicate a large insurance company was seller in trade yesterday. For Varun Beverages, there are buy flows on the large HNI and the PMS desk. Dealers indicate that the selling pressure is largely over when it comes to Varun Beverages, and they're also expecting a strong first quarter numbers. And despite the fall in market yesterday, Unichem Labs was one counter that had hit an upper circuit of 20% and remained at that level. And dealers are indicating that a fund buying was ongoing yesterday, and this could follow through today as well. And along with this, the first quarter numbers are expected to be extraordinarily strong for Unichem Labs, and hence this buy flows coming in for the counter.
Thank you for that, Sumit. Let's get back to what we were talking about. Parag Bhai, State Bank of India. and the impact thereon?
So first of all, the capital is going to come 7,300 crore OFS for SBI, right? Total OFS is around 11,500 crore. So 7,300 crore is going to come to SBI's balance sheet. And I think from NSE IPO, another 6,000 crore, 5,000. So totally, I think 13,000 crore is going to come to SBI.
So वो तो बैठे-बैठे आ ही रहा है.
वो तो आ ही रहा है. Now the question is that whether analysts have modeled that value of SBI AMC stake, which is around say 1,17,000 crore IPO, and they hold 62% stake. So which is around 68,000 crore, which is around 70 rupees per share for SBI, because SBI is 923 crore shares. So I would say that that is factored in. So I'm not saying that the capital infusion is a good thing that they are getting, but analysts have modeled SBI AMC's valuation into that. So if you do that maths, out of the current price of say 1017 of SBI, around 317 just to round it off, you can attribute it to subsidiary valuations. So at 700 rupees, you are getting a core bank, which is at one-time price to book. So it is right now, I would say, not very expensive, not very cheap, and it can compound at whatever EPS growth is, which is around 12 to 13%.
Yeah, and you know, viewers, by the way, it's 9:01, so we'll quickly move. But just keep in mind that the PSU banks, and particularly SBI, in the last 5 years have shown that they are not out there just to fill in the ranks. They have really outperformed the private sector banking lot by a wide margin. Look at the 5-year charts of an SBI versus maybe some of the other private sector banks as well. It's pretty good.
Here I can add one point. One big thing which is in PSU bank which happened, which this government has done brilliantly, and RBI also, they cleaned up all the PSU banks, and then what happened is that whatever was the figure shown in credit cost or provisioning, that fell down to straight away PAT. And so you saw a phenomenal increase in PAT, and that thing is now behind.
Agree.
From here on, it is everything on same page. Asset quality has to remain good, and everything will compound at about 12 to 15 to 18%.
I'm completely on board, Parapay, but the point being, until 2020, the belief always was PSU banks will never perform better than private banks.
The credit goes to this government and, of course, managements of PSU banks, that they have done a good, prudent lending.
Agreed.
They have taken very less risk.
Okay. And so, you know, Parag, buy and banks, you can't do away with it. Okay, but 9:01, the markets have started. Quickly pull up what the market rates are currently, and we'll probably have a slight mild start in the green. Let's just see if we hold on to that. Maybe we won't have 120 points, maybe we do. Let's wait and watch. But some of the usual suspects, and I think ahead of the results, what TCS and therefore the rest of the IT pack is doing could be very, very important to monitor. So please let's get those stocks up on the screen. And then some of the newsmakers today, not too many, but Tata Steel had their updates, Phoenix Mills had its update, JSW Energy and SH Kelkar had those updates. So those are a few names that are newsmakers in the session today. Let's see if they are reacting in any fashion. And of course, remember, crude prices having gone up. So ONGC, Interglobe Aviation and the oil marketing companies will also be in focus. Just before we get to Varsha, I think these are the names. ONGC starting off in the green yet again. Indigo, no rates as of now, but 5124 suggests that the long trades didn't quite hold yesterday in Indigo, and same for the OMCs. I think we'll get the rates going. Okay, while we wait for the rates to come in, let's get in Varsha in for an interesting story. Now, China has introduced mandatory efficiency norms for solar manufacturing, targeting outdated capacities and addressing industry overcapacity. The move could improve global pricing discipline and maybe benefit Indian manufacturers over time as well. Varsha, could you explain why is that the case? Simplify it for our viewers.
Yes. So first of all, it might have some negative impact in short term, but for a longer term, it's a positive one. Now, what China has done, so China has introduced mandatory efficiency norms for solar manufacturing, which covers polysilicon wafers and solar modules. Now, this rule will come into force from January 2027 and now why they are doing this? Because they aim to eliminate inefficient and outdated production capacity. Now, the background is that the China has been battling severe solar overcapacity. Excess production, if you see, led to collapse in module prices. Now, new norms force manufacturers to produce higher efficiency modules, and smaller and less advanced factories could struggle to comply. Now, how this is going to impact on India. One is near-term impact. So Chinese manufacturers may rush to sell the existing inventory, and hence solar module and cell prices could remain under pressure through 2026. Global pricing environment may stay weak in short term. But when it comes to long-term impact, so excess Chinese capacity could gradually exceed the market, and global solar pricing discipline may improve, which will help in profitability, and competition may shift from price to technology and efficiency. How this is going to benefit India, and which all companies will be benefited considering the long-term impact. Waaree Energies, they have integrated module manufacturing, which may benefit. Pricing benefit discipline will also support margins. You have Premier Energies, wherein they have strong cell and module presence, will also benefit from industry consolidation and pricing recovery. Vikram Solar and MV Photo are some of the other stocks which will benefit. So you may see some kind of near-term impact considering the pricing pressure, but long-term impact is positive for Indian manufacturers.
Yeah, most of them, at least in the pre-open rates, are reacting okay. Thank you for that, Varsha. Shrikant Chauhan joining in. He's Executive Vice President and Head Equity Research, Kotak Securities, with us this morning. Shrikant, very good morning to you. Let's get your Nifty and Bank Nifty call. Do you see enough scope for a recovery after yesterday's knockdown on the Nifty?
Good morning, Tamanna. Good morning, Neeraj and everyone. So while looking at the setup of the market and yesterday's sell-off, which was very severe, I think based on that, I am of the view that in case if we see any rebound in today's date, as GIFT Nifty is indicating, or maybe pre-opening prices, I think close to 24,000, 24,100, the market will come again under some profit taking or maybe liquidation of long positions pressure. So I am of the view that if there is any higher opening, we should look for taking some profit on long position if there is any, or we should look for reducing leverage long positions. It is going to consolidate within the range of 24,100 and 23,800 on the downside. In case today market closes below 23,800, then in that case, the chances of hitting 23,500 or maybe 300 would turn bright. So we need to be careful in today's date. But 23,800 is certainly going to act as support for next few days. And for Bank Nifty, there also we saw unexpected sell-off. Like it was not at all expected that the Bank Nifty can fall like this. But based on its formation, now 57,500 going to act as major resistance. And on the downside, 56,000 should be the next important support level to watch out for.
कभी कभी तो ये लगता है क्या ट्रम्प साहब निफ्टी को देख के अपनी कमेंट्स देते हैं. निफ्टी है 24,400, चलो मंदी कर दो. निफ्टी 23,800, 700, चलो तेजी कर दो.
When you started that sentence, I thought one शायरी is coming. कभी ये लगता है. I was like, what's happening at 907, Neeraj?
No, but it's just such a tight range in which the Nifty is caught, no matter what the news is.
It's like a vortex.
Yes,
कुछ भी
it's just been there.
A more prevalent theory, of course, it's in zest, is that he perhaps watches कि इंडिया में एक्सपायरी कब है, ठीक है, Tuesdays and Thursdays, और उसके हिसाब से न्यूज़ फ्लो आता है.
Let's not give ourselves so much attention as well. वो क्रिप्टो ही देख रहे हैं सबसे ज़्यादा. Okay, what about stock calls this morning, Shrikant?
Yeah, I think at this level, again, we need to be more and more defensive because the overall market is showing a lot of uncertainty. So at this level, we like Sun Pharma, which is around 1880, 1890 sort of levels. There we are expecting upward activity and the stock is into long-term uptrend. So broad, if there is a medium to long-term view, then we are expecting 2200. But in the near term, we can again see the levels of 1950, 1960. We can keep a stop loss around 1870 for creating any long position. Apart from that, from the defense space, we like Hindustan Aeronautics. There we are of the view that the stock is heading higher. Eventually, we can see the levels of maybe 4,800. But in the near term, based on its technical formation, it is in the range. It is not supporting. It is not actually following to the overall performance or maybe the overall underperformance of the market. Based on its technical formation, currently it is around 4,350. The chances of hitting 4,500 in the near term are very high. And we can keep a stop loss around 4,275 for creating any long position.
Okay, 4,275 the long position. Chances of 4,500 remain high. Shrikant Chauhan, I thought his smile suggested that he kind of agreed with the comment that we had. We'll get to that at some point of time. But his support levels are also that 23,800, 23,700 mark. So in some sense, pretty similar. Okay, let's move on and get in Sharad Dubey to talk about Syrma SGS. It's in focus as HSBC is betting big on the stock while initiating a buy rating. Well, there may be a few quarters late, if you will, because the stock has really done well. But Sharad is here with the HSBC rationale on Syrma. Sharad, take it away. Good morning.
Good morning. They have initiated a buy rating for this account, and the target price is set at 1,750 rupees per share. This is, of course, the highest target price in the entire street. Right now, currently, the levels is around 400 types. High growth manufacturing at scale, and that's where the bullishness comes in. This is a leading EMS company with a diversified customer base, and the original design manufacturing experience is also there, where the street is bullish on. The backward integration and the inorganic expansion which is coming ahead, that augurs well for the stock, and a strong competition in the lower value segment, however, still remains a concern. But bullishness definitely there, and the highest target price in the street set by HSBC.
Syrma SGS up 3%. I wonder if this extends to the larger bucket as well, cohort of stocks. Thanks for that, Sharad, of course. But Kush Bora, Syrma, of course, which is in a plane of its own, by the way, within this bucket. But if indeed there are some import duty changes, etc., and stuff like that, maybe some of the Dixons and the Ambers, etc., could also react. How is that space? Is Syrma a good stock to trade from that bucket?
So, Neeraj, the entire sector is now very interestingly poised for very different reasons, but all positive. So Syrma, as you said, is in a league of its own, doing well. By the way, the excesses also have cooled off, so a long position from here on also makes sense. Not at 3% higher, perhaps closer to another about 20-30% points lower. But look at PG Electroplast, steady uprun, closed above the 200-day moving average, 20-50-day moving average, healthy volume accumulation. I think this could be that dark horse that you bet on, slow and steady, but keeps moving higher. So PG Electroplast is something that you can keep an eye on, given that Syrma's already run up quite a bit. Amber had a run, sold off, and now is very close to those support lines and also the 200-day moving average, from where it is likely to rebound. So I would have a positive view on this as well. Momentum missing, that's a concern. And Dixon finally closed above the 200-day moving averages for the last two sessions. So like I said, a few things going for the sector, all of them positive. But if I had to take a pick, Syrma would obviously be one, but on declines. At current levels, PG Electroplast is the clear winner. If you do, by the way, go long, then keep your stop losses close to the 445 zones. 545, I'm sorry.
Want to look at Honasa. Business updates have come in, and last few quarters at least, this stock has been buzzing after the results. So this is what they're saying. They expect double-digit operating margins in the first quarter. Younger brand seen rising in mid-40s. Mama Earth expected to deliver high teens growth. See year-on-year revenue growth in mid-20s in Q1. See strong year-on-year growth around 30s in Q1. Expect to deliver strong performance in the first quarter. Is this something that you're tracking? Shrikant, any view on a Honasa?
Yeah, absolutely. The stock is very strong in terms of its overall performance. Also, if we consider its overall technical pattern on long-term charts, then there also the stock has made multiple higher top, higher bottom series. And we are of the view that the stock is heading for at least 500 or 520 in next few weeks of time. Currently, the stock is over retraced. I'm going to say it is very close to its overbought levels. We may see some correction in the near term, maybe up to 450 or 455 somewhere. In case if it falls because of the weakness in the market, then there we should look for taking long bets. Overall, the trend of the stock is up, and we should look for buying on every day.
Okay, we've been talking about how some of your EMS players will be in focus today, and here's what's happened in case you missed it. The government has exempted customs duty on key parts used in display module manufacturing. This covers components for automotive, medical and industrial display assemblies. Exemption is extended to parts used in smartphone wireless charging modules, and the move aims to boost domestic electronics manufacturing. Duty relief to remain in force till March 31st, 2029. And exemptions are covering inputs such as display cells, backlight units, flexible printed circuit assemblies, NFC coils, etc. Just very quickly, Parag bhai, this is a PLI story which saw that boost. We don't know if that's receding. Does the story continue for EMS players?
Yeah, I think it continues, but you have to be very selective in stocks. And as you said, Sirma keeps doing well. Even Dixon recovered very nicely.
Top call.
No. So I don't track this space so closely to give a top call or something. Top or bottom, both.
Top or bottom. Shrikant, very quick top call for EMS players.
From the EMS player, we like only Dixon Technology. There we are bullish, and also we like Amber.
Okay, Dixon and Amber. Surprise, Shrikant, I'll ask you about Sirma after this thing, because it's that one stock that has done so well. How come it doesn't come on the list of somebody like you? I'd love to know that. But any case, here's how the markets are starting off this morning, this Thursday morning. We are likely to start off maybe a few points in the green. The question is, can we build on from there? So, okay, 0.25% in the green. Let's see if this holds on. The breadth is not too bad, which means that the mid cap and the small cap indices are also doing well. The mid cap's about 0.61%. The small cap index will come up on your screen next, up about 0.42%. Banks are okay. IT, what is IT doing ahead of the TCS numbers? It's in the red, in a deep shade of red. So in fact, IT is putting pressure, if you will, but nothing maybe. Actually, it is significant now, 1% lower. Let's get the heat map up on the screen, because the Sensex is coming off quite rapidly from the opening highs. More green than red, so keep that in mind. And the red is dominated by the 4 IT names: Infi, HCL Tech, Tech Mahindra, TCS. All 4 of them down. So they may have a great rally, and then they tend to succumb to some selling pressure as well, unfortunately. But there is a fair degree of green, so let's focus on the green. Eternal, 1.57% higher. After being in hibernation, if you will, for the better part of June, I think Eternal is it's woken up, if you will, in the last 15 odd days. Adani Enterprises 1.34% higher after the successful completion of its QIP a few days back. Shriram Finance in the green, Titan in the green, Bharti Airtel in the green. A lot of long calls that have come in on Bharti Airtel, or other positive brokerage notes that have come out on Bharti Airtel. Let me qualify myself, and that one is doing okay. Coal India, HDFC Bank is helping the index as well. So what IT is doing in terms of the downside, HDFC Bank is trying to thwart it. If we can just very quickly give the points contribution, just want to highlight the difference between what IT is doing versus what HDFC Bank is doing. So 17 and 6, 23, 26 odd points by IT, and 23 of them kind of recouped by HDFC Bank alone. ICICI Bank is participating, which is not too bad. Airtel too, by the way, up a percent. But yep, the big boy is making its presence felt the last few days. Tamanna, good for the Nifty that HDFC Bank is showing some bit of stability.
Yeah, I find it quite telling that you have IT stocks down in the dumps ahead of the TCS numbers. I don't know if this is an indication of what the street is expecting or not. But having said that, let me pull up the mid cap and the small cap indices. There is a sense of recovery, but is it really through and through? It's actually better in the broader markets. Advanced decline ratio is also decent, 1637 to 535. Both the key indices are up. Mid cap is doing better than the small cap. Let's pull up the sectoral heat map as well and look at what's happening over there. The Nifty Consumer Durable up and about, and this is possibly because of all of the exemptions on imports that the government has provided. So good for some of those EMS players perhaps. Nifty IT at the bottom, about 1.5% down. But if you look at the rest, this is a pretty good screen. Let's pull up the India VIX. Everything is up in the green, and there's a whole variety of stocks that is up in the green. Let's pull up the India VIX for you very quickly. And this is really telling. Just a quick cool off. 13.7 down 6-7% from where it was yesterday, and you saw this index spiking when Trump's first comments came in towards close last afternoon in the closing trade. So perhaps there's a sense that that taco trade, which is usually expected, is already very much back there. Now look at individual stocks this morning, and let's look at some of those which have had business updates come out. IRB, Phoenix, Tata Steel and Honasa. Among them, IRB is about 1.5% up. Phoenix Mills also 1.5% up. Both had decent business updates, I would say. Tata Steel was also decent. It's mildly up in the green. Honasa look good on the face of it, but a bit of profit booking coming there. Maybe the street is not too excited with what they're hearing. The deadline for self-certification has been extended, so for solar module makers, it's good news. All of them up in the green, but Fujiyama I'm seeing with the biggest uptake, about 5% up there, and the photovoltaic about 2% up. Custom duty exemptions. Well, let's see what's happening with the Sirma. Sirma is on this list today for a couple of reasons. There's a positive brokerage view as well. Dixon Tech is about 3% up right now. Let's look at PG Electroplast. Let's look at Amber this morning. All of them up and about. JSW has announced a new, JSW Energy has announced a new set of capacities. Let's talk about 2% up. Now we'll look at SBI just from the point of view of SBI Funds, which has opened up for its IPO 0.5% up right now. So these are some of the ones that are moving this morning, but overall, the sentiment seems quite positive, Neeraj, and a bit of recovery after yesterday.
Yeah, that's good, and which is great going. And just before we kind of thank our guests, let's take the opening comments. Shrikant Chauhan, to you first, your opening thoughts. Question number 2, why not Sirma SGS within that EMS space? And 3, any other stock that stands out after the open?
Yeah, for Sirma, yes, we are bullish on the stock, but the problem is that the stock has achieved all its target based on technicals, based on fundamentals. So in case if there is any correction, then close to 1300 or maybe 1250, there we should look for taking long bets. But at this level, it looks completely overbought or maybe over retraced. So it is better to buy Dixon where there is a room of 10-15% even from current levels, and for Amber Enterprises. There also the upside is close to 10-15% from the current level. So at these levels, we like these two stocks, but otherwise if there is any correction, certainly, in fact, we are bullish on the sector, but buying is advisable on dips for Sirma. For the market, I am of the view that we need to be totally today stock specific. Instead of focusing on the index performance, we need to focus on the stocks. And as you mentioned, HDFC Bank, the stock has entered into long-term uptrend after crossing the level of 800 decisively with the positive news flow on the fundamental side. So there we have a target of 900 based on technical formation. Fundamentally also we are expecting 1050, but 900 should be the next target that we can see on the screen in the near future.
Okay. Parag bhai, the strength in HDFC Bank, you don't look at it tactically, but it's finally seen that large banks are starting to now make their presence felt on bad days as well. If it was autos earlier, if it was sporadic moves in some of the others, it's now firmly banks which are proving to be the anchors, isn't it?
Yeah, absolutely, because margin-wise, I think this quarter will be the bottom. And loan book growth is already above 15%, even for HDFC Bank kind of size, right? 50 lakh crore balance sheet. They have grown at 15%. And plus, in spite of all the issues which were happening on the HR side, I would say, in this quarter. So that means that entire institution is set to grow at 15% on autopilot mode, right? If the economy does well. So if and OPEX they are trying to control. So I would say that 12 to 15% EPS growth for such a large company, at least double-digit growth, I would say. And valuations are, as you know, very, very comparing. 1.6 times price to book, P/E 13 on FY28. So I would say that, and now the CFO is hired from Axis, Mr. Puneet. Chairman is come. So now I think things are settling there.
What do you make of Axis now that you mentioned the management shifts that have taken place, right? The reports suggest even yesterday that not key management personnel, but at the slightly lower level, there have been a flurry of exits from Axis Bank. As an investor, should you be concerned by this?
Not too concerned. See, in banking is a leverage play on economy. If you are concerned about economy, then there is a problem in large cap private sector banks or some select PSU banks, I would say. Then you have to be worried about asset quality and all. Otherwise, I think now it is a new normal, right? That people move from here to there, and it doesn't change the DNA of that bank, right? Like for DNA of the bank of DNA of HDFC Bank has been to be a conservative and prudent lender, and still grow in branches and widen itself so that they can take advantage of the entire country's growth.
So in past years, I think different banks have become hunting grounds for headhunters. Axis seems to have become that hunting ground.
Yeah, so I think that will keep happening. I think that is what Bakshi also tries to impress upon, right? That even if I am not there, ICICI Bank is going to run the way it is. But the point is that, the leadership, absolutely at the leadership, it matters a lot.
The nature of institutions. All right. News coming in. The government has waived customs duty on key components used in display modules and wireless charging module manufacturing to support domestic electronics production. The move is aimed to lower production costs and strengthen India's electronics manufacturing system. We've got Rishabh joining in to tell you more about that. Rishabh, news just coming in. What is the thinking behind this? What are the implications as you've been told?
Absolutely. So another major move to boost India's electronics manufacturing ambitions. You have the module manufacturing that has been given an impetus today. Inputs like display cells, backlight units, flexible PCBs, NFC coils, magnets, all of those have been exempted from certain customs duty that the government usually used to levy. What's interesting about this particular notification, Alex, is that this is a much longer duty waiver that the government has given. Usually these are for 6 months or a year or so, but this one has been extended up until 2029. So this does give a much needed and a much longer visibility for the companies that are wanting to invest in capacities for these electronic parts. What we have is also that these components not just cover automotive displays, but these have applications in medical as well as industrial display assemblies. So this is going to be a big move for the companies that do manufacture these electronic components.
Seeing that play out. Thank you for that, Rishabh Bhatnagar, with those details. All right, let's go across to Rahul Arora, CEO of Ashika Institutional Equities, joining us now on the show. Rahul, very good morning to you. We were having a conversation earlier this morning is on whether the best way to deal with all of the volatility, which depends on one person's statement at any given time or place, should be to assess the time taken from that statement to a reversal, when the taco trade will hit after Trump says what he says. Is that now a method that you have begun applying?
Morning, Tamanna. Thank you for having me on the show. So it's an interesting way of looking at it. I'll certainly ask my technical analyst to start monitoring a Trump oscillator of sorts. But obviously, I think it was a little premature to expect that the worst was behind us. I think, when we were on your show about a month back, we had this discussion that, we would wait and watch as the event draws to a close, and, we're in the final stages of the event and the war has restarted. Now, the biggest problem for us, Tamanna, is that how does crude react to all of this if this sustains for a period of time? Because I think most economists, if you go back to say a month and a half back when this war started, were working with very high numbers of crude. There were all talks of 50 to 75 basis points in terms of rate hikes. The 10-year inching up to 7 quarters, 7.5. And that took a paradigm shift. Once this ceasefire agreement was signed, most people started saying, well, we may not need an interest rate hike after all. Maybe it'll be 25 basis points. The 10-year projections came down to about, 6.75 quarters to about 7. So it moved very dynamically. I think the centerpiece of all of this, I think thankfully for us, Tamanna, the monsoons have picked up, at least in the part of the world that we sit in, and the deficiency has come down quite dramatically. Reservoir levels seem to be good. But I think because we were hit in this last couple of months, what the RBI did by both crude appreciation and rupee depreciation, to take a call that the worst is behind us may be a bit premature. I would still reiterate my stance from a month and a half back when we spoke, that I would still not be more than at best 60% in equity right now. The balance 40% of my portfolio will be tilted towards fixed income, commodities, and real estate. That's the way I would look at it. It's too early to say whether the worst is behind us is the way I would look at it.
Yeah, okay. So asset allocation is king, of course, particularly in times of volatility. Rahul, good morning. So I'm curious about how you're positioning that 60% as well. Are you displaying conservatism even in that pocket? Because the tendency in these volatile times when input cost pressure exists is to head to the market leaders. Are you doing that?
So, Alex, every forecast is based on assumptions. Now, I could either go right or I could either go wrong. I mean, it's literally a binary flip of the coin, but you have to make your assumptions and plan your portfolio accordingly. The way I'm looking at the markets is that now that you have had a reasonable monsoon, You do have US midterm elections coming up in November. Now, let's hope that there is some sanity that returns to the United States and the president post-November of this year. And 2027 happens to be a good year. We've had a lot of global conflict in which some parts of it where India was, also involved with our neighbors. And it's been marred for the last 15 months in different parts of the world. So the way I look at it is if you have some amount of sanity come post-November, I still think that the Nifty potentially could be up by 40 to 50% between now and next Diwali, which means you're talking about a Nifty of, say, close to about 35,000 by next Diwali. I maintain that ceteris paribus that the world doesn't go, doesn't fall off a cliff post-November. Now, what's going to lead that if that call goes right? You were just discussing with Parag Bhai about HDFC Bank. Now, look at the valuations that banks are trading at. In my lifetime, I've never seen HDFC Bank at 1.6, 1.7. I've been working for 25 years. Maybe before I came in, maybe it was trading at that, but in my career, I have never seen it. You have the reference point as ICICI Bank, which is probably still the most expensive private sector bank in India. But no private sector bank has valuations north of 2.2, 2.3 times on FY28. I'm not including NBFCs in this. So the clear trade, if I was to answer your question of that 60% portfolio allocation, the bulk of that will be to banks. And it's not just valuations, Alex. I think if you look at the growth that the scheduled commercial banks are showing for the non-food credit growth, that number is up to 16, 17%. Most of the top tier banks in India, including HDFC Bank, are very well capitalized. HDFC is almost 17, 18% tier 1, tier 2 combined. ROAs of all of these banks would be, say, between 1.2, 1.3 to about 1.8. ROEs would be between 14 to 16%. So valuations are very compelling for banks. What looks like an interesting trade, I don't know, how it's going to pan out from an investment standpoint, but IT companies' valuations are looking very attractive. And I think I made this point the last time that I don't know whether these are structural investments, but at 13, 14 times, I don't know how much there is to lose in IT companies. You could potentially look at it, from a trade standpoint. I think consumer discretionary has had a bit of a tough run over the last few weeks and months. I think hotel companies' valuations have reset. That's looks like an interesting pocket to us as well. So I think maybe, you could look at some alcohol stocks like United Spirits, and maybe one other pocket, if you're looking at consumer staples, then maybe food companies like, say, Britannia, Nestle, and say a Tata Consumer. So I would probably be, equal weight to banks, say about 40%, maybe about 10% in IT stocks. It's still underweight to where the index is. And the balance I would probably split between, say, auto, defense, consumer discretionary, and pharma.
Rahul, good morning. It'll be interesting to see if indeed your football World Cup and the conflict prediction turns out eventually to be true or no. There's still the quarters, semis and finals left. And we'll certainly earmark the 35,000 target on on the Nifty as well. But I'm wondering if autos find a place within this scheme of things for you, because you mentioned banks, you mentioned mild underweight on IT, but still 10%. What about autos, which are, again, a large enough weightage, if you will, now on the indices? I didn't hear you say about that. What's the view there?
No, so Neeraj, I think if you look at the last 2-3 years, despite the Nifty having not done much, I think if you go back to, say, September 2023, the Nifty was at about 20,000 or thereabouts. September 2024, it was somewhere around 26,500. And we're sitting at about 24,000, give or take. Now, one of the best performing sectors in this period has been the auto sector. And it's benefited across. I think it's first started off with premiumization, where you were looking at, premium two-wheelers, tractors that were doing well because of monsoons. And the mass was a bit, off the boil, like, say, maybe a plain vanilla TVS, Bajaj, Hero. These were not in flavor. But I think, with the kind of monthly numbers that we've seen month after month in terms of growth, I would still say that there is a case to be, equal weight to slightly overweight on auto. I think to the point I was making to Tamanna a little earlier, the monsoons have picked up. So I think tractors should do well with a lag. So I think M&M would still find a place in my portfolio. Yes, you are finding the passenger vehicle component to be very competitive right now with new launches lined up. But I still think Maruti, with its market share, is trying to do its best to address that. I think with the kind of crossover launches that it has done, Maruti, I think, could still return 20-25% from here. If you look at two-wheelers, Neeraj, my tilt would still be towards Eicher. I think if you look at the monthly growth numbers, even on a high basis, it's managing to grow 15-20%. And that's not a small, I mean, obviously, in terms of absolute number of bikes that it sells, it's much lower than its three counterparts that are more in mass. But I think on that base, growing at about 15-20% is quite remarkable. And I think they're managing to maintain their return on equity and capital employed in the mid-20s. Valuations have always been expensive for Eicher, but I think that could probably find its place. I'm not so sure about commercial vehicles right now, Neeraj. I think that may also be contingent on how the infrastructure part of the economy revives post-monsoon, because a lot of them, are infra project related sort of demand. So I would say maybe a Mahindra and Mahindra, Eicher Motors for sure, Maruti for sure. And I think if you're looking at, say, commercial vehicles, then I'd probably put in an Ashok Leyland. You could look at proxies in auto component plays. I think, if you look at commercial vehicles, direct proxy to that, say, could be something like a Jamna Auto, which is something that we've liked for some time. That looks like an interesting play for us. So, and I think tires, I think CEAT has had a very, very good run over the last couple of years, Neeraj. I think they've turned their numbers around. So there are enough and more opportunities even in the auto ang space. So I would say, you can be market weight to maybe even 1 to 2% overweight in the auto sector even now. And I think the rains have done their cause no harm.
Okay. Well noted. Rahul, thank you so much for taking the time out and being with us today. And all the best for the Djokovic matches as they come up. I'm sure you are firmly rooting in that corner.
Thank you so much, Neeraj. And to you and for Messi as well.
Thank you so much. Much appreciated. Okay. Well, I don't know if off late after the Argentina and Egypt match, being in the Messi corner and the Argentina corner is considered to be too good or no, but I'll still stay there. Okay. Let's move on conversations. And HSBC and Pranjal Bhandari and team have come out with a note wherein they're saying that some of the concerns that they'd flagged off earlier at the start of the conflict seem to have abated. And screeners that they've run relative to 2013 seem to suggest that at least equities and a couple of other pockets actually in a better space than what they were in 2013. She's here with us. She's, of course, Chief India Economist and Macro Strategist, ASEAN Economist at HSBC. Pranjal, great having you as always. Thanks so much for taking the time out. We spoke to you, Pranjal, when a couple of these developments happened, and you were saying you would want to see the evidence of these moves that are taken by the RBI and by the fact that crude prices have come off as to whether they actually result in macro improvements and flows, etc. I believe we've seen some evidence of that. Are you therefore definitively more constructive on India macro and maybe the team at HSBC on Indian equities as well now that the proof is visible?
Yes, thank you very much for having me. Always nice to be on your show. So look, I think the macro backdrop has really changed. It has improved. I think oil prices have fallen off. And then, we've had this FX package by the RBI, which was announced on 5th of June, which is expected to bring in substantial amount of inflows. The inflows haven't yet come in because I think it takes some time. But even just in anticipation of those inflows, financial conditions have eased a lot. Yields across various instruments, CD, CP, government bonds, corporate bonds, treasury bills have fallen quite meaningfully. And basically, all of that is generally good for economic growth. So two positive things have happened. Oil prices have come off and financial conditions have eased. Now, of course, risks remain. I think one risk is El Nino. I know rains have picked up, but 2 weeks down the line, they could soften again. So that is one risk that is there. But the good thing about that risk to some extent is that it seems to be priced in, both in equity markets, where we've seen FMCG stocks doing a little worse than, say, a consumer discretionary, which generally what happens in years of these kind of El Nino kind of events. So some of the El Nino risk is already priced in. Even in the bond market, the OIS curve is already pricing in some rate hikes on the back of El Nino. So even in the rates market, some of the El Nino risk is priced in. And the other risk that remains is a strong dollar, which, has bothered us in the last 2-3 weeks. But again, to the extent we are expecting money coming through the FX package of the RBI, some of those concerns, at least in the short run, would, be a little muted because we at least have all of these inflows coming. So even if the dollar is strong, we can tide over at this point of time. So generally speaking, despite some risks still remaining in the background, I think the entire backdrop on its own has improved.
Got it. Pranjal, what do you attribute this the rupee moves in the last 2-3 weeks to? Because I mean, one would have perceptibly believed that there will be a fair degree of strength, because even equity outflows have receded to an extent that, in fact, there are mild inflows too. So where is the weakness coming from in the rupee?
I think there are two things that's happening. One is that the dollar is strengthening, right? And we look at the rupee vis-a-vis dollar a lot. So I think the dollar is strengthening, and that is hurting. And then the second thing is a little more technical, that there have been large NDF maturities in early July, and RBI is allowing it to mature, and in a way that has also, weakened the currency. So I think these two are at play. Going forward, though, our sense is, particularly in August, when the inflows from FCNR pick up, then that will be positive for the currency. And generally, sentiments have improved when we look at hedging activity of exporters, importers, which had really hurt in the last couple of months. Those sentiments have improved. So I think that will also help the currency to stay at least stable. And the third thing is the actions of RBI. Now, how RBI behaves is also very important. Will it allow the currency to appreciate, or will it let it weaken? My sense is that they have worked so hard to announce such a big FX package. They won't want the currency to weaken in a major way. So I think RBI action will also be supportive of the rupee going forward.
Pranjul, hi, morning, Alex here. Just on the subject of the rupee, completely take on board everything that you're saying. Just a question with regard to the derivative positioning of the central bank and the outstanding short dollar forward positions that they have, the massive book that has to unwind over a period of time. And so the question to you is, while the rupee may not be expected to depreciate significantly from this point, is there a cap to how much it can strengthen because of this derivative book?
You're right there. It has a very large sort of short forward book that, which is only going to become bigger as these FCNR flows come in. Remember, what are FCNR flows? These are money borrowed, right? It comes in now, but it has to be repaid later. So your forward book actually goes up because you have to repay all this later. So I think all of this is there. And to some extent, RBI will try to use opportunities of inflows to actually build FX reserves rather than let the currency appreciate. So from that perspective, my sense is that yes, dollar rupee, the INR at least against the dollar could see a step appreciation when the inflows start coming up. But as the RBI starts building up reserves, then it could go back into a gradual depreciation. But through it all, I think it will remain relatively strong compared to many other Asian FX peers. And I think that is where the relative stability of the rupee will show up. Not its own strength, but its relative strength.
So the next thing I want to ask you about is your outlook or your anticipation of how inflation will work. Because to a large extent, the recent increase in prices can be attributed to supply side issues. But on the flip side, based on the consumption trends that we're witnessing, one can assume that in the second half, if this holds true, some demand side measures could also have a bearing on inflation on the upside. So on a blended basis, what is your expectation for core and for headline inflation?
Yeah, these are good questions. And the honest truth is that markets are moving so rapidly, oil prices up and down, and then gold prices and behavior of corporates, how much they are passing through. There are so many different things at play that it's hard to really tell how inflation will look. We've seen 3-4 weeks of bad rains can really stoke vegetable inflation, and then headline inflation can really go up. And then in 2 weeks, it can really come down. So I think what we will see is inflation remaining extremely volatile at this point of time. It hasn't really picked up yet. Next week we will have the June data. I don't think it'll pick up too much. I think it will stay, under 4.5% even in June. But come October, my sense is inflation would have crossed about 5.5%. And that's when the RBI will have to start taking note that for a few months at least, inflation will be well ahead of the 4% inflation target. And of course, some of this will come off a few months down the line. But the truth is that if it takes about 6-7 months, and for 6-7 months, inflation is high, then we may see some rate hikes. I do expect 1 to 2 rate hikes. I think it's going to be a shallow rate hiking cycle, but I think it'll be hard for RBI to ignore if inflation is well ahead of 4% for about 5-6 months.
Hi, Tamanna here, and you put it very well that there are so many moving parts right now, right? In terms of inflationary cost, to what extent they're passed on, corporate results, etc., their performance, and so on and so forth. But what are the very clear, distinct green shoots that you are seeing that would merit changing the outlook on India versus, say, 2 or 3 months ago? Would the number one point be that oil is unlikely to go back to 120, 130 unless something goes terribly wrong?
I think growth has held up really well. Some of it has been a bit surprising, and it's not just in India. Growth has held up well everywhere around the world. I think for the last 2 months, the biggest surprise has been manufacturing and exports growth. Both have done pretty well despite the energy shock. Now, there can be reasons attributed to this. For instance, in manufacturing, we were seeing some front loading of manufacturing. Corporates were quickly producing things. They were scared that, energy shortages will come up in the next couple of months. So we saw some front loading. On exports, remember, we are in the sweet spot where US tariffs on India is about 10%, but it could go up with the Section 301 investigations. So people are front loading exports as well. Let's make most until the tariff rates are low. So front loading has really helped, keep activity strong right now. Going ahead, there could be problems in agriculture, especially if, El Nino becomes stronger the next couple of months. But to offset that, we could actually start seeing services grow more rapidly. Now that oil prices have come off, trade and transport services could go back up. Now that we have much more looser liquidity because of FCNR inflows and all of that, that means that banking sector liquidity and financial services growth could also be strong. So my sense is at every point, we have something that is helping us out. A couple of months ago, it was manufacturing and exports. And I think the couple of months down the line, it's going to be services, both trade, transport, and also financial services. So from that perspective, yes, this is the green shoot I'm talking about, that there's always a sector which is protecting you. And I think markets are actually noticing that. And that's why, Tamanna, we have seen in the month of June, Indian markets across assets, equities, rates, FX, both INR and dollar credit have outperformed the EM benchmark. So obviously things are looking better than before. And when I look at FII inflows, we've seen, more than $6 billion in debt markets. And in the last 15 days, equity inflows have also moved from negative to positive. So I think all of this is being noticed.
What do you think are the most resilient sectors? You mentioned, Pranjul, that some of the data has been surprising on the positive side. Has it been the sort of high-frequency indicators coming in from the auto sector or resilience from the banks that you think is going to see us through this tough phase?
Well, again, as I said, it's almost been like a relay. I think last couple of months, it's been manufacturing, particularly consumer goods. That has been strong. Remember, we also had all of these GST tax cuts last year. So we are still benefiting from that to some extent. Consumer durables has been extremely strong. Even staples have done pretty decently. So I think these have been some of the strong sectors. And then exports as well, both goods and services, have held up, have risen over the last couple of months. But what has been a bit disappointing has been trade and transport services. Remember all the airline traffic and all of that because of prices going up, oil shortages and all of that. That has been disappointing, but I think that might turn the corner over the next couple of months if commodity prices, fuel prices remain low.
Thank you so much, Pranjul, for joining in. It's always been a pleasure speaking with you, and we hope to catch up soon.
Lovely to be here. Thank you for having me.
All right, focus on IRB Infra. They reported its highest ever monthly toll collections with June revenue rising. Stock is up and about this morning as well. We're going to be in a conversation with Anil Yadav, CEO of Business Development at IRB Infra, but Parth is giving us the quick setup.
Yeah, so IRB Infra has reported its June 2026 collection numbers recently, where they saw a record-breaking monthly toll revenue of 808 crores, which registered a growth of 28% year-on-year. Now, this was led by traffic growth, tariff revisions, and also the asset expansion, which the company saw during this month. If we talk about their order book, then their total order book stood at 45,000 crores at the end of Q4, which also includes an EPC order book of 2,100 crores. crores. Lastly, on their FY27 guidance, the company expects around 10% growth in their toll revenue and are hoping to touch a 5-digit gross revenue numbers pretty soon. Management has said that profits over the medium to long term will grow at a CAGR of 25%, and the company is expected to become net debt free by 2030, which will save them around 150 to 200 crores in interest cost. So that's the whole monthly update and the future outlook for IRB Infra.
I'm in conversation with the management, that is Anil Yadav, who's the Chief Executive Officer of the company. Anilji, thanks so much for taking the time. Let me ask about a specific point though. This 25+% growth, how much of it is come through from the relatively newer operational assets compared with the legacy assets that you've had? And what is the outlook for those newer assets in FY27?
Yes. So with respect to 28%, just I will touch upon that. This is the 28% is the highest growth in terms of the monthly increase in the collection. And if you look at historically also, we have not reached 28%. So this will be the highest in terms of the growth. Now coming to the breakdown, the growth is on account of the traffic growth, tariff revision and new asset addition. And as you specifically asked with respect to the new asset addition, if I will remove the new asset addition from this growth, then the like-to-like basis, the growth is around 15%, 14 to 15%. Out of that, roughly 3 to 4% will be the tariff increase, and balance 9 to 10% will be the traffic increase across our corridor.
Interesting. Okay. I'm going to talk about a few specific assets now. We're talking about Harihara, we're talking about Chandibadra and the Ganga Expressway. All of them have started tolling recently. The question is, what is the expectation from these assets in terms of annualized collections in FY27? And also, by when do you expect the full run rate to be hit for these assets?
So I think in terms of the TOT 17 and TOT 18, from the beginning of their operation, TOT has started the operation last January 2026, and Chandikol has started from 1st of April. So both the project from the date of operation, we are tracking the number, those are in line with our bid estimate, because today, if you look at the toll collection, 97 to 98% is through FASTag, and those assets also had a history in terms of the toll collection. So as of now, the toll collection is on track, what we have projected at the time of bid. Now coming to the recently operational project, which is Ganga. Ganga also, in terms of the initial trend, those are in line with our bid estimate. But just would like to highlight one aspect regarding the Ganga. It's a greenfield project, and typically on the greenfield project, the traffic buildup happens over the period of time. And while bidding also, we have estimated that the traffic buildup will be on a gradual basis. So I think presently the estimate, the collection is in line with our bid estimate, and over the period of time, there will be build up in terms of the traffic as far as Ganga is concerned.
So, no doubt about that, Anilji, but the question is, do you anticipate the second quarter will have more traffic? Do you think that, and when you say gradual and you say over a period of time, what is your definition of that? Because that might be different from mine.
I think for any greenfield project to reach to its 100% potential, it typically takes 2 to 3 years. It's not that within one quarter there will be a significant bump up. I think typically to reach for any expressway to reach its potential, it will take at least a couple of years.
So the other thing that the management has stated pretty clearly is with regard to the growth for the company, which is not expected to be funded through fresh infusion. You're going to do this through asset rotation. And so what is the kind of monies that can be unlocked by doing asset rotation in FY27?
I think if I will talk about FY26, we transfer three assets from private InvIT to public InvIT, unlock the equity of around 4,900 and transfer the asset worth EV of 8,500. And we have on this monetization process, we have added assets worth 14,000 crores, that is TOT 17 and TOT 18. And this year already we are in pipeline to transfer two of assets from the private InvIT to public InvIT. We expect to realize around 2,700 crores plus kind of equity release. And that will provide us in terms of the project bidding, typically 30% is the equity requirement. So that can enable us to bid a project of 8 to 10,000 crores kind of project.
Interesting. Okay. So that gives you the lineup for this current year. Now, one of the aspects that stood out in the fourth quarter was the fact that construction revenue declined. But the anticipation for FY27 is, as I understand it, and please correct me if I'm wrong, 3,000 crore rupees. What are going to be the driving factors for that number?
I think if you look at the IRB today, we have 94,000 crores kind of asset, and IRB's primarily valuation is derived from the asset business, not from the construction business. Construction is the support business, and typically what we do in the construction, we do EPC and O&M of our own project. And gradually, because we have today 28 assets, and gradually that O&M order book is building up. And today we have an order book of almost 45,000 crores, and that provides a visibility for 15 years because O&M is a dated order book and have a stable margin. And it's a kind of annuity kind of business where every year, considering the inflation, your execution will increase. And on the same line of the project, also your execution will increase. And further, you are adding a project every year, so then that will further boost your order book. Now, coming to the specific numbers, this year, definitely the EPC execution will be close to 3,000 crores. And in terms of the order visibility, going forward, it will be a largely execution of our O&M order book, and which is around 1,500 crores presently. And we expect this to reach around 3,000 crores kind of execution in next 2 to 3 years.
Interesting. So that growth is actually partially going to be driven by the O&M book as well that will grow, is what you're saying, essentially, right?
Yes.
Okay. The last aspect has to do with interest cost, Anuji, and this is actually declined in the fourth quarter. What is the expectation in FY27? Because as I understand it, the expectation, the drive or the aspiration is to bring it further down. What is the goal that you have for FY27?
I think there are two aspects in terms of interest cost. One, as we have a stated objective to reach net debt, consolidated net debt zero by 2030. So considering that there is considerable amount of debt repayment is happening, and because of the debt repayment, interest cost is coming down. And if you talk about last quarter, we have seen almost 50 crores kind of reduction compared to the corresponding quarter of the last year. So I think around 200 crores kind of annual saving, which will be from the interest cost. And apart from that, the debt repayment, we are also refinancing the debt wherever possible. And recently we have refinanced the Mumbai-Pune project debt, and there the new cost is almost to be saved almost 75 basis points, and there the debt will be close to 5,000 crores. So the 75 basis point saving translates around 38 crore rupees kind of annual saving. This is apart from the 50 crores saving per quarter, what we have demonstrated in the last quarter.
Okay, all right. So that's the management of IRB Infra. Speaking about the road ahead for FY27, no pun intended. Let's talk about the chemical sector. It's seeing a sharp divergence. Strong amines pricing, supply disruptions, and anti-dumping duties are boosting earnings, while rising input cost volatility driven by the Middle East tensions or West Asia tensions poses a growing margin risk. We've got Ajay Joshi, who's the founder of Ajay Joshi Chemicals and Chemical Sector Expert, to talk about this. But before we do, let's go across to Varsha to give us a sense of what the context is. Varsha?
Well, overall, amines can be a growth story considering the few quarters. Yesterday also we saw Balaji amines and alkylamines were up in trade. And now with stronger pricing, global supply disruptions and anti-dumping duty will support margin expansion when it comes to amines. Alkylamines is the near-term beneficiary of favorable pricing, while Balaji is emerging as a medium-term recovery story, I would say, through capacity expansion. Balaji is also fully booked when it comes to 1 lakh ton DME capacity, which adds a new growth trigger with LPG blending creating a potential demand for the company. But Middle East tensions are creating volatility when it comes to sulfur, methanol and ammonia, but the full impact will be actually seen, maybe visible from Q3. Lastly, beyond amines, IOL chemicals, yesterday we saw there was a huge spike in that stock also, could benefit because of the domestic ibuprofen competitor exiting, and this may help IOL chemicals to gain that extra market share when it comes to the overall market.
Okay, well, thanks Varsha for that. And yes, indeed, it's a double-edged sword to try and guess, but let's get Ajay Joshi to do that for us. Ajay, great having you again. Thanks for taking the time out. Based on what you've seen in terms of market pricing of chemicals, and I know it's very, very different because there's a swath of chemicals out there, and some are inputs, some are outputs, some are final prices, etc., etc. Within which chemistries do you think companies will have the most benefit shown in the quarter gone by?
Good morning. Thanks for having me. I think, Neeraj, first of all, it's feeling like, deja vu. We had similar incident season 1 of US-Iran back in March, and how we are seeing the repeat. So again, very tough to forecast, but right now we are seeing very good situation, favorable situation for amines players. The raw materials, methanol, ammonia have corrected from the war premium. They are now not at pre-war level, but considerably cheap and abundantly available. So the input factor for these amine companies, Balaji, Elka, Elindo Amine, are readily and cheaply available. On the other side, the products of these amine companies are still selling at a premium price because globally there are structural supply issues with regard to amines. From Saudi, there are supply issues. From Germany, from BASF, there are supply issues. So for amine companies, this year is going to be a blockbuster year in terms of margins, in terms of volume growth. Apart from that, India has also put out anti-dumping duty on acetonitrile, where Balaji and Alkyl are key players. So with the anti-dumping duty as well as global supply shortage in amines and raw material price easing, amine companies are best positioned for this year at current times of volatility. But of course, there are companies which consume sulfur, sulfuric acid, aniline as raw materials. There we are seeing the pricing are still elevated. The raw materials are not available, particularly sulfur, where price has jumped from $150 to $200 per ton in Feb, currently $1,300 per ton. So sulfur, sulfuric acid consumers in India, particularly fertilizer companies, agrochemical companies, or dyes and pigment manufacturers, they will suffer this year also.
Ajay, I'm just wondering, in both those conflicting situations, one is the amines bump up that you're seeing, and on the other side, the high input costs. Which are the companies that seem more resilient and would be top of mind for you as the ones who will come out smelling of roses?
Companies which are in the contract manufacturing business in India, because they are able to pass on the cost to their consumers. So companies like Acutaas Chemicals, companies like Aether Industries, Anupam Rasayan, and Navin Fluorine. So whatever raw material or input price increase is there, because of their contractual obligations, they can pass on the price increase to their customers. So these companies are best positioned. On the other side, companies catering to FMCG or consumer disposable income segments like surfactant manufacturers like Galaxy, Rosari, they will suffer because there we are seeing raw material price increase, but they cannot pass on the price increase to FMCG companies like ITC or Hindustan Unilever that easily. So again, like it's a double-edged sword. So for some companies in contract manufacturing business, it's a good thing, but for other companies, it's not a good thing.
Just lastly, Ajay, and this has to do with some announcements that have come through over the course of the last couple of quarters with regard to capacity additions in certain pockets. What are the implications for that? And which specific sectors and companies would you be focused on, or other sectors, more importantly, would see that benefit play through, if not in FY27, then in 28?
I think one sector we need to watch out for is PVC, where Reliance and Adani are coming in big way. India has been a net importer of PVC for long, and now Reliance and Adani are coming with such large capacity. So I think for next 1.5 to 2 years, that should be one segment to watch out for. The pipes demand, the plastic demand is increasing in our country. So for Reliance and Adani, this large capex we must watch out for. Then another big capex is DME, which goes into fuel blending from Balaji. And there are a couple of more players, 2-3 more players entering into this segment. So with DME, Balaji has entered with 1 lakh ton capacity. Their plant is almost sold out, 60-70% to domestic customer. Rest is export-oriented customers. They are also scaling up their DME. Plus, we will have new players. So fuel blending chemicals as well as PVC, capex in these segments, we should watch out for.
Got it. Ajay, thank you for this brief, and I think it'll be lovely to talk post the quarter is done as well, to just try and assess what is the trend looking like, because it is such a difficult sector to grasp per se, because it's very, very bottom up. But thank you for putting this basic understanding today for this quarter. We'll talk to you post the quarterly numbers.
Thank you.
Well, guys, from that to a really big network exclusive.
Yep, this is the big one, and I think a very timely conversation to watch. So the government is weighing a calibrated shift to higher ethanol blends with E21 likely by 2027. In an exclusive conversation with the NDTV network, Petroleum Minister Hardeep Puri allies concerns over ethanol blending, saying E20 has seen no consumer complaints in the last 18 months. Here he's in conversation with my colleague Gauri Dwivedi.
The fact that there is now suddenly a raging debate with regards to ethanol, something that has actually happened months after the actual implementation, actual transition that has taken place. In your assessment, why is it that it's happening now?
E20, madam, has been around for nearly 2 years now. Nearly 2 years. Slightly short. I think E20 blend came into the market in April 2025.
Yeah.
So April of 2025 to April, and we're already in the month of July. Okay. But I ask you another question. Before we reached 20% blend, we were at slightly less than that. And we were at E15 for 3.5 years. I have never heard of any controversy then. Let me put it the other way around. Why does a controversy take place now? Especially, and I underline emphatically, there are 20 crore two-wheelers using E20.
Yeah.
20 crore. There are 20 lakh four-wheelers using E20. I don't call it a gut feeling, because people like me should not be going on gut feelings. But when I put everything together and I compile the evidence which is available, the fact of the matter is that we import 85% plus of our crude. Suddenly on 5th June, when we launched E85,
right,
in a limited number of stations, I think 47 in the National Capital Region, and we launched the largest selling, we launched means the company concerned, Hero Motors launched the largest selling brand as a conversion to E85. Suzuki Motors launched Wagon R, and Toyota Motors launched one of their hybrid using flex fuel, E85. My sense is that someone thought that if E85 takes off in India, this was on 5th June, which is World Environment Day, because things happened very rapidly after that.
Right.
Someone must have thought that, my God, if flex fuel takes off here and EV already there is a thrust coming, etc., let's cast a doubt.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबां केसरी.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are
Welcome back. You're watching India Market Open, and our next guest is Abhay Agarwal, who is Managing Director of Piper Serica Advisors. Abhay, as always, thanks so much for taking the time. And you know, the thing about this is, just when you think that things have settled down on the geopolitical side, something flares up again. That's the story of 2026. How are you reacting to this, though? Do you anticipate that, just like past events, this would be fleeting and you can bet on this turning around, a taco trade?
Yeah, good morning. Now, I think what I figured out is best to not react to this at all, because I think this is a new normal. Trump has another 2.5, 3 years more in office. And what that means is that we will go through these phases regularly. You know, it will settle down in one geopolitical reason, it will flare up somewhere else. So that is the new normal that investors have to get used to. So as fund managers, I don't see any point in reacting to daily comments or daily news. As you said, most likely a lot of it will settle down. If the volatility is very high, I see this as a buying opportunity again, rather than, you know, getting into cash or getting risk off, because whether we like it or not, this is what the markets are going to do for next 3 years. So I think better to just put your head down, build a conviction portfolio, and use opportunities like yesterday to allocate rather than to get into cash.
Therefore, talk to us a little bit, Abhay, about how you've put together that high conviction portfolio, because ultimately there are question marks in certain pockets. So it's easy, I guess, to a certain extent, to argue for exclusions from that portfolio. What is your thinking?
No, as I said earlier also, Alex, I think we see great opportunities in India, mid and small caps. And I think that is the market, that is a segment that still has low participation, despite the fact that, you know, people don't realize these indices are probably at their, you know, all-time highs. Whereas the larger benchmark is still struggling. So we do not worry too much about the larger benchmark, because we think the growth opportunities where investors like us are going to make multi-bagger returns are in the mid and small cap. Of course, there are technical pressures on these stocks because at times they are low liquid. So when the liquidity in the market dries up, you see stock corrections which are pretty sharp that we saw in the first quarter this year. But I think anybody who got in the first quarter this year saw that as an opportunity, has done very well. So that is where our focus is. We are a growth investor. In terms of sectors, we see absolutely amazing value emerging in India pharmaceutical sector. And I'm not talking about the large cap pharma. I'm talking about the mid and small cap names that have spent a lot of time, a lot of energy, resources over next 4 or 5 years into building a truly innovation driven, globally competitive business. They are into formulations, they're not into generics, they are competing head on with European and American peers. They are getting selling their products at high margins. The facilities are world class, balance sheets are clean, the management is driven for growth. So I think, and you can extend that. Pharma is one sector. I'm seeing that also happen in electronic manufacturing. What started under PIL for domestic growth is now playing out at a global level. We're seeing that happen in auto components, electronic components, where the companies are becoming scalable at a global level. So I think opportunities are many. The market is not short of opportunities. You don't need to take very high risk to pursue these opportunities. But of course, diligent work has to be done so that you can build conviction and not get scared about market volatility.
Abhay, hi, Tamanna here. You talked about doubling down and using every dip as an opportunity. The confusion is that should you go all out contrarian or where you should draw the line? And I'll add an example to my question to contextualize it. IT, for example, if you want, there can't be a bigger contrarian bet to take right now. But should you stay away from something which is so unclear?
Yeah, Tamanna, good morning. Look, we are not trying to be contrarian. I think what we are saying is that markets always have in the same market, a bull market and bear market is going on at the same time in different pockets. So what we have to do is to look at where opportunities of growth are, because again, I deeply believe that growth is what delivers returns for investors. And the sector that you mentioned, IT, is not in that growth zone. And when it is not in that growth zone, struggling for us for a 1%, 2% growth, I don't see any reason to buy this even as a contrarian bet, because I don't see how will we make returns as equity investors when the companies are struggling for growth. So purely for that reason, now there are some investors who are value investors who would say that, look, the stocks are beaten down way below their average mean multiple that they used to trade at. So they are a good buy. So I'm okay. I'm not disputing that. Maybe for value investing strategy, they should be bought, but they definitely do not fit into our style. We are growth seekers. And I think IT and in fact, large private banks are some of the spaces which are going to struggle for growth for next year or so.
Okay. Abhay, good morning, Neeraj here. And I wonder if not paying cognizance to the conflict news flow works out beautifully is great, but that's for the short term. For the slightly medium term, is the merit in owning, how do I say, the non-Nifty 50 names, because that's where a lot of promising growth stories seem to be emerging. Sure, Eternal is there, which is the platform of the future, etc. and stuff like that, but they're sporadic in nature per se. Is the larger growth story at the broader end of the spectrum? And if so, where?
Yeah, good morning, Neeraj. So if you look at it, India has, let's say, arguably $5 trillion market cap. That's the entire market cap of the Indian market. 3 trillion of that is sitting into Nifty 50 stocks, the index that we track, the 50 stock portfolio. That's heavily skewed towards 50 stocks. And then let's say another $1 trillion is sitting in another 100 stocks, which are mid caps, or 100 to 150 stocks, which are mid caps and all. Now, if India has to go from 5 trillion to 10 trillion, the question is, where is this incremental 5 trillion going to come from? Is it going to come from the Nifty weighted stocks, the stocks, large cap stocks, ultra large cap stocks, or is it going to come from young companies that have found a strong footing, are now really growing rapidly? Our bet is that it will come from the younger companies. So the next, out of next 5 trillion, probably 3 trillion will get created by companies which are worth 1 trillion right now. So as you asked, definitely the large cap companies will grow. I'm not worried about that at all. But as investors, since we have limited capital to invest, we have to look for what is the best investment for us and our investors. And that is where I find opportunities more in the stocks that are out of indices rather than which are included already in the indices.
Okay, Abhay, thank you so much for joining in today and giving us your views. Abhay Agarwal, Managing Director at Piper Serica Advisors, always, giving that very measured view. And the one that's coming in, and I thought really struck me, was that when you have opportunities like yesterday, don't go sit on cash. Start building up portfolios from a slightly longer term basis. You have no other choice really in this market. But let's move on to an important story. Sources tell NDTV Profit that the SEBI has approved futures and option contracts on the Nifty India FPI 150 index, giving foreign investors a new India-focused benchmark for derivatives trading. Nimit joining in with all the details.
Yes, SEBI has approved futures and options on NSE India's FPI 150 index. These will be rupee-denominated onshore contracts to complement the existing derivative indexes already available. Remember, the dollar-denominated versions of these already exist at Gift City for trade. Important thing to note is that derivatives form a large part of NSE's revenue. Last year, they were over 60% of that revenue in the last fiscal, and this is NSE's way of another option to boost their income ahead of their planned IPO, which is worth 30,000 crores. Also important to understand that this gives foreign investors another option to invest in India and aims to boost their participation in India markets. The product is designed to offer FPIs a more accessible India-focused benchmark.
Thanks, Nimit, for that.
Very interesting, isn't it?
Very interesting, simply because it is, I mean, and one then tends to think, why is it that the authorities didn't think of it earlier, that you're creating an index which is, I mean, as they've described, the 150 most accessible stocks. It's now, on hindsight, it's the most obvious thing to do. And then you arrive derivatives out there so that the trading income out there for NSE may improve, etc., and stuff like that. But at some point of time, exposure to their index by itself would mean something.
It's interesting because a lot of allocation to India does happen through passive routes, doesn't it? It's not an active fund manager sitting somewhere in the US saying I'm allocating. It's not. Right. It's only passive flows.
Yeah, the majority of them.
I'm also looking at it in the context of when this whole thing about FII started, was when there was huge volatility in futures and options. We moved to sort of curb retail participation, this whole narrative that, FIIs are benefiting at the cost of Indian retail investors. Now you're just saying, okay, I'm slicing it off and then coming in that way.
Yeah.
Could that be seen in context of this as well?
One is that, and two, I mean, think of it, a lot of people try and think, FPIs वापस आएंगे तो banks खरीदेंगे. Now, people will say, FPIs वापस आएंगे तो ये index के derivatives खरीद लेते हैं, if it's available for others as well.
I think this banks खरीदेंगे is anyway being countered a fair bit with all of their recent moves. I mean, I'd be interested to know the 1,900 crores that they came in net positive yesterday. Where did that put it? But SBI Funds Management in focus, they have set the price band for their initial public offering at 545 to 574 rupees per share, paving the way for what will be the biggest IPO of 2026 so far. To understand how the fund house is placed versus its peers, Sharad is joining in with that comparison.
Well, yes, I have taken 10 important metrics for my analysis, and these are the most important metrics for you to track. The first one is, of course, we are taking the larger AMCs in our analysis, especially the ones which are having a banking kind of a sponsor as well. SBI Funds Management, the revenue, look at it, it is actually one of the second biggest as compared to ICICI Pru AMC. In the PAT levels also slightly lower than ICICI Pru AMC as well. This is, of course, because a large exposure is there in the passive segment for SBI Funds Management. Let's look at the second important takeaway, the AUM analysis, and this is where it stands at 12.5 lakh crores, the QUAAM, that is your quarterly average assets under management. The market share is the highest at 15.3%. This includes equity and debt both. The third important metric apart from this is the foreign partners. Most of these AMCs have foreign partners as well. SBI is having Amundi, ICICI Pru has Prudential PLC, HDFC AMC has Aberdeen, and even ABSL AMC, they also have Sun Life Financial as well. So this is a very interesting trend to take out. Also, looking at the passive segment, they are having the highest market share at 27.9%. Remember, all of this data is in FY26. The next metric you should be tracking is your equity-oriented retail MOUM. That's the monthly one we have taken, the recent data. Over here also it is at the industry-leading number when it comes to SBI Funds Management. Apart from the equity-oriented retail numbers, active equity AUM, it's quite close. It's the second place it is as compared to ICICI Pro AMC, and coming in at 12%. This is, remember, the May data from UBS report. Also, the market share for this active equity, if you look at it, that's also on the second highest side. The number of unique customers, that stands at 1.8 crore. That's the number to look at. That's the highest in the market. Also, the next metric in focus would be the QAM, which is a part of your parent bank deposit. This is very much important, and if this ratio is lower, that means there is a significant upside potential, and this is what's happening here. It's very low. It's at 20.9% as compared to ICICI Pro, that's around 61.5%, and HDFC, that's around 30%. So that's where a little bit of alpha is there. Equity oriented beyond 30, B30 as we call it, these places we see this is the company is having the largest market share. That means the tier 2, tier 3 cities, that's where the growth is looking like, at least in the mutual fund industry. And look at that, they're having the biggest market share in this. And the another metric to track apart from this would be the valuations. I have taken these valuations on a forward basis. I've calculated it, and it's reasonably priced. Looking at the overall price band, it's around 31 to 34 times for FY28 P. And if you compare that with ICICI Pro or HDFC, it's largely in line with what the sector has been there. Of course, 2 years ago, the sector had seen a good re-rating, but now there seems to be a deflation at play. And these are the other AMC stocks which are listed. UTI, of course, is the cheapest at 15 times, and ABSL AMC also comes in at 27 times. So this is the entire picture of the important metrics to track for this IPO.
Thank you for that, Sharad. I want to see what State Bank of India is doing this morning. That's also going to be in focus as a majority owner of SBI funds. The stock about 1% up. Dr. Reddy is also on the radar. A quality glitch has hit select semaglutide batches at Dr. Reddy's. Little pressure on the stock, but what's the story all about? Varsha joining in for more.
Yeah, so two stocks, of course, in focus. One is Dr. Reddy's, and the other one, which is also in focus, is OneSource Specialty, because it's a CDMO player for Dr. Reddy's. Now, why Dr. Reddy's is in focus? Because it has flagged quality issue in semaglutide batches. Now, semaglutide is nothing but an active ingredient which is used in Ozempic, which is used for type 2 diabetes and weight loss management. Now, the commercial supplies will be delayed temporarily. Certain semaglutide batches were found to be out of specification, which the issue is actually linked to the API used in the product. That's the active ingredient used in the product. Now, what the company is saying that the root cause investigation is underway. Corrective measures have been taken to ensure product quality, and the commercial supplies will actually be delayed until the issue is resolved. So overall, one is Dr. Reddy's, and we are seeing some kind of pressure in the stock, and OneSource Specialty will also have a negative impact considering the CDMO player of Dr. Reddy's, the OneSource it is.
Got it. All right, Varsha, thanks so much for that. And in fact, we're drawing to a close on this edition of India Market Open. And so therefore, from the NDTV Profit Suzlon studio, it's a goodbye from Neeraj, Tamanna, myself, and the team that put this show together. Thank you so much for watching. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT। India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
Welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose and news updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin stabilizes near $62,000 mark on geopolitical cues. Now White House confirms strategic Bitcoin reserve plan. Russia advances crypto bill. Bitcoin bottom giving signs of a bull market, says analysts. Looking at the levels, Bitcoin is near that $62,000 mark on the recent geopolitical developments. Now the fall seems to stabilize now. Globally, the risk of sentiment is still prevailing across most asset classes. Now, of course, this is due to the rising tensions coming in West Asia. The White House has confirmed officials that they are working on the structure of US strategic Bitcoin reserve. Now the US government controls roughly 3 lakh to 3,28,000 Bitcoins and the value is between $20 to $25 billion. Now what happens? This brings in more institutional support to crypto. Russia's State Duma committee has approved a revised crypto bill. Now the updated proposal allows crypto to be used for buying Russian securities and also digital financial assets while keeping the annual retail investment limit at roughly 3 lakh rubles. Now this is a positive for crypto investors. Well, analysts say Bitcoin is repeating its previous macro bottom behavior in a textbook manner. Short-term holders are taking profits on minor recoveries. Sometimes this is a characteristic of a bull market. And before we wrap, here's a quick check to the changes to crypto prices over the last 24 hours. Of course, concern is there in the risk assets, but Bitcoin, Ethereum just fell 1 to 2%. No major change from the last time we updated you with the resistance and the support ranges which are there. Of course, a little bit sell-off coming in Solana, falling almost 2% in the last 24 hours. Well, now time to take a look at the crypto strategy for the day. Here's what's there to keep in mind. Looking at the overall market outlook, it's still cautiously bullish, you could say. There is no panic actually warranted as of now. There is a range-bound movement with a slight negative biasness, but let the levels stabilize. $62,000 levels, that's the immediate support level for Bitcoin. And in the coming sessions, you can expect a little bit of consolidations before the next leg of moves start coming in. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxations, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Watching Ask Profit here at NDTV Profit. I'm Mahima Vacharjani, and with me is Soumit Sarkar, and this is a show, of course, that gets all your stock-related queries answered. For viewers who are just tuning in, you can either give us a call or send us your query on the WhatsApp number that's flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing at the moment. The Nifty 50, let's try to pull that up about the 24,000 levels, trading around 0.65% higher. 153 points of an uptick is what we are seeing. So after yesterday's steep fall, at least we're seeing some action, and well above the 24,000 is what we're observing on the Nifty 50. Let's also try to pull up the heat map and see as to what are the counters that are contributing to that gain coming in. You have names like Bharti Airtel topping that chart, up 3.6%, followed by Sun Pharma up 2.8%, Eternal slowly and steadily moving up 2% as well, Max Health, Nestle, Tata Consumer. So a lot of consumption names are back in action and seeing gains anywhere in that range of 1 to 2% in the Nifty 50. But on the flip side, you have Dr. Reddy's, which is down 2.6%, Infosys, Bajaj Finance, NTPC, Hindalco, TCS. So IT names again seeing profit booking in trade today. Let's also try to pull up the bank Nifty, because that is trading 0.8% higher, slightly doing better than the Nifty, above the 57,100 levels, almost touching the 57,200 levels. Let's also try to pull up the sectoral heat map to see as to what sectors are doing in trade right now. And you have media gaining the most, followed by realty, pharma, PSU banks doing very well, but you have IT and defense which are under pressure today. But it's good to see more green on the screen than red. Let's also quickly pull up the advanced decline ratio to see as to how the broader end of spectrum is performing, and it's doing better than the benchmarks is what we're seeing. The mid cap 150 and the small cap, that ratio suggests that we're doing fairly well, much in the favor of the bulls. The mid cap 150 is up by about 1.2%, and the small cap 250 is gaining by about 1.4 odd %. So that's with regards to where the markets go. But let's start taking all your stock related questions, and to answer them today, we're now joined by Khush Bora, who's the founder of khushbora.com, and also joined by Shaina Mukaddam, who's an independent market expert. I'll start by taking the first query that is coming in, and this is from our viewer who's asking about Vikram Solar. This is Chintan Nivas, if I'm not wrong, and he says that he wants a long-term outlook on Vikram Solar. Shaina, a very good morning to you. I'll come to you on this one. What would you recommend him?
See, they have got a good morning, everybody, to start with. It's a great day to start with, sunny day. But also, I think Vikram Solar, they've got quite a few orders that have come in recently. Also, I think after that huge correction that we saw, if you see in the last 6 odd months, the stock had corrected and then has been stabilizing, consolidating. So I think at current levels, it would be a hold as of now. If you want to add, probably you could add it at slightly lower levels, maybe 180 type of levels. But otherwise, you could hold and then hold it for a bounce, which I think you could see it go closer to about 230 type of levels. So it's a hold and then buy at any dip that you get.
Right, the next query is coming in from Sagar Pathak. It's on Triveni Turbine. He has bought few shares at a price of 669. Should he continue to hold this counter or sell? Kush, any view on Triveni Turbine?
First up, a very good morning, guys. Cheerful day for sure. I want to ask Shaina, what part of Mumbai is she in? Where is it sunny? I want some of that. It's been far too long when we've had these rains in Mumbai. But nevertheless, a slightly cheerful day, especially compared to what happened yesterday. Now, as far as Triveni Turbines go, the stocks had a good run, a very sharp uptick, and then you're seeing this fall on the stock. Now it's come very close to that support zone of 600, 605, and it's coming close to oversold territories on the daily setup at least. So my suggestion for now, stay put, keep a tight stop loss at 600 or maybe just under. I don't expect a V-shape kind of a recovery, but the stock should consolidate here and attempt a rebound towards levels of 640 and even 675. So maybe give it some time. You could see a lesser loss than you're seeing right now. For now, like I said, hold, continue to hold, stop loss just under 600.
Okay, the next one that we have is on allied blenders and distilleries, and this is from Murli, who's writing us from Hyderabad. He says that he's bought 20 shares at the levels of 324 and wants to know if he can continue to hold this for a year and what could be the target. Kush, a slightly long-term view on the charts on this one?
Oh, in fact, I'm glad that he's asked for a long-term view, because on the weekly setup, the stock actually is attempting, a rounding formation breakout, not nearly there in terms of closing, but in terms of making that right move, it's already there. So 690 is the level that I will watch for. If you get a couple of closings above this from a long-term perspective, despite the run that it's already had in the last month or two, I think the stock will actually do well. So continue holding on to Allied, and the stop loss on this one comes in slightly deep around 625 levels, but very close to breakout levels of 690. Continue to hold.
Right. The next query is coming in on KC International. Jayashri from Coimbatore has around 100 shares bought at a price of 538. Can she average now or exit? Any view on this, Shaina, on KC International?
Well, see, the overall sector, in my view, is, cables is going to see a lot of competition that will come in maybe in a year's time, with new competitors launching their products. But I think KC International does have a space of its own. Plus, it has corrected substantially, and it is quoting almost at the same levels that it was 5 years back currently. So I don't see too much of downside. But at the same time, I believe, you could look for some bounce to switch. I would believe that there could be a bounce because of the correction that has taken place. Otherwise, they do have some orders in place. So it is not that, the company is does not have a good revenue potential. But I think there is going to be some bit of pricing competition that will come in the medium term. So I would believe hold for now, wait for a bounce.
All right, so that's the view coming in on KC International. The next one that we have is coming in from Vijay, who's writing us from Chennai, asking about solar industries. Let's try to pull the chart up, and he wants to know the short-term target on this particular counter. Kush, what would you suggest on this one? Because his buying price is quite high. He's bought at the levels of 18,500.
I wouldn't really worry too much about it. Yes, there is a deep gash, today also. The stock is seeing some sell-off. So for now, you could continue to hold. This is a level, about 17,200 is where the stock had taken support multiple times, attempted a rebound. If you want to push it a little lower, then that level comes close to the 16,800 mark. So I would hold with a stop loss at about 16,800. The entire pack had, a sharp run up, then a consolidation, and then you're seeing some sort of a breakdown in some of these names. But from a slightly medium-term perspective, this holds in good state. From a near-term perspective, if 16,800 is broken, then you could see some further downside pressure. So hold, but with a tight stop loss at 16,800.
Okay. The next query is coming in on Zaggle, and Vivek from Mumbai wants to already is holding around 1,105 shares bought at a price of 344. He wants to know whether can he hold this counter for the next 1 year. Shaina, any view on Zaggle prepaid?
Well, in my view, actually, it's a bit high risk stock. The stock is actually, the management has or is growing through acquisitions. And that I believe would be something that could put a pressure on their balance sheet. I would believe that it is quite expensive in terms of current valuations. So though the stock has corrected substantially and is at same levels that it was, a year back or 2 years back, but at the same time, I would still say it is better to avoid this stock, not to invest and to switch.
Right, so that's the view coming in on Zaggle. I think we've got Narendra who's calling us from Hyderabad. Narendra, a very good morning to you. Go ahead, ask your question.
Yeah, good morning, madam. Yeah, good morning, panel members. Today I'm my lucky day because of Kush Bora. I'm a big fan of him, actually. I'm seeing the daily 840 program for him, actually.
Right. Go ahead. As you can see, Kush is
Yes.
having that big
Yeah,
smile on his
regarding
face.
my question is
You made his
LG
day.
Electronics, LG India. I have the 15 shares. I got it at the price at the time of the IPO time. So the stock is not moving well. So I wanted to. My planning is to sell, and I will buy Apar Industries or Silpa Medicare. Is it good decision or not?
Okay, got your question, Narendra, and I'll take this up straight away with Kush. Kush, what would you recommend him on LG India? And he's given you great compliments.
Thank you so much for that, Narendra. Now you guys know why Thursday is the favorite day of the week for me, right? For exactly viewers and callers like Narendra. Thank you so much for that. I think I should plan a trip to Hyderabad, perhaps even Bangalore, right? I mean, very soon in the future. So thank you so much for that. First, to answer your query on LG, I think the stock is holding ground. You should continue to hold. It's consolidating. I don't really see too much of an issue with it. But like I always do, I suggest a stop loss close to the 1490, 1500 mark, but continue to hold. Now, as far as Shilpa Medicare goes, I think I know why you bought it. This was one of our weekly picks last month, doing fabulously well. However, I wouldn't really enter now, but if I had a position, I would continue to hold. I would actually look to add this close to 570 odd levels. I know it's some distance away, but could see some profit booking. But if you have, you should continue to hold Shilpa Medicare.
Okay. The next query is coming in on. The next query is actually on Hitachi Energy, and the viewer Jeet from Kolkata wants to know whether is it a right level to enter Hitachi Energy. Kush, any view on Hitachi Energy? Should Jeet buy at current levels?
Yeah, so we know that the pack has seen some sell-off. This stock too had run up quite a bit, is seeing sell-off very close to support levels of 31,500. This is a good level to enter. My concern remains around the momentum and the follow-through. So if your view is 6 to perhaps 12 months out, then you could consider to accumulate at these levels. So like I said, momentum is something that is missing and may not return immediately. And on the downside, support zones close to the 29,500, 30,000 mark. So keep that as your stop loss. But yeah, you can gradually start accumulating Hitachi Energy, not go the whole hog in one shot.
Right. The next is a caller query coming in from Andhra Pradesh. Bharat, you can go ahead and ask your query.
I am holding the Balaji Amines at the price of 2290.
Okay.
200 shares. I am a big fan of Kush Bora, sir. Sir, your stock predictions are about two good stock predictions, price.
Well, Kush.
So, what is the technical view and what is the target of the stock?
Okay, Kush, any view, technical view on Balaji Amines?
Bharat, thank you so much. And if I have been right, it's just because God and markets have been kind to me more than anything else. But I'm glad that, the recommendations have helped you through the course. Happy to be a part of your investing and trading journey. So thank you so much. You guys are so sweet. I think the Andhra Belt today is, being very kind to me. Like I said, perhaps a trip in the near future. Balaji Amines in very good stead. My only concern is that your buying price is slightly elevated, right? The stock has been consolidating here. This is the upper end of the resistance zone and you've bought it here. But nonetheless, like I said, the stock is in good stead. If it breaks out, if it gives you closing above 2,300, which is not too far from current levels, right? So if it gives you a couple of closes above these levels, then the stock could resume its uptrend after a month and a half of consolidation. So hold Balaji Amines, deepish stop loss for this one, 2,075, 2,100, those levels should act as your stop loss. But for now, you could very well continue to hold Balaji Amines.
All right, so that's the view coming in on Balaji Amines. And by the way, markets have not been good to everyone. Yeah. So yes, it all depends on how you give the advice. So kudos to that, Kush, for sure. But the next one that we have is from Satya, who's writing us from Kakinada. He's asking about BEL. He's got around 200 shares at the levels of 414. From a slightly long-term perspective, is this a good counter to hold China in the defense pack, or are you viewing at something else in that entire pack?
For the longer term, yes, it's a good counter to hold, definitely. And I would see any dips give you opportunity to add. If you see the order book position, it is very strong. And they continue to get orders. And I would believe that they also are improving their performance if you look at it on a year-to-year basis. So execution is also improving. So I would say, yes, you can continue to hold for the longer term. And if you want to add, if you're not invested and want to add, yes, any dips, like, anything close to current levels, maybe 10 rupees, 20 rupees lower than this, make excellent buy levels.
Okay, all right. So that's the view coming in on BEL as well as the defense pack. But I think we've got Ayar calling us from Bengaluru. Ayar, a very good morning to you. What's your query about?
Very good morning, Mahima. I have been a regular viewer of your show. It's been excellent feedbacks I've been getting it from your analysts. I have got today this query regarding, the entering into Bharti Airtel or CG Power.
Okay.
This is the best thought for me because I would like to split something like about 50,000 to 70,000 on the stock.
Okay.
And debit is for a long term, which is about 2 years minimum.
Okay.
I was holding Bharti Airtel, but I made some profit. I came out of it. But is it the right time, where I can re-enter either this or CG Power or any other good stock from Kush Bora? If I could get it, I'll be very happy.
Sure,
because
sure.
Kush has been giving a very good, views like.
Absolutely. Mr. Ayar, thank you so much, first of all, for your kind words. Certainly made our day. And do, of course, keep watching us. So I'll take your query with Kush then. Kush, Bharti Airtel at its day's high point as we speak. CG Power, of course, has seen a significant downtick from its highs. But what would you recommend him?
So much love. So much love.
Yeah.
Thank you so much, Mr. Ayar, for those lovely words. This is a little overwhelming. And by the way, on a very on a similar but side note, I'm a little used to these compliments through the viewers. First time I'm getting a compliment from someone on the panel hosting the show. Mahima says thank you to you as well. Didn't go unnoticed. See, look, you can buy Bharti Airtel, and I'm glad that your view is 2 years or more because it is going through a consolidation phase. In fact, the whole of this calendar year is consolidating. Now it's starting to break out. Today's the first day after a while that it's moved above the 200-day moving average. It's a tactical positive sign. So.
Got it. Okay. All right. So that's the view. We'll get your view again, Kush. But let's cut across to PM Narendra Modi addressing media on the sidelines of his visit to Australia.
मैं अपने मित्र प्रधानमंत्री एल्बेनीज का हार्दिक आभार व्यक्त करता हूं। उनके व्यक्तिगत प्रयासों ने, उनके कमिटमेंट ने भारत ऑस्ट्रेलिया संबंधों को नई ऊंचाई और व्यापकता दी है। उनके इस बहुमूल्य योगदान के लिए मैं उनका अभिनंदन करता हूं। फ्रेंड्स, भारत और ऑस्ट्रेलिया दो वाइब्रेंट डेमोक्रेसीज हैं, दो मल्टीकल्चरल सोसाइटीज हैं और दो महत्वपूर्ण ओशन पावर्स हैं। हमारी ये समानताएं और हमारा कॉमन वर्ल्ड व्यू हमें गहरे आपसी विश्वास के साथ निरंतर आगे बढ़ने की प्रेरणा देते हैं। हमारी कॉम्प्रिहेंसिव स्ट्रेटेजिक पार्टनरशिप ने पिछले कुछ वर्षों में अभूतपूर्व प्रगति की है और आज तीसरी एनुअल समिट से हमारे सहयोग में कई नए आयाम जुड़े हैं। 2022 में किए गए इकोनॉमिक कोऑपरेशन एंड ट्रेड एग्रीमेंट से हमारे व्यापार और निवेश का दायरा लगातार बढ़ा है। अब हमने कॉम्प्रिहेंसिव इकोनॉमिक कोऑपरेशन एग्रीमेंट यानी सीका पर तेजी से काम करने का निर्णय लिया है, जो दोनों देशों के लिए बैलेंस, एम्बिशियस और विन विन होगा। हम बायलैटरल इन्वेस्टमेंट ट्रीटी पर भी तेजी से आगे बढ़ेंगे। हमारी रिन्यूएबल एनर्जी पार्टनरशिप क्लीन एनर्जी और क्लाइमेट एक्शन में हमारे प्रयासों को साकार रूप दे रही है। इसके तहत हम इन्वेस्टमेंट, टेक्नोलॉजी ट्रांसफर और इंडस्ट्री टू इंडस्ट्री कोलैबोरेशन पर विशेष बल दे रहे हैं। पीएम सूर्यघर योजना को सपोर्ट करने के लिए हमने मिलकर गुजरात में रूफटॉप सोलर ट्रेनिंग एकेडमी बनाई है। यह एकेडमी अनेक महिलाओं और युवाओं की कैपेसिटी बिल्डिंग में योगदान देगी। न्यूक्लियर एनर्जी के क्षेत्र में आज हमने एक महत्वपूर्ण समझौता किया है। इससे ऑस्ट्रेलिया से भारत को यूरेनियम सप्लाई का मार्ग खुलेगा और हमारे क्लीन एनर्जी के उद्देश्यों को नई ताकत मिलेगी। क्रिटिकल मिनरल्स में हमारा सहयोग हमारी स्ट्रेटेजिक सिक्योरिटी और क्लीन एनर्जी ट्रांजिशन के लिए महत्वपूर्ण है। इसी सोच के साथ आज हमने ऑस्ट्रेलिया इंडिया पार्टनरशिप ऑन साइबर, क्रिटिकल टेक्नोलॉजीज एंड सप्लाई चेन्स यानी AI पैक्ट की पहल ली है। हम मिलकर क्रिटिकल मिनरल्स कॉरिडोर पर भी काम करेंगे। साथियों, इंडो पैसिफिक केवल दो महासागरों का संगम नहीं है, यह भारत और ऑस्ट्रेलिया जैसे लाइक माइंडेड डेमोक्रेसीज के शेयर्ड एस्पिरेशंस का भी प्रतीक है। रक्षा और सुरक्षा में सहयोग बढ़ाने के लिए आज हमने एक महत्वपूर्ण जॉइंट डिक्लेरेशन जारी की है। भारत ऑस्ट्रेलिया डिफेंस इनोवेशन कॉरिडोर से हम डिफेंस स्टार्टअप्स और इंडस्ट्रीज को जोड़ने पर काम करेंगे। हमारे मैरीटाइम सिक्योरिटी कोलैबोरेशन रोडमैप से इंडो पैसिफिक में हमारे साझा प्रयासों को नई ताकत मिलेगी। हम शिप बिल्डिंग, शिप रिपेयर और मेंटेनेंस में भी मिलकर आगे बढ़ेंगे। फ्रेंड्स, आज हमने कई क्षेत्रीय एवं अंतर्राष्ट्रीय मुद्दों पर भी विस्तार पूर्वक चर्चा की। भारत और ऑस्ट्रेलिया मानते हैं कि आतंकवाद केवल किसी एक देश के लिए नहीं बल्कि पूरी मानवता के लिए गंभीर चुनौती है। इसलिए आतंकवाद के खिलाफ हमारी लड़ाई भी साझा है, हमारे संकल्प भी अटूट है और हमारा सहयोग भी लगातार मजबूत हो रहा है। हमारा यह भी मानना है कि विश्व के अनेक भागों में चल रहे तनावों
All right, so that was Prime Minister Narendra Modi addressing the media on the sidelines of his visit to Australia, of course, talking about defense, uranium, critical minerals, etc. But we were speaking to Kush earlier. Kush, let's complete your view on Bharti Airtel and CG Power.
Yeah, they've been so sweet. I have to come back to this, right? So just a quick word. Bharti Airtel, yes, you can accumulate now. It's giving you a breakout above the 200 moving average. Stop loss at 1875. And because all of you have been so sweet and so kind, I'll give you two, not just one stock from a medium to a long-term perspective. One is IKS. We've discussed this on the channel as a call. Stop loss on this one, 1775, and delivery is the other one, 485, 490. That's your stop loss. Both of these positional calls still look very good.
All right, okay, it's time for a rapid fire round now. Question China, try to keep your answers as short as possible. The first question that we have is on Bharti Hexacom. Our viewer Wahida says that it's been consolidating for quite some time now, but she's been patient and is a long-term investor. Should she continue to hold? Her buying price is 1863. China, what would you recommend?
I would say hold for a bounce.
Okay.
Next query is for you, Kush. It's on MCX. Srinivas Nuka from Hyderabad has around 500 shares, bought at a price of 2,900. Can he hold for the next 6 to 10 months?
Very good entry price. Continue to hold. It is rebounding. Stop loss at 2695, 2700 levels.
Okay, the next one is on transformers and rectifiers. Our viewer has bought it at the price of 345. 150 shares is what he or she is holding. For the next 3 years, continue to hold China.
I would say that you hold it for now, and again look for a bounce to exit. So hold for now.
The next query is for you, Shaina. It's on Salasa Tech. The viewer P Gopal has around 1,000 shares, bought at a price of 14 rupees. Currently sitting on a loss. Should he continue to hold this counter or exit?
Despite the fall that the stock has seen over a period of time, I still think it looks weak. And plus, in terms of business also, looks a bit weak. So I would say switch.
Okay, the next one is from Prashant. Marksans Pharma or GlaxoSmithKline Pharma? Which one is a better bet right now? Seeing the charts, Kush, which one would you recommend between the two?
Yeah, very clearly Marksans, there is strength and we've recommended that as the weekly pick as well. So you could buy this. Maybe if you want to buy on declines, 265 or thereabouts is a good entry price.
The next query is for you, Shaina. Dilip from Kolkata wants to know whether whether is it a right time to enter stock Vinati Organic?
Vinati Organics is not my topic in the sector, but it is showing some rebound because of the overall sector. So as of now, it's a hold.
Okay, L&T from a technical perspective, Suresh from Kerala wants to know, can he buy at these levels? Kush,
is there a time frame?
No, there's no time frame.
So maja nahi aa raha. There is no momentum right now. So I would suggest wait up on buying L&T. From a technical perspective, wait up.
All right, okay, that brings us to the end of this rapid fire. Though a short one, we'll keep the other one long. So do stay tuned in, but it's time to slip into a very, very short break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either give us a call or send us your query on the WhatsApp number that's flashing on your screen up there. By now, I think everybody who's watching us knows this, but still. The next question that we have is from Devi Jayaraman, who's writing about Bharat Dynamics. She wants to know whether she can continue to hold this. She's not mentioned the time frame, but Shaina, I'll come to you on this one. Any particular view on Bharat Dynamics?
I think this is another stock in the overall defense segment that I would say looks good in terms of order book as well as in terms of potential for the stock to move up. Given the fact that while it is expensive, given the growth that is likely, I would say a bounce from current levels. So I would say it's a good hold at current levels.
All right. Okay. We've got Ravi calling us from Hyderabad. Ravi, a very good morning to you. What's your query about?
Yeah, very good morning. I have query on Eternal. Just want to know, is it a good time to enter into this stock? And I can hold for next 1 year.
the next 1 year. Okay. Kush, I'll take this up with you. We've seen a good run up for this particular counter in the last, just a week or two. But would you recommend an entry now from a long-term perspective of a year?
From a year's perspective, definitely. The stock's paid its dues, as we say.
Yeah.
It's gone down, it's consolidated, it's now giving you a breakout. Small hitch at the 300 level. Psychologically also it's important, but technically also it has, significance. So you could start accumulating now, but if you get a close above 300, that's when you can perhaps add some more. I'm a big fan of adding more when the stock actually goes higher, remember that. So yes, from a year's perspective, you can, add Eternal. It's had a good run. Momentum was missing. That too caught up last week. From a downside perspective, there is support near the 265 mark. If you do enter at these levels, keep your stop losses around 265.
All right. Okay. The next one that we have is on Cochin Shipyard. This is from our viewer Sheikh Ilyas, who's writing us from Andhra Pradesh. He's got around 130 odd shares at the levels of 1466. Wants to know if you can go ahead and add some more here. Shaina, any view on Cochin Shipyard?
Yeah, as we heard the Prime Minister just now, there is a lot of focus that is going to be on defense, and incrementally, I think Cochin Shipyard should do pretty well going forward, given the fact that they are, doing well in terms of numbers also. Their order book is as high as 21,000 crores, which gives you sufficient scope for growth. So I would say you can hold it for the longer term.
Right, the next query is for you, Kush. It's on Bellrise. Mohammad Nahan is saying that it is one of your suggested picks and the stock has reached around 252 before consolidating around 230. Is it still good hold, or would you recommend switching to any other auto stock?
That is so awesome. I was hoping that this query comes to me. Thank you, Mohammed, for that. I'm so glad you remember. You're absolutely right. This has been one of my picks. And your reading is also right. It's run up quite a bit, now consolidating. If you would have asked me, yahan pe buy karna hai kya? Just blanket, I would have said yes. That's still the conviction that I have on Bellrise. So yes, you could very well add now. In fact, the dip is a healthy one. On the downside, supports near 210, 215 zones. So keep your stop losses there. You could also look at the Shriram Pistons, by the way.
All right. Okay. So that's the view on Bellrise as well as a bonus tip of Shriram Pistons. But I think we've got Vijay who's calling us from Hyderabad. Vijay, a very good morning to you. Go ahead, ask your question.
I'm holding TD Power at price 1140, 100 shares. I want to know the technical from Kush.
Okay, all right. TD Power is the counter, Kush. He's sitting on a slight loss right now, but what would you recommend?
Vijay, thank you so much for directing this towards me. Okay, so the stock is consolidating. We've seen it slide lower. My concern is that it may not immediately rebound. Now, the good thing is that your buying price is not too far away, from the current price. So I would suggest a hold because the stock is due a rebound, and I'm starting to see some positive divergences on the daily setup at least. So my suggestion, hold for now. Keep a deepish stop loss close to 1030. And yeah, when the stock moves higher, I would suggest don't book, but keep trailing your stop losses higher, right? We've spoken about that in the past. So for now, hold with a stop loss at 1030. As the stock moves higher, keep trailing your stop losses up.
Yeah, the next one is on HFCL and it's for you, Shaina. Harish. Okay, Harish has around 100 shares bought at a price of 100 rupees. He wants to know, should he continue to hold or sell today?
I would say hold, because here, there's a lot happening in terms of incremental demand that's coming in, both from telecom as well as new defense orders that are coming in, local as well as international. I would say you hold it, but given the steep, rise that the stock has seen in the recent past, you could keep a stop loss, keep it at around 200 rupees. But I would see even those levels that one could add and then hold it for the longer term. So if you're a long-term investor, just hold it. Otherwise, if you want to book little profits, you could book, but keep a stop loss of 200 for the shorter term investor.
All right. Okay. So that's the view coming in on HFCL. The next one that we have is from Raghu, who's writing us from Bengaluru. He wants a long-term view on 3 names, pharma names that he has mentioned, and he wants a pick from the 3. Shaina has mentioned Zydus Life, Dr. Reddy's, and Newland. Any of these that you're liking from a long-term perspective?
Well, actually, the overall pharma sector is doing well, but my 3 picks, in fact, let me give 3 separate picks if he wants to invest as of now. So my order of picking would be Biocon, Cipla, and maybe Dr. Reddy's if I have to pick between the 3.
All right. The next one that we have is coming in from the defense pack. Pratiksha from Muscat says that she's got BEL, BDL, BEML and MTA Tech in the defense stocks. She wants to know as to which one of these two can she go ahead and exit right now. So a lot of names, Kush, I'll repeat them once again when you're still trying to pull up the charts. BEL, BDL, BEML and MTA Tech. Where are they looking attractive and which two should she exit?
Is there a time frame mentioned?
No, she's not mentioned the time frame, but she says that she wants to know the exit and the target price for this one.
Yeah, so if it's a trading bet, I would suggest you could exit BDL and BEL, the consolidating mild negative bias on these. Positionally, BEL looks good, but from a very near-term trade perspective. MTAR is something that you can hold. It's seen a profit booking dip, now attempting a rebound. And even BEML, by the way, is starting to attempt a rebound. So 1830, that's the level. Once it crosses and closes above that, perhaps you could see an uptick. So BDL and BEML, from a near-term perspective, you could exit.
All right. Okay. The next one that we have is on Uno Minda. This is from Jaya Krishnan, who's writing us from Kerala. From a 6 to 9 months perspective, is this the right level to enter Uno Minda, Kush?
Very interesting setup on this one. So unlike the rest of its pairs, it's not really had a momentum, but the volume accumulation over the last few weeks has been rather interesting, to say the least. So yes, you could start accumulating now. Resistance is about 1190 or thereabouts. So you could accumulate at these levels. There's a convergence of the 20 and the 50-day moving average near 1100. So keep that as your stop loss. But yeah, you could start accumulating this one.
All right. Okay. We've got Sayan waiting by, calling us from Kolkata. Sayan, go ahead, ask your question.
Hello, good morning. I have 3,000 share of Suzlon at the price of 50 rupees.
Okay.
My view is long term, but right now there is some technical breakdown. I just it went below the 200 the DMA yesterday. So I would like to know some short term view.
Okay. Okay, all right. Okay, got your question. I mean, because it's a mix of both fundamental and technical, I'm still trying to decide who should I go to. I'll first go to Shaina. Shaina, your overall view on Suzlon, and then I'll also take a technical view from Kush.
Yes, I mean, the long term looks decent. I would say in the shorter term, since he's also looking for a shorter term view, I would say it looks a bit weak. I would say it would correct closer to about 48.50 type of levels. But for the longer term, the order book position is very strong. So I think if you're a 3-year holder, then yes, you could make money on Suzlon. Shorter term, I think you could see some bit of consolidation or correction.
Okay. The next query is for you, Kush. It's from Shri from Chennai. Wants to know whether it's a good time to buy Natco Pharma.
So Natco Pharma has been one of those stocks which has popped up on radar every now and then. The follow through is missing, and because the rest of the pack has done well and this hasn't participated, not really a big fan. If you have a position, I mean, you could hold, no harm in that. 865, 885 thereabouts can be your stop loss. But if you're asking for a fresh entry, you don't have a position, then I wouldn't really enter in Natco Pharma right now.
And just a quick view on Suzlon as well, Kush.
Oh yeah, China actually gave a very beautiful techno funda view, so a +1 on that. There could be a 48 to 50 kind of a support zone retest at that, but from a medium term perspective, looks positive, so you could hold.
Okay, all right. The next one that we have, I think we've got Bala Subramaniam, who's calling us from Bengaluru. A very good morning to you, sir. Go ahead, ask your question.
Good morning to all. So I'm Bala Subramaniam from Bangalore. I'm holding 15 sets of 15 numbers of trend at an average cost of 5057. Shall I hold or not? Because now the recent time it has got increased again. Last 2 days back again it has gone down by 10%.
Yes.
So shall I hold or dispose of?
What's the time horizon that you're looking at?
I'm a long-term investor.
Okay, got your question. I'll take this up with China then. China, we saw this stock taking a knock, and this was on account of the business update coming in. Less than 20% growth, etc. We've been talking about this. But from a fundamental point of view, trend, should he continue to hold because his buying price is quite high?
So I think it will consolidate for some more time because one is, of course, the business prospects look to be shrinking in terms of what is happening in overall growth. I would say that, maybe you continue to hold. It's a good quality for the longer term. And valuations have started looking a bit more interesting. It's still expensive. I would say you hold as of now and to keep a stop loss of close to about 2,800. but see if it can rebound from current levels to recover some of your losses.
The next query is coming in from Nandgopal, and he wants to know whether Anantraj, is it a good bet from data center focus? Any view on this, Shaina? If not Anantraj, then any other counter that you would recommend?
Yeah, so Anantraj is actually benefiting from the data center, what they are planning to set up over the next 1 to 2 years. But I think it is pretty expensive at current levels. So I wouldn't add at current levels. And because the holding has to be 1 to 2 years. In terms of real estate, their business is contributing, but in terms of valuation, considering just the real estate business, it's expensive. So I will not add at current levels. And if I want to add for data centers, I would look at much lower levels. And I think the other stocks, you can look at CG Power if you want to look at a stock giving you that overall entry into that space. So I wouldn't say Anantraj is my top.
Okay, all right. So that's the view coming in on Anantraj. The next one that we have is on JTL Industries. Let's try to pull that up. This is from Prabhakar Rao, and he's asking about this counter. He's bought around 235 shares. He's not mentioned the buying price though, Kosh. Any view on the charts for this one?
Yeah, so not a counter that I've tracked very actively, let me be honest. But from a cursory glance and from the preliminary view that I have, the stock is holding above its key averages. Near-term trend, though volatile, remains bullish. So you could continue to hold. Resistance is around the 83 to 85 zone. Closing above that would be in good stead. So yeah, you could continue to hold. Stop loss, I would suggest somewhere close to the 74 mark.
Okay, the next query is from P. Sridhar from Hyderabad on JSW Energy. Should he buy, hold or sell? Any view on this, Shaina? JSW Energy.
Yeah, actually, I would say it's a hold at current levels after the correction. They have also got huge plans for putting up new capacity in terms of gigawatt, substantial new orders on hand also. So I would say yes, it's a hold. And here also, I would give a stop loss. I mean, I would keep a stop loss close to about 520 type of levels, just to protect your downside. But otherwise, I think it's a decent promoter group and decent hold.
Right. Okay, we've got Vijay calling us from Chennai next. Vijay, a very good morning to you. Go ahead, ask your question.
Very good morning to all. So my question is, I hold Private India share. Which I bought for average 295 rupees, and I hold 1,000 numbers of shares. So my plan is to hold this for next 2 years. Is it viable, or should I sell and exit?
Okay, Vijay, first of all, kudos to you because you've bought it at the correct levels. You've made significant amount of profit, so you've spotted it at the right price. I'll take this up with Shahina. Shahina, he's already sitting on profits of over 15 lakh rupees. What would you recommend? Book partial profits, continue to hold?
No, I would suggest that he continues to hold. It's a great stock to hold for the longer term, and he's got it at a decent price also. And even if you saw the FY26 numbers, they were pretty strong. They had both volume growth as well as overall turnover growth that was there around of 10%. EBITDA was higher. The profit EBITDA was quite strong actually, in fact, and profits also 21% higher. So I think they are in a good segment, doing well. I would say continue to hold for better returns.
Next query is coming in from Ahmed from Delhi. He has bought 50 shares of RailTel, bought at a price of 400 rupees. This was done around 10 months back. He wants to know the next 6 months view on this, Kush. Any view, should he exit now or average or at this level?
Yeah, I think it's a while, after which I'm getting a should I average kind of a query. By now everyone knows, right? So the view remains, don't average, especially the stock which is seeing such sharp falls and hasn't really recovered in a meaningful way. Even for the next 6 months, I am not sure if you'll really see your buy price on this one. The stock is respecting the 295, 290 support zones. So maybe with that as your stop loss, you can hold now. Any rebounds closer to about 325 and 345 kind of levels should be taken as an opportunity to exit. I wouldn't really add a fresh or even average right now.
All right. Okay. The next one that we have is coming in, and this is on Websol. This is from Sunil, who is writing us from Bengaluru. He's got it at the level of 107 and wants to know from a 5-year perspective if this is a good hold. Shaina, any view?
Yeah, so it's a small cap stock, and I would say, I would say that it is likely to consolidate for some more time, because if you see, the numbers also are, not that interesting. While they have done pretty well, if you say the March quarter, I would say in terms of size, it is small. Valuations also, it is slightly expensive. But given the fact that it has corrected, I would say that continue to hold. And you could look at targets close to about 105, 110 to review the stock.
Okay, the next query is coming in from Hyderabad. Murli, you can go ahead and ask a query.
Yeah, good morning to everyone. My
Good morning,
name is Murli. I'm from Hyderabad. Good morning. My question is to Kush sir. I keep watching from the pre-open session, the discussion, debate between Kushbora sir and Parag sir is awesome. I really enjoy that along with the three trios of NDTV. So my question is on Himadri Specialty Chemicals. I have 15 shares at an average of 310. So should I continue for another 1 year looking at the trend that the way it is going on and the chemical industry?
Okay, all right. Murli, got your question. I'll take this up with Kush. Kush, Himadri Specialty, any views on the charts?
That's so sweet. Thank you so much, Murli. And I will for sure pass on your love and compliments to Parag Bhai as well. I'm so glad that those synergies and those discussions they add so much value and are fun to watch. Trust me, they're fun for us as well. That's a good stock that you're holding. It's after a long consolidation period, it's given you a breakout, a move in the last month or so. I think you should continue holding on to this. The sector is also, by the way, starting to see some traction. For me, there is a rounding bottom formation breakout that will come above 675. It did attempt to go above that, by the way, but didn't close in a meaningful way. So from a year's perspective, I think you should very well continue holding on to this one. Like I always do, a deepish stop loss close to the 595 mark, but the trajectory looks positive for Himadri Specialty.
All right. Okay. The next one that we have is on GMDC. Pramod from Mumbai says that he wants a long-term view of at least 3 years on this one. China, what would you recommend?
Yeah. So basically, GMDC. I would say that they are doing pretty well in terms of overall revenues. And as we just heard, again, let me refer to the Prime Minister's talk that he was giving, that the focus going forward is going to be on mining sector. And there are a lot of incentives that have been given to the mining sector, and GMDC is expanding. So I would say while operational performance, there is some bit that they can improve on. Given the prospects for the medium to longer term and the mining leases that they are bidding for, I would say you continue to hold GMDC for the long period time frame.
Query is coming in from Tarun from Hyderabad, and he wants to know whether should he buy PFC at the current levels, or should he wait for a better entry point? Shaina, any view on Power Finance Corporation?
Yeah, so PFC, I would say that you wait as of now because of the merger and the implications that it will have from REC. And we will need to see what is the overlap in terms of the business and how they are going to handle it. So while we saw this in HDFC Bank, the merger resulted in consolidation for some time. So I would say don't rush into buy. Just let's wait and see the overall management commentary on the merger and then take a call.
Okay, all right. So that's the view coming in on PFC. The next one that we have is from Noreen, who's writing us from Dubai and saying a special thanks to both Shahina and you, Kush. He's saying that he really values your advice as well as guidance. He's asking about DCB Bank. He says he bought it at the levels of 182, and he wants to know whether he can continue to hold this from a slightly long-term perspective. Shahina, your view on DCB Bank?
Yeah, so finally I get one compliment. Thank you, Nasreen.
No, Shahina.
But I also appreciate.
Yeah. No. You have all the compliments from us and the entire team of NDTV Profit.
Yeah, but I also appreciate all of you guys, including Kush and you, and the way you anchor. So coming back to DCB, I think in terms of valuation, it is very attractive compared to the rest of the banks, and it's a small cap, 6,000 crores of market cap, slightly lower than that. But if you see price to book, it's 0.9, so it looks good from current levels, and it's basically quite steady given the fact that even they've managed the balance sheet quite well. So I would say continue to hold and hold it for the medium to longer term.
Okay, all right. So that's the view on DCB Bank. The next one that we have is on TCS and Infosys. Our viewer wants to know as to what should he do with IT stocks. I think, Kush, from a trader perspective, also IT stocks have not been on the radar for sure. But what would you recommend him?
Why TCS and Infosys? Correct. It's not that you can't really enter some of these names. I wouldn't really pick these. From the bigger names, I have HCL Tech, which actually looks good. And then you can also look at Persistent and Coforge, some of these names. So particularly TCS and Infosys, not in the favor. But let me also add one more name, Tech Mahindra, by the way. So amongst these four, you can take your pick. Massively oversold, could attempt a rebound, but keep strict stop losses.
All right. Okay. So that's the view on IT stocks. It's time for a rapid fire round now. Try to keep your answers as short as possible. Question China. The first one that we have is on M&M. This is from Padma, who's writing us from Bengaluru. Her buying price is 3117 and 53 is the quantity. Her time horizon is 2 years. China, continue to hold.
I would say hold.
The next query is on BHEL. Naveen from Hyderabad wants to know whether should he continue to hold the 50 shares bought at a price of 364 or should he exit. Kush.
We should continue to hold. Stop loss 370.
Poly Medicure is the next one. Ranjit from Chennai is holding 19 shares. The buying price is 2058. He's not mentioned the time frame, but any view on this, China?
I would say it's a hold. It's doing pretty well. Yeah.
The next query is for you, Kush. It's on Cupid. Panchakri from Karnataka has purchased few shares. Should he continue to hold or sell?
Yeah, there is no reason to sell. Continue to hold, but don't add a fresh. Stop loss 185.
All right. The next one that we have is coming in, and this is on Titagarh. Venkat Ramanan has bought it at an average price of 820. 300 shares is what he's holding. From a 2-year perspective, Shahina, what is your recommendation?
2-year perspective, it's a hold. Yeah.
Okay.
The next query is for you, Shaina. It's on Canara Bank. Jassi from Vijayawada is holding 30 shares at a price of 111 rupees. Can he continue to hold this counter for the next 3 years?
Yeah, hold. Actually, the price to book is very attractive. Just about 0.9 times 1 year forward. So it's a hold.
Okay. The next one is on RVNL. Madanlal Shaw from Chennai has bought 50 shares at the level of 360. Continue to hold. Book losses. Kush.
Exit.
The next query is for you, Shaina. It's on SJVN. Vinay from Bangalore has bought 1,451 shares at an average price of 117. What's the long-term view? Should he continue to hold this counter?
I would say switch. Switch from current level.
All right. The next one that we have is on CAMS. Kaushik from Vadodara has got 50 shares at the levels of 672. A technical view on this one, Kush?
You could hold, keep stop loss at 725, but there's not enough momentum, so you might want to exit at slightly higher levels, by the way.
Okay.
The next query is for you, Shaina. It's on Minda Corp. Astha Sabarwal is holding few shares, bought at a price of 660. Should she sell or hold?
Hold at current levels.
Okay, the next one is on BLS International, a 6 to 12 month view on this, Kush. Our viewer has 100 shares. This is, by the way, Jaya, who has 100 shares at the levels of 276. Hold, exit?
Exit.
The next query is for you, Shaina. It's on Bharti Hexacom. Wahida is holding 130 shares, bought a price of 1,863. Currently, she is sitting on a loss. Should she hold or exit?
Hold as of now.
PG Electroplast, Harvinder has bought it at the levels of 852. 3,100 shares is what he's holding. Continue to hold. Average, Kush.
This is one, by the way, that you can average. Continue to hold. A positional stop around 500.
Okay. The next query is for you, Kush. It's on HBL Engineering. Uma from Bangalore has bought few shares of this counter. How long will it take the stock to hit 900 rupees is something that she wants to know.
12 months, maybe a little more. Right now it's consolidating. You can hold. I would suggest a stop loss close to the 725 zones.
Bank of Baroda, Shahina, our viewer is bought at the levels of 304. 29 shares is what Vardhan Raj has been holding. Vardhan Rajan, by the way, is holding. He's a long-term investor, he says. Continue to hold.
Yeah, Bank of Baroda is another stock where the valuations are interesting. So yeah, hold.
Next query is for you, Kush. It's on IRFC. Bora is holding 575 shares, bought at a price of 26. Should he continue to hold?
No, you should exit this one also.
Technical view on Godfrey Phillips, Kush. Priyanka Asha from Mumbai has bought it at the levels of 2117.
Yeah, you should continue holding on to this one. Mild consolidation on low volumes could rebound. A stop loss around the 2000 mark.
The next question is for you, Kush. It's on Tata Capital. Satya is holding 285 shares, bought at a price of 350. From medium term perspective, what's your view?
Again, this one's a hold. Momentum missing. Stop loss 335.
Okay, the next one's on ONGC. 360 shares is what our viewers bought at the levels of 322. This is, by the way, from Ramanan. Shaina, a long-term view on this one. 2 years is what his time horizon is.
I would say it's a switch. I don't suggest you hold ONGC for
Switch
the
to
medium
what?
to I would suggest the some other sector rather than the oil sector. There's so many other sectors that are doing better, and there's a lot of volatility in this overall segment and what the government policies are. So I would say switch to something in defense, safer.
Okay. The next query is for you, Kush. It's on Ola Electric. Sunny is holding few shares. Should he continue to hold?
Buy price?
No, didn't mention.
TK, but not my favorite pick. But hold with a stop loss at 38. Strict stop loss at 38.
Alright, so that's the view on Ola Electric, but unfortunately we're completely out of time on this edition of Ask Profit as well as the Rapid Fire round. Shaina and Kush, thank you so much for taking out the time and helping us answer all those queries. Viewers, like I said, we're completely out of time on this edition of Ask Profit, but do stay tuned in because KYC comes up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies and also why these stocks are buzzing in trade. And I've picked up a very interesting buzzing stock. And of course, there are some macro factors also at play. But before that, Try to guess the company which we are getting today in KYC. It's an oil and gas exploration company which we are talking about. Yes, it's near that drilling and exploration segment. And why? Because it's a key contractor of ONGC, and recently the crude prices have shot up near that $80 per barrel. So that is one important hint as well for you, and right now that's happening. So this is a very hot topic. Stock itself has been a multi-bagger. Last 5 years the stock is up 9 times. Try to guess the company and think a bit deeply. That's also a hint, by the way. The company in focus is Deep Industries. This is the company which we are talking about. We had got them in KYC 4 to 5 months ago as well. So we'll try to understand, has the story changed or not? The key questions to be asked to the management of Deep Industries would be the Brent nearing that $80. Is it positive for the company and the industry as a whole? Does the momentum come back? That's the key question to be asked. Second important question is the overall domestic oil exploration opportunities, how things are moving. Is there any inflection point coming in from the industry? That's what we'll try to understand. The third question is the PC contract and order flow outlook. How has that come in? Right now, roughly 3,000 odd crore rupees of outlook is there. Also, another question would be the capex plans going ahead. What have they marked going ahead for the coming years? Next question we'll try to understand from the management is the growth outlook for the next 3 to 5 years. This is a long-term story, but is there any change at play? And the demand trends and the client confidence. This is one of the most basic thing, but the most important thing to ask. This is how businesses go ahead. And also the rig deployment plans. That's the last one. And the management who will be joining us today to give that entire picture will be Rohan Shah, Director of Finance and Group CFO of Deep Industries. But let's try to understand what's the company all about, what are the key details about it. And remember, they already are having more than 30 years of experience. They incorporated in 1991 in the business of oil and gas field services. But let's get into a little bit more deeper into it. They also ventured into the offshore and oil and gas support services. In January 2023, there was an acquisition at play for Dolphin as well. That's why. So now this is the 360-degree picture we are trying to get into this company. So this was this acquisition, and the street is quite bullish on this acquisition. But let's understand this overall, service pack. What do they actually do? They provide air and gas compression services. There is, of course, the drilling services and the workover services. This is regarding the entire ecosystem I'm talking about. There is gas dehydration services and the expertise they have in integrated project management services. So in total, 4 important services they are catering to. Now the service portfolio is moving towards the post-exploration value chain. That means that's on the higher margin side also if you're trying to analyze this company or the industry as well. Of course, there is some cyclical at play, but there is a structural change also which is happening. The order book is 3,000 crore plus, and the 3-year CAGR is almost very strong, 40% odd, and this number shows a good revenue visibility. Key clients, of course, the larger names: ONGC, Oil India, Cairn, GAIL, Reliance. These are the large companies which the company is catering to. Also, the asset base they have is of roughly 20 onshore rigs. That's what we'll be talking about. And also the other group of assets includes 6 drilling and 14 workover rigs with more than 80 gas processing units. And after they process these units, the business model is very interesting. The EPC contract moves into charter hiring as well. So there is some kind of a synergy at play for this counter. Now they have recently received 2 orders. Combine them both, it's roughly 133 crores coming in from ONGC, and that is after the Q4 earnings announcements were there. And fourth quarter, the commentary was slightly mixed. The write-off of legacy trade receivables is something which they had spoken about, and the Andhra Pradesh leak which was there, that might delay the project timelines. This had come in the fourth quarter on their commentary, but nevertheless the commentary was still quite bullish, especially on the government push. You can expect some more incentives in this shipping space. Also, let's talk about the other numbers, the Q4 commentary. The bidding pipeline, that is very strong, and that's, of course, we are looking at the order book and then also talking about it. So these are the important commentaries which we saw, but there are key macro triggers which you should know. The Indian oil and gas capex that's expected to exceed this $100 billion mark by 2030. That shows how great, this momentum, this theme is. The natural gas demand in India is projected to grow at 60% by 2030, and the company itself would become one of the key beneficiaries. The geopolitical shifts may unlock new offshore opportunities, and that is what the Indian players are looking at, especially with how Middle East is trying to rebuild itself, and this is the main reason what may work for the company. And now let's look international, high margin new products. The second reason why things might be better is the strategic diversification at play and the overseas operation. This is the trend which is being seen on a long-term basis. Now, strong generation coming in the cash flows and the reduction coming in the receivables as well, and this is very much important when you are getting a company like that, because there's a lot of order movement at play. They're moving towards much more value-added service and full integration in their services. So that's definitely a good point, and also the positive corporate developments are expected in the next 3 to 6 months. So we'll be watching out for this counter. But what may not work? There's a lot of work at play. There's execution risk there in this kind of a business model. And one more reason is there, and of course that's an accounting move, legacy receivables from Dolphin Group, and that is an overhang in the stock. But nevertheless, as a good smart money, is it entering in this quarter? That's what we'll try to understand. But another important reason to understand our show are the ratings which we give. We have a fixed set of ratings. At times we move these ratings around depending on the industry, and as of now these are the core numbers which we judge a company. And not only these numbers, we also talk about how the shareholding, street cred, how they move as well. We get the valuations in, we compare them with the peers, and of course the outlook, mid-term or long-term or even short-term. And remember, Brent crude rising up right now is something which is positive for these companies. Let's start with the first one, the income statement, what has happened. And largely the FY26 has done really well. See a good significant jump coming in, and the PAT is also doing really well. Look at that, and 3-year CAGR numbers, look at it, that's also pretty strong. If you look at the jump, I would just want to get into 79 crores, and now that is more than doubled, almost 2.5 times of PAT. So this is why we are seeing good re-rating in the counter, and net the numbers are also pretty strong for FY26 for the fourth quarter. So I'm going to give this a thumbs up as well. Let's talk about balance sheet, what has happened. In balance sheet, it's very well capitalized. Borrowings is also on the lower side. Cash bank balance is held up nicely. And for a company like this business model, the company's overall ratios have been maintained, and that is showing a good strength in this counter. So I'm going to give this a thumbs up as well. So the numbers are pretty good. Income statement I spoke about, balance sheet I spoke about, but let's see the cash flow. How much things have changed in FY26, because after execution for these companies, cash flow is the most important thing, and this is a significant improvement, 50% increase from FY24 from cash flow from operations. The conversions also have been pretty strong, and net cash flows is for an industry like this, it's a high working capital industry, and there was an acquisition at play, some receivables being written off. So these are the important factors to actually judge this company. And right now the cash flows have been pretty strong on the operational front. So I'm going to give this a thumbs up as well. After this, let's talk about return ratio. Return ratios have been really strong. I've been mentioning this company on the return ratios, how things have panned out. Larger capex they are not doing, and now they are moving into good products, the high margin ones, and the momentum is there. From FY25, look at the jump coming in. For FY26 at 19%, ROC has been really strong, and ROE also the story remains the same. Look at the jump which has come in from 12%, the jump has come into 22%. Now the question is, will this sustain or not? That's something we'll try to understand as we progress through the year. We are almost finished. The Q1 numbers are going to come in some weeks, so we'll try to understand, but as of now the return ratios are very strong. So a thumbs up. Let's talk about the shareholding, what has happened. Largely there isn't much change there. A little bit of, I feel there should be some more FI and DI participation. There is, but it's quite limited, around 3% So a little bit of concern, but let's give it a neutral rating right now. Nothing much has changed. Let's talk about the street cred, how much stock has moved And of course, in the medium term basis, there has been mixed trends. Why I'm talking about it, from March lows, the stock is up 36%. But from 2025 highs, the stock has still corrected and is down 21%. In last 1 year, if you have put money in the stock, you have literally made just 1%. But if you're a long-term investor, congratulations to you. Last 5 years, it's a multi-bagger and the stock is up 9 times. That's the stock we are talking about. So net, it's still a neutral rating when it comes to the street cred. Let's try to get the valuations, how things pan out. We have been talking about Jindal Drilling, Deep Industries. All of these stocks are getting a positive momentum because of the Brent crude going up. But how the valuations stack up? The 5-year peak numbers are at the higher side, 32 times, 55 times. But current numbers are still, look at that, it's quite cheap, the current PE for the company. And if you just compare that slightly with Jindal Drilling, they're definitely a slightly expensive, but nevertheless I would still give the valuations quite attractive level for the company if you judge them. So it's a thumbs up for me on that. Outlook, let's get in those numbers as well. The management has guided for a 30 to 35% revenue growth in FY27. FY28, the revenue growth would be similar trajectory. They're targeting the 30 to 35% band. And if you understand more, the ramp up of the PEC contracts, the expansion of all the 4 business verticals, and that's the management commentary coming in. Kanda commercialization, that's expected to happen in the second half of FY27. And the last point I would like to talk about is the more contracts are expected from ONGC. 2 already announced in a month, and overseas opportunities coming in. But yes, the write-off of legacy and the execution risks are definitely there. So I'm going to give this a neutral rating for the outlook segment. But let's give you the entire picture of the entire KYC ratings for the show. What is it? What does it mean? How much numbers are coming in? And right now, these are the 4 basic ones. The company is doing pretty nice across all the parameters which I had mentioned. Shareholding has been flattish and street cred also flattish because medium term, long term, the returns are diverging. It's of course a multi-bagger, 9x in last 5 years. Valuations quite attractive, and the outlook is short term. There might be some issues, but the long term story is very strong. So the net, the total numbers for Deep Industries in my analysis at KYC comes to 6.5 out of 8. This is the number I'm talking about. It's one of the highest numbers which we generally give to a company, and last time also the company came in the month of March. Let's get you that rating also, how things have panned out, and the company has done well both in the month of March as well as July. That means they are maintaining overall their growth momentum, and this time the cash flows have done better. On the other hand, a little bit of concern on the receivables. So this is the historical ratings for KYC. But to get in more flavor, we will be joined by Rohan Shah. He's the Director of Finance and the Group CFO for the company, and he has been in this profession, in the expertise for over 20 years of experience, and with the company itself, he has been associated by more than 16 years. So it will be a very interesting conversation with the management, but after a short break. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should
Welcome back to KYC. Now we are joined in by Rohan Shah, the Director of Finance and the Group CFO at Deep Industries. Good afternoon, Rohan. It's always a pleasure to have you with us at NDTV Profit. And now the Brent crude is boiling again. It's near that $80 per barrel mark. And the entire oil and gas space is again buzzing. We are thinking about a rebuild happening, which is of course happening in the long term. But right now, Brent crude is up. How positive is it for your company and the industry? We'll start with that. Rohan.
Hi, good afternoon, Sharadji. So, of course, increase in Brent crude price will definitely improve the market sentiments, and the companies into oil and gas will definitely have a good benefit out of it. See, in today's changing global geopolitical scenario, the achieving efficiency of domestic production is very critical now, and I think our government is constantly giving thrust on increasing domestic production. We, as in part of oil and gas industry, with our value chain services, we are rightly aligned with our government's initiative in increasing domestic production, and we are committed to contribute towards country's energy efficiency.
Right. Of course, last time we spoke about the entire, your business outlook, but the domestic, let's start with that. Of course, we'll go after the new inflection point conversations for the global way as well. But the domestic oil exploration opportunities, how things are panning out, what government push is happening. If you just give us an industry view on that.
Of course, as I said before, government is pushing hard towards increasing domestic production, and not only new discoveries, but from existing fields as well, they are pushing towards higher production. So our production enhancement contract is one of the example where they are pushing it to enhance the production from existing fields as well. So overall, the push is very much visible, and they are putting very good initiatives towards enhancing the production.
Right. Just speaking of this PC contract, what does this actually mean? Just to get into our viewers who are understanding your industry for the first time, and also the order for outlook. I presume it's around 3,000 crore right now. So just give us the flavor of your order flow guidance, which sectors the orders are coming, and what is actually a PC contract?
Right. So PEC is termed as production enhancement contract. So under this contract, we have been asked to enhance the production from existing producing fields. So with applying various production enhancement techniques, we'll have to improve the production from existing producing fields. So that's again a good initiative by our central government and our PSU clients to enhance the production from existing fields itself. With regards to order book, as you rightly said, our order book has been being robust and revolving and being steady at around 3,000 crore. So for us, out of this 3,000 crore, we are executing more than 50 different contracts. And we have been able to maintain this order book despite putting revenue growth of more than 30% year on year.
Interesting. Rohan, let me give you that perspective, that the growth outlook which you spoke 1-2 years, but I want to understand the long-term, story. It's been a multi-bagger for a lot of investors, your stock, but we want to understand next 3 to 5 years, what are the growth triggers looking like and what the company is doing towards it?
Right. So the existing order book clearly gives us a revenue visibility of next 2.5 to 3 years itself. And with increasing bidding pipeline, which is getting converted into orders very regularly for us, it will give us visibility beyond 3 years as well. With an increase in production under production enhancement contracts, adding few more assets under our offshore services segment, and of course, our existing segments of integrated project management and gas processing are also increasing quite interestingly. And with growth from all four verticals, we believe that we should continue to grow more than 25-30% for next 3 years.
Right, that 30% mark we had mentioned earlier also for FY20, that 25 to 35 right now. This is the growth momentum looking like. But the rig deployment plans, how are they looking like? And is it just domestic or is it international also?
So currently we are focusing on domestic market itself because our 100% rigs are utilized. And today the scenario is rigs are under short supply. And we believe that there is a huge demand and potential in the market for domestic industry to add quite a few more rigs. So we are focusing on that.
And the international exploration, Rohanji, is something, which, your management has spoken about. There's an inflection point happening. Indian companies going abroad, giving a lot of services. So we wanted to get a flavor of that for your company.
Sure. So we are there in international market through our overseas subsidiary based out of Dubai. And we are catering countries like Egypt and Oman and all. So there is a huge potential again in overseas countries, and considering the current scenario globally, there is a good amount of demand. So we may increase our overseas operations in onshore fields in coming future. And with respect to offshore, we are already there in global market with our offshore services, and there also we have a good potential to grow.
Right. So a lot of expansion is happening. We spoke about the four verticals also. But Rohanji, I want to understand, you're doing so much. Is there any fundraise on the anvil if you're thinking, or will it be through internal accruals only?
No. So if you'll see my financials, we are generating some handsome amount of cash year on year. And with our existing capex plan and internal accruals, probably we will be able to fund our capex through internal accruals and to some extent debt as well. So as of now, there are no fundraise plans.
Fundraise plans, internal accruals. You mentioned about the capex. I just wanted to understand if you could share that capex amount for, say, FY27, 28, which is already earmarked.
See, in our business, capex is always backed by order. So we always do capex once we get a firm order. So for us, estimating capex beyond 1 year is little difficult. But of course, in FY27, we are aiming to do capex of around 250 crores, of which almost 150 crore would be done towards production enhancement contract, where we are targeting to drill few new wells to increase the production with an additional pace. And rest would be for our equipments, rigs and gas processing.
And Rohan sir, any new product categories which you think we are going, because we had mentioned about, those 3 or 4 important areas which the company is already functioning, but there's a lot of R&D at play and a lot of exchange of IP which happens with global companies. I wanted to understand any new product categories you are working on, and if yes, I don't want a lot of details, but which segment do you think will be, the dark horse going ahead?
See, in addition to this entire value chain, probably we have covered more than 70% of post-exploration value chain in our service offerings. So, of course, on continuous basis, we are exploring various areas which are aligning to our business and its interest. So, we are exploring an opportunity in green hydrogen as well, but they are at very primary stage. So, I don't have anything much to say on it.
So green hydrogen, that's at a primary stage. That's pretty much interesting. And that technology is also used, in your oil and gas segment as an ancillary. So this is something which we'll talk about it, but maybe when you come to KYC the next time, you already have come twice. And just to give that perspective, from last time till now, there has been a good improvement in the cash flows, which I have seen. And also, those legacy issues seem to be off as well. And now there is a good momentum coming back as the Brent crude prices are rising. This is pretty much interesting, Rohan, and it's always a pleasure to actually have you with us at NDTV Profit, where you explain us much more on the industry and also on the company. So thank you very much, and Rohan, best of luck for the future.
Thank you, Sharad. Thank you.
So that's the management of Deep Industries. The stock has been trending. A lot of drilling stocks are doing well as the Brent crude prices have gone up. Largely, they are moving towards the high margin business. The legacy receivables are being written off. And yes, they have maintained their KYC ratings over the last 4 to 5 months and one of the highest numbers, 6.5 out of 8. So for these interesting stories like Deep Industries, keep watching KYC and yes, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be a chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business story.
Let's get chatting with Novo Nordisk, which is going to launch a disruptive product when it comes to diabetics insulin space. It is not going to be a daily product, but the injectables can be as comfortable and as effective in terms of the weekly dosage as well. We have with us Vikrant Shrotriya, who's the Managing Director of Novo Nordisk India, to talk about this product and more. Vikrant, always a pleasure to welcome you on NDTV Profit. First of all, A-Weekly. What is it that you're looking at in terms of India potential growth, because you have launched this product in the overseas market? How has been the response and the India potential that you're looking at?
Thank you very much, Nisha, and again, pleasure to be here. When we are launching this A-Weekly, you called it a disruption. I call it a solution for type 2 diabetes at least. And what we are looking is, we are actually looking at the patients. We are looking at the patients and why they deny insulin, why doctors are hesitant to start insulin therapy. There are a lot of psychosocial issues, but one of the issues by which majority of the patients actually don't take insulin is because of the fear of multiple injections, daily injections. And I think A-Weekly, as the name suggests, comes at the right place at the right time on Indian soil as a weekly solution for a insulin injection.
Yes.
So once a week, a patient can be initiated with a basal insulin, and that is also relatively better efficacious in terms of HbA1c and sugar control, and also very convenient. That's where a weekly stands for, and we are looking forward for this launch in India.
All right, so Vikrant, when we talk about diabetes, you know, convenience is one thing which is very critical because it's a daily thing. But on the other hand, also affordability. Now, many pharma companies have found the potential in this particular disease, which is rampant in India, and so do you. But in terms of price points, India is very sensitive to the pricing. And many affordable medication and insulin have really made it to the market as low as 1,800 rupees per month. How competitive will your product be?
Yeah, fantastic. And when you are on NDTV, you have to talk about a pricing point. People actually talk about science, innovation, access, and education. But you are right, you know, the pricing of a product is also very, very important in this market because it's not very important just to have the innovation. What is also very important is along with innovation, you are talking about the accessibility.
Yes.
And taking that into account, learning from semaglutide, we are pricing it very competitive. And it will be a pleasure to know that, you know, we have been able to get the pricing for the launch in India much more affordable than even the current analogs, many of the analogs, and it would be at a lower price point than those analogs, and that can become very, very affordable, something in the range of the initiation cost which patients can afford and doctors can prescribe.
All right, so efficacy as well as convenience and even affordable. That's the combination that you're really striking at. Now, pharma as a space is now segregated in two areas. One is R&D and innovation for growth, and the other is also sales as well as distribution. Given your might for distribution, in terms of this A-weekly really launching, you think, Vikrant, that this is going to be more of a volume play here in India than a margin play in terms of the intensity of competition that we are looking at there?
I really wish and hope for a volume play because we are one of the largest players when it comes to protein chemistry, whether it is for insulin. Every second person actually in India and across the globe, they depend on us, and it's a proud moment for us that they actually take Novo Nordisk insulin. And likewise for this, we are ready for any kind of a volume play, and probably the price point which we have got it for this global product early in the life cycle, because India is in the first year of the launches for this weekly, we have got it very reasonable so that more and more patients can get the access of this product. Imagine we have 100 million people with type 2 diabetes and only 6 to 7 million people take insulin. Approximately 25 to 30% of the people should take insulin initiation. I wish and hope with this kind of a pricing, with the kind of distribution network which we have got, the volume play comes into the picture. And the pricing is at that point that more and more patients can take it.
So Vikrant, another question on this regard would be, while penetration can be something that you can bank on, but till the volume play really happens, do you think that there will be pressure on the margins when it comes to this product, only because this market is so crowded?
I think as a pharma company and as a solution provider, that's one thing, and you'll be surprised. I mean, that's one thing. Of course, some of the finance people in my organization, they do look at it, but we are very patient-centric.
Right.
And of course, the margin becomes handsome when more and more people actually take these innovation molecules. But in the journey, this is the time where we would like to invest in science and education, leave the margin on the left side, and see that the launch of this molecule, the access of this molecule become much more stronger.
All right, when we digress from only this and look at the entire basket, GLP-1 potential is something that all the companies in your sector are really focusing on. What's your plan in this?
GLP-1 is you can say, mass hysteria in terms of the talking, in terms of the noise which is actually creating. But let me tell you some of the realities which are actually coming. With so many launches, the noise of GLP-1 has really increased manifold. I think there has been quite a lot of distribution network which has gone in terms of this drug at different levels and at a different price point.
Yes.
But I think it is just the start of the journey.
Right.
Okay. This is not even now 3 months, which has actually passed in terms of expiry of the patent, which we have actually seen. I think we have to wait for some time.
Right.
The way access and acceleration of these molecules will happen. But this is just a start of the journey. We are very happy what we are doing actually. We are very happy with the kind of movement which our brands are actually showing in terms of, you can say, patient benefits. That's number one, and also the volumes.
All right, and still a controversial subject now, GLP-1 and also the obesity side of it. But when we talk about semaglutide, and Novo Nordisk has really capitalized on that momentum. Now with things and the dynamics changing, exclusivity ending, what's going to be the next big game changer for Novo Nordisk, which is high on innovation with 25% market share?
I must say, Nisha, the exclusivity is over, but the quality, trust and reliability continues for these molecules. And as I said, this is just the start of the journey in India.
Right.
It's not even a year. Less than 0.5% of the obese people are actually taking these medication at this point of a time. While in the US, approximately 15 to 20% of the obese population have got the access. So there is a long way in terms of where these molecules will go. But apart from that, we are working on the next line of the therapies which are there. If you have heard about the oral semaglutide for the obesity, Wegovy pill is something which we are also waiting for. We are waiting for our next generation CagriSema, which is a combination product along with amylin. We are waiting for zenagamtide, which has to come. We are also working on once a week growth hormone apart from obesity and many of the other solutions which are there in laboratory. I think innovation is not going to stop. This journey of science and innovation continues in Novo Nordisk.
All right, so that was Novo Nordisk coming in with an innovative product, and that will also add to the competition when it comes to the insulin market. There is a shortage, there is a volume play, but the price sensitivity makes it more of a volume play than a margin play. Take a look at Biocon, that is big on really catching up with the momentum of the insulin requirement, and that is one company which is in competition with Novo Nordisk, which has been an innovator coming in this particular space. Apart from the GLP-1 potential that most of the companies are looking at, this could be one of the disruptors in the market as well. But looking at overall market, yes, there is recovery that is being seen all across the board. Nifty 50 at the particular moment comfortably above 24,000 level. But if we really take a weekly chart, look at that, and it is 500 points below what it had reached the highest levels in terms of this particular week. When we talk about mid-cap universe, that is really coming back with a much better recovery and is gaining about 1.5% in trade. In terms of the sectoral play, banking sector is taking a lead when it comes to Nifty 50 as well, and really taking the charge. Almost all the sectors are looking in the green except IT. So this is a snapshot of the market, more of a recovery from the onslaught that we saw yesterday because of the hopes of war really ending between US and Iran, really dashing, and crude prices elevating. Let's get chatting with a market expert then. Anup Maheshwari, the co-founder as well as CIO of 361 Asset, joins in now. Anup, always a pleasure to welcome you on NDTV Profit. Looking at the present market condition where we thought that the war situation is behind us and that particular fear really resurfacing, how do you track the momentum of the market in the near term now?
So Nisha, I think we're sort of getting used to this volatility daily and change of mood. So I think it's something that I think the market will start discounting over time. It won't cause the same amount of volatility as it caused right at the start. And I think one thing that's clearly been established is that it's in no one's interest for this to prolong over a period of time. Those pressures start building up, and then a resolution conversation comes up again. So I think markets are going to look beyond this. I think the worst of this is behind us by the looks of it. And we've also seen in conflicts, we've had the Russia-Ukraine war in the past. Markets come to a certain base valuation and then don't tend to fall beyond that. So I think we've already seen that take place. So now I think the focus will continue to shift more towards earnings than any of these macro conditions.
All right, you read my mind, Anup, on that one, because now the momentum really shifts to the monsoon impact, which is slightly better than what we estimated earlier. But there will be some crop deficiency, as we have been highlighting, and Union Minister, Agriculture Minister has also pointed out. But the earnings momentum has just begun. How are you really asserting the market momentum and the earnings expectations in this season, where one whole quarter of impact of the war was considerably seen?
So Nisha, again, so the markets will adjust for short-term non-linear events. So I don't think that will be focused too much on. I think the important thing is the earnings environment is definitely better this year than it was last year. So trend-wise, it's getting better. We're seeing pickups across a wide variety of sectors. What's really heartening to us is consumption is generally picking up as an overall category. Also, credit demand has been quite robust in the 15-16% range. These two variables are very important when we think about overall earnings growth. And it's sort of giving us more confidence that this is a year where hopefully we'll get to about somewhere between 12 to 13% earnings growth for the year. Now, like you mentioned, you touched upon the monsoon effect. Clearly, that we'll know only really August, September are the critical months, and we have to see rainfall at that point in time. And distribution matters more than the actual amount of rainfall. But if I look at it from a really cold earnings point of view, I think even while there could be some negative impacts of a poor monsoon on some elements of consumption, there are also positive impacts on some other sectors like power, cement, etc., that tend to benefit. So I think net from a core earnings perspective, a lot of these will offset each other, and we should get to that 12-13% earnings growth.
So looking at all these scenarios and some of the sectors offsetting the impact of the others, what are the sectors as well as the themes which are really looking attractive for the rest of the year when it comes to the earnings momentum?
Sure. I think, right up front is financials. That's always the sector that tends to drive markets the most, which is given the weight. And financials have borne the brunt of foreign selling. Right now, businesses, in financials generally are showing decent growth. Credit quality remains reasonably good, and valuations are a lot cheaper. So as the incremental effect of foreign selling reduces, I think this is a sector that logically comes back reasonably well and forms the bedrock for the overall market performance. So financials stands out clearly. Beyond financials, I think the more steady sectors, pharma has proven itself to be fairly steady, and contract manufacturing is a fairly big theme for India on a global level. So I think that's another interesting area. And then there are subsectors. So renewables is coming up in a big way. I think there's a lot of interest in that sector, but our focus would be really on the top two players, because I think over time there will be differentiation within that sector as well. And we like the models that the largest companies in that sector are providing. Over and above that, telecom is another sector that we've been optimistic on for a while, just given consolidation in the sector, slightly better pricing power available, and just improving cash flows and return on capital ratios in telecom. Within consumption, it's a very bottom-up scenario because while overall consumption is growing, but the wallet share shift has occurred. Some sectors are losing, some are benefiting. So it's very bottom-up in that sense. And finally, manufacturing, capital goods, sort of benefiting from the whole investment into, let's say, data centers, overall infrastructure, backing that up. I think there will be, again, pockets of investment there. So those are the broad sort of sectoral goals.
Right. So many positives coming in, Anup, but what's a no-go area? What's not looking good for investment? And what's your view on IT, which has been highly volatile as well, and the earnings have begun?
Yeah, so I think we've got to see IT as more of a trading sector for a while. I think there will be sporadic bounce backs and then consolidations. I think the challenge for the IT sector, as we all aware, is that in the next year or two, they have to readjust their models The internals of companies have to change, pyramid structures, domain knowledge, etc. And in the meantime, there are, the pricing pressure on repricing, the deflationary impact of what their current businesses will also play through. So adjusting for all of that, we think it's going to be a bit of a trading sector for a while. We have to allow companies about a year and a half to re-engineer themselves, after which we should get the benefits of growth driven by AI. But for now, I would say for the next 12 to 18 months, it probably would be more of a trading sector.
Not as bullish on IT sector, but Anup, you also mentioned the telecom sector, and a lot of fillip is really coming in also because of the momentum created by a new listing, and a large one at that, in this particular space. So including that, putting that into focus, as well as some of the other names, and there are big quality names with SBI Funds Management launching now, Manipal Hospitals, then NSC, Geo, all put together, and many startups also lining up like Zepto, OYO. How are you seeing the quality as an investor? What will be the key critical parameters to watch out for in terms of making the investment bet? And it's not just about liking the company, it's also at what price and the valuation. So an insight on how these IPOs and papers are getting priced, and what's the investor view on that?
Nisha, so that's a good point. We are going to see a fair amount of supply. I think there's anywhere between $25 to $50 billion of supply that will keep coming to the market over the next 12 months if markets remain open to IPOs in terms of interest. But the good thing is, if we look at some of the recent IPOs as well as what's coming around, I think pricing has rationalized a lot. And it's being driven more by domestic investors rather than foreign investors who've sort of been off the radar for a while. And to that extent, I think companies have been willing to leave something on board for investors coming into IPOs. So valuations, therefore, have been a little more rational. And again, the focus is on quality IPOs. I think poor quality IPOs are just not seeing enough interest and are probably going to end up getting deferred. Whereas the high quality IPOs will see a base level of demand coming through. So I think the market in that sense has become very, very rational for IPOs. And the supply will keep coming through in a steady fashion, but people will select, which businesses they're bullish on and which they're not. From a pure valuation point of view, I think people are focused on businesses that are fairly large, secular, consistent growth over a period of time with the right unit economics. And if you don't sort of meet those criteria, then it's sort of going to be tough to get an IPO out.
Right. Anup Maheshwari, many takeaways coming in on the market analysis as well as the momentum really picking up. It's always a pleasure chatting with you. Thank you so much for stopping by on NDTV Profit. Thank you.
Thank you.
All right, so market recovery really continues. Let's focus on some news developments now. And the Power Ministry has activated an El Nino contingency plan after a sharp fall in the hydropower output. In fact, thermal plants are on standby to really bridge any shortfall, while the government really monitors the rainfall and the reservoir levels closely. Sessa, my colleague, gets us all those important details. Tell us, Sessa.
Right, the Power Ministry has activated a contingency plan to manage any electricity supply risks arising from El Nino conditions, even as officials maintain there is no immediate concern over power availability. Sources say the ministry has reviewed preparedness with power sector PSUs, wind developers, discoms and transmission utilities with a focus on ensuring adequate generation, if weather conditions impact supply. Now, the review comes amidst a sharp decline in hydropower generation. Output fell 20.3% year on year in June, which is the steepest drop since February 2024. For the April to June period, hydro generation was down about 7%, reflecting the impact of dry weather. Officials say that the government is closely tracking rainfall, reservoir levels and hydro generation amid forecasts of weaker monsoon linked to El Nino. Thermal power plants have been asked to remain ready to bridge any shortfall, and maintenance schedules could be deferred if required. Now, at the same time, the recent rains have eased pressure on electricity demand. Peak demand so far in July has remained below 250 gigawatts, which is well below the record 270.8 gigawatts seen in May. Meanwhile, the Prime Minister's office has also reviewed El Nino preparedness and directed ministries to keep a close watch on the evolving situation while rolling out micro-level response plans. Sources say that contingency measures are already in place and there are no immediate, supply concerns.
All right. Thank you so much, Cesar, for getting us all those important details of national importance, actually. Now, quality glitch has really hit the select semaglutide batches at Dr. Reddy's. Let's get chatting with Varsha, who's getting in all the details and the market impact of that. The stock is down over 5% already. Varsha, what is the impact on the financials and what's the company saying?
Yeah, so two stocks, of course, in focus. One is Dr. Reddy's and the other one which is also in focus is OneSource Specialty, because it's a CDMO player for Dr. Reddy's. Now, why Dr. Reddy's is in focus? Because it has flagged quality issue in semaglutide batches. Now, semaglutide is nothing but an active ingredient which is used in Ozempic, which is used for type 2 diabetes and weight loss management. Now, the commercial supplies will be delayed temporarily. Certain semaglutide batches were found to be out of specification, which the issue is actually linked to the API used in the product. That's the active ingredient used in the product. Now, what the company is saying that the root cause investigation is underway. Corrective measures have been taken to ensure product quality, and the commercial supplies will actually be delayed until the issue is resolved. So overall, one is Dr. Reddy's, and we are seeing some kind of pressure in the stock, and OneSource Specialty will also have a negative impact considering the CDMO player of Dr. Reddy's, the OneSource it is.
All right. Thanks so much, Varsha, for breaking it down for us and putting perspective to that. Let's take it across to Jasmeet, who's been standing by with all the stocks to watch. Jasmeet, many really showing strong recovery today, but what makes it to your list today?
Well, Nisha, thank you for that. I have 4 stocks in my radar. The first one is IRB Infra. Well, this stock is in focus on the back of the business update. We did note in the month of June, the overall toll collection has risen to 28% growth on YY basis and crossed that 800 crore mark. If we look at the toll collection in the month of May, that's an uptick of roughly 25%. So it has done better in the month of June. While the next one is Phoenix Mills. Well, this company is also in focus on the back of the business update for the Q1 FY27. The overall retail consumption has grown 32%, and we have also seen a broad-based growth. Now, we look at the overall office rental, even that has increased the utilization to 72% versus earlier 70%, and that's what the stock is buzzing into, up about 4%. While the next two are brokerage notes. While the first one is Investec on delivery, while this particular counter maintains a buy on delivery and hikes the target price to rupees 610 from earlier 560. Now, they see a broad-based growth coming for this particular counter. They call out that the express parcel volume growth is something which will stay for the company, and even the part truck load, the PTL growth also is something to watch out for. Well, they also make a note that there are near-term few headwinds for the margins, but apart from that, they like the business. Now, the next one is HSBC on Syrma SGS. Well, they initiate a buy on this particular counter with a target price of rupees 1750. They call it a high growth manufacturing at scale. They do note that there are few areas where they are in the low margin business, there will be a competition for the company, but apart from that, they remain bullish on this particular counter. While they also mark the backward integration and inorganic expansion are the key to growth for this counter, while they give a target price of rupees 1750, calling it the highest on the street.
All right. Thank you so much, Jasmeet, for telling us all about the stocks to watch and keep on our radar for today. Now, sources do tell NDTV Profit that SEBI has approved futures and options contracts on the Nifty India FPI 150 index, giving foreign investors a new India-focused benchmark for derivatives trading. Nimit joins us with all the details on this development and its impact. Nimit.
Yes, SEBI has approved futures and options on NSE India's FPI 150 index. These will be rupee-denominated onshore contracts to complement the existing derivative indexes already available. Remember, the dollar-denominated versions of these already exist at Gift City for trade. Important thing to note is that derivatives form a large part of NSE's revenue. Last year, there were over 60% of that revenue in the last fiscal, and this is NSE's way of another option to boost their income ahead of their planned IPO, which is worth 30,000 crores. Also important to understand that this gives foreign investors another option to invest in India and aims to boost their participation in India markets. The product is designed to offer FPIs a more accessible India-focused benchmark.
All right, thanks Nimit for that, and it's time to say goodbye on Markets at 12. Thank you so much.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech, agri-tech, you name it. Young entrepreneurs are taking on risk, they are innovating, and they are keen to create value. And to me, that gives me the optimism of what India can be.
Hello and welcome to NDTV Profit. You're watching Trending Stocks from the NDTV Profit Suzlon studio with me, Mahima Vachrajani, and Sharad Dubey, who's standing by at the NDTV Profit market pit with all the action. that the markets have today. I mean, if you take a look at the markets, we've seen a good bounce back, Sharad, at least from the yesterday. We're holding about the 24,000 levels, at least for now, right?
Well, yes, you're right. Good afternoon, Mahima. And let's look at how the markets have rebounded. Yesterday, there was a sharp sell-off, which we saw in the last 2 hours of trade. A good gap-up opening, sustaining, and now we are trying to inch towards the day's high level, and that's a good sign. It's a healthy sign in the markets. Globally also, we saw that be the Asian markets or even the US futures earlier in the morning. And let's just look at the Nifty Bank also. What's actually playing out is largely the same story. All the interest rate sensitive stocks are doing well, and a good buying back in the private banks. Remember, the operational updates were quite strong, so there's a lot of bullishness and FIs are coming back. Mahima, almost for last 4 trading sessions, they have been buying in the cash market. Let's look at the factors, and it seems like global markets, assets are beyond Trump right now. Nifty Bank sees a very strong rebound. And going ahead, also looking at the other sectors, they're seeing a good buying happening. Let's look at the second important factor, the broader indices. They are outperforming the benchmark indices, and this is coming after a long time. Earlier, last 3-4 sessions, there was some index management, but now it seems like a good value buying is coming back in SMIDs. That's a good sign. Normalcy is coming back across the asset classes. So take a couple of days for that overall stabilization to happen, and this is one of the best lines to write in our analysis. The value buying is back at SMIDs just ahead of the earnings. Today the earnings of course kicks off, and that's also a point which I'll talk about. Strong technical strength back in the realty segment we had mentioned earlier in the morning, and now a good buying is happening. So very strong longs are being made in the FNO counters. The rupee has strengthened, and the yields, they have started to moderate as well. So the reversal of most of the stories are playing out from the last trading session, but today this is very important to track, and right now all the IT stocks are slightly muted ahead of the earnings, and the US initial jobless claims is also very much important to understand how things happen. And overall the global AI trade has stabilized, so it's not so much stress anymore. It is a recovery at play, but will it sustain or not, or will there be more rounds of stability? That's what we need to understand. Back to you.
Yeah, absolutely. Stability is something that definitely we'll be watching out for, especially in today's and tomorrow's trade, and whether we're able to sustain those 24,000 levels at least on the Nifty, and the momentum that we've seen in the broad end of spectrum today, will that continue or not, is something that we'll watch out for. But some specific names that are buzzing in trade today, trending in trade today, and there's your watch list. I'll start with the first name, that is NLC India, which has kind of signed a joint venture agreement. It snapped its 7 days losing streak, so this one definitely trading higher on the back of that. You have IRB Infra, where June 2026 toll collections rose 28%. In fact, we also spoke to the management, and we'll get you a snippet of what the outlook of the company is. You also have Suven Life Sciences, where it's seen its highest level gains since 2015 today, and that's something that you should keep on your radar, buzzing on the back of strong volumes also coming in. You have SH Kelkar next, where you have seen overall consolidated revenue growth of around 13.7% year-on-year basis, and it's buzzing on the back of that. Then you also have Redigare Enterprises, where overall the company has infused around 119 odd crores in the Infocare Health's business. Then you also have Phoenix Mills, where retail consumption has seen a good growth of 32 odd %. We also had a brokerage note coming in on this one, and has seen positive news, has positive moves on the stock on the back of both of these. Then you also have Tanfac Industries, which has reduced the size of its proposed preferential issue, and on the back of that you're seeing some moves coming in on this one as well. You have Standard Engineering Technology next, where the board meet is set to be scheduled, and this is for raising of preferential equity issue. You have Dr. Reddy's, where there has been quality issues that have been flagged in the semaglutide batch. In the back of that, we're seeing that Nifty 50 counter falling in trade, and kind of keeping the Nifty a little lower as compared to where it could be. But you also have, something like a delivery where Investec has maintained a buy, hiked the target price to 610, and it's buzzing on the back of that. And you also have Dixon Tech, Amber Enterprises, so your EMS stocks doing fairly well on the back of import duty being removed on several key raw materials. You also have solar equipment stocks that are doing very well on the back of the self-certificate deadline extensions. And lastly, you have ONGC, Oil India, etc., which are also buzzing on the back of crude prices, so rising crude prices. So that's with regards to where the watch list goes. But Sharad, let's try to pick some of these names with our tech guests as well.
Thanks a lot, Mahima, for that. We're joining in. We have Lakshmikant Shukla with us. Good afternoon, Lakshmikant. It's always a pleasure to have you with us. And we'll start a rapid fire round. And the stock in focus is NLC India. Interesting MOU coming in. Your views on the charts for this counter?
Good morning, Sharad. So NLC India a few days back has given bearish head and shoulder breakdown below the levels of 305, and then after in today's sessions we have seen some uptick. So I think levels of 290 short-term pullback move is expected toward the levels of 300, 350, where it could find a major hurdle. So one can play for the short-term pullback move.
Right, Lakshmikant, apart from this, NLC India, another stock I would like to talk about is definitely going to be Religare Enterprises. The stock is doing well as fundraise have started coming in. Seems like a big overhang in the stock might be coming out. There's a demerger also, you could say, at play as well. It's a special situation, to be honest. So your views on the technical charts, do you think on a monthly basis or a weekly basis there is more breakout in this counter?
Yeah, this has shown decent amount of rally after giving falling trend line breakout of the levels of 230, and then after it has started moving higher. Now it has been forming pole and flag pattern on the daily chart. So upside breakout is expected of the levels of 280. Once it surpasses this level, then we could see bullish momentum in this stock and could push higher toward the levels of 300. So I'm expecting big breakout of the levels of 280, and one can keep the stop loss of 265 on the downside and can expect this breakout on the upside above 280 and target of 300 in the upcoming sessions.
Right, and the next stock is Ventive Hospitality, a good acquisition coming in the Mumbai metropolitan region. Street liking that acquisition as well. Do you think there is some momentum in the stock right now, or it's still in a consolidation phase?
So I'm expecting that the stock could trade in a consolidation phase. From last few sessions, it has been facing resistance from its previous swing high, and short-term and long-term moving averages. The strong hurdle is seen around the zone of 645 to 650. Till it holds below this level, I think consolidation will continue. While on the lower side, I think 610 to 600 will be the key support area to watch it out for this stock.
Stock of Suven Life Sciences I'm talking about. That stock has also done well. It's up almost 7%. What are the technicals suggesting? Your view on that?
The stock is already trending higher. Today it has given consolidation breakout of the levels of 335 and also trading up the same. So I think positive momentum will continue. Near-term support is seen around the levels of 320. I think holding these levels, we can see more upside in Suven toward the levels of 348 to 350.
Right. So that's the end of the rapid fire round. Over to you, Mahima. What are the Google trending stocks?
Yes, Shad. So let's focus on which are the stocks that are trending on Google currently. Let's try to pull that up. I think we have names like Kalyan Jewellers, which is also buzzing. There's also Vedanta. There's NAC Packaging, a very recent listing on premium. You also have Vedanta Power, Geo Financial Services trending very well in trade today. I think Lakshmikant, a very good afternoon to you. I'll take up two names. One is Kalyan Jewellers, and the second one is Vedanta from that list. Kalyan Jewellers saw a knock in trade day before yesterday, but since yesterday it's been gaining quite significantly, 25% of an uptick just in the last 2 days, right? Do you think the momentum is here to stay? And secondly, on Vedanta, what are the charts indicating?
Hi, good afternoon. So in today's sessions, Kalyan Jewellers has given a strong breakout and surged around more than 15%. Now it is hovering near its 200 DMA. I think that would be the key levels to watch out for Kalyan Jewellers. upside breakout is seen around the levels of 440. So I think that would be the major concern due to the presence of this 200 DMA. If it sustains well above this level, then after we will see upside momentum to continue. I think one should wait for the dip toward the levels of 420 to 415. That would be the good zone from where one can initiate a long position in it and can expect this upside breakout of the levels of 440. Then after we will move further higher momentum in Kalyan Jewellers toward the levels of 460 to 465 kind of range. Now talking about Vedanta, so from last few days, Vedanta is consolidating below its long-term and short-term moving averages, and I think my view is bearish. If it takes the support levels of 270, then further could be seen in Vedanta towards level 260.
Kalyan Jewellers. But it's the earnings seasons, the first earnings from the IT space. We have TCS with it, and it's the usual, or is there something more to it? To decode that, we are joined in by Jasmeet. Jasmeet, this time it feels like IT sector is going to have not so good quarter.
Well, you rightly said, we are expecting a flatted Q1 for all the IT companies, but starting with the TCS. Well, for TCS, we're expecting a muted to flat quarter in this particular Q1. What we're seeing is the revenue expected to rise by 1.48%, while the margins could see a downtick by 100 BPS. Well, the margin downtick is coming on the back of the wage hike, which kicked in the month of April. So that will have some impact. But on the other hand, we also have rupee depreciation, which should support the overall impact on the margins. While if we look at the net profit, that could see a slight downtick by 1.2%. Now, in terms of the key things that will be in focus in this particular quarter will be the overall commentary and the guidance. Given TCS is the first company to report its Q1 result, so whatever guidance TCS sets out, it will set an overall context for the IT companies. The second thing would be the deal win. When Q4 we did see a record quarter for the company at about $12 billion of deals, but in this quarter we're estimating a $10 billion. So we'll see how it pans out for the company. While the third thing would be the AI revenue. Company has started to give out its AI revenue, and how that has changed from the Q4 to Q1 will be something to watch out for. And the last one would be the overall acquisition the company has planned to do in this coming year, and what areas they're focusing to acquire entities.
Thanks a lot, Jasmeet, for that. But the only important thing is AI. That's everyone's mind, and of course the impact, be it global or domestic. But to understand more, we are joined in by a fundamental guest, Sneha Podar. Good afternoon, Sneha. It's always a pleasure to have you with us at NDTV Profit. Jasmeet was discussing about TCS. The earnings are coming in today, expecting that flat or a negative reaction might come in when it comes to the earnings. How are you seeing TCS and the entire IT pack as a whole, especially the large caps, Sneha?
Hi, good afternoon. So as you rightly said, TCS is expected to report muted numbers, but all the eyes would be on the expectation, what kind of guidance they give for FY27, and when it's expected for the business model to be AI ready. That would be the kind of outlook which people would be really watching out for. So overall, the commentary on the demand environment and by when can we expect the deals to be AI-led deals and not the legacy business-based deals, that would be really key important thing to watch out, because that will set the tone for the entire IT industry. See, overall, all the companies and numbers, there's not much expectation. The only outlook which would be awaited is how long will it take for the IT industry to be ready for the AI-driven deals, because that would actually let the acceleration in the revenue which is currently missing. So that is the main thing to watch out for all the IT companies in general.
All right. So we are talking about Dr. Reddy's also, and the stock is down, and a kind of adverse news flow coming in on semaglutide. But what's that news? We have Varsha with us to decode that. Varsha, big fall, overreaction.
Yes, absolutely. I won't say overreaction, of course, but everyone was betting on GLP-1, and now what Dr. Reddy's has said that it has flat quality issues when it comes to semaglutide batches. Now, what is semaglutide? It's an API, the main ingredient which is used in your Ozempic, which is the weight loss drug. And Dr. Reddy's has flagged quality issues in semaglutide batches, and the commercial supplies will be delayed temporarily. Now, certain semaglutide batches were found to be out of specifications, and the issues is linked to the API used in the product. Now, what is the company's cause? company's response, company saying that the root cause investigation is underway and the corrective measures have been taken, while the commercial supplies will be delayed until the issues is resolved and there is no impact on patient safety. But overall, yes, it's a negative news considering the market was pegging a huge growth when it comes to semaglutide, and now the supplies will be delayed. Also, one source will also be in focus. So the stock is up, but one source is in CDMO partner for this product for Dr. Reddy's, and hence you should also keep a watch on that. And today's con call at 4:30 where Dr. Reddy's will clarify on all these issues.
Thanks a lot, Varsha, for that, and we will be also on this con call and give you those updates as well. But Sneha, just wanted to get your views also in this. Dr. Reddy's stock has taken a negative beating in the day's trade, but the story of GLP-1, is this a structural one? And if yes, how are the Indian pharma players positioned?
See, the story of GLP-1 is definitely a structural one because the obesity is rising across the world, and it's rising at a very rapid pace. So obviously, whichever pharma companies which is able to capture this early will be the one which would be beneficial. Now, this setback which has come for Dr. Reddy will definitely lead to a delay in the in the revenue generation from the semaglutide drug, and moreover this will further delay the launches in some of the other global markets which it was planning to do in FY27. So that would be a major negative headwind. Along with that, if we look, already the company has been struggling since FY26. Till FY25 the company was witnessing very robust growth, but then FY26 they saw a major setback in their overall profitability, and that was because of the reduced profitability in the Revlimid profitability, and also because there was some delay expected in some of the markets for the semaglutide launches. So now this will further get aggravated with the current news flows. Also, the generic portfolio is witnessing the pricing pressure, which will result in poor numbers for FY27 as well.
Okay, got it. So that's, of course, the view coming in on Dr. Reddy's. The stock taking a knock on Nifty 50 stock, now down by about 5% at the day's low point. But the other one in focus is IRB Infrastructure. Now, this has reported its highest ever monthly toll collection, with June revenue rising 28% year-on-year, led by traffic growth, tariff revisions and asset expansion. Earlier today, we spoke to Anil Yadav, CEO of Business Development at IRB Infrastructure, listening to what he had to say about the outlook of the company.
One of the aspects that stood out in the fourth quarter was the fact that construction revenue declined. But the anticipation for FY27 is, as I understand it, and please correct me if I'm wrong, 3,000 crore rupees. What are going to be the driving factors for that number?
I think if you look at the IRB today, we have 94,000 crores kind of asset, and IRB's primarily valuation is derived from the asset business, not from the construction business. Construction is the support business, and typically what we do in the construction, we do EPC and O&M of our own project. And gradually, because we have today 28 assets, and gradually that O&M order book is building up. And today we have an order book of almost 45,000 crores, and that provides a visibility for 15 years, because O&M is a dated order book and have a stable margin. And it's a kind of annuity kind of business where every year, considering the inflation, your execution will increase. And on the same line of the project, also your execution will increase. And further, you are adding a project every year, so then that will further boost your order book. Now, coming to the specific numbers, this year, definitely the EPC execution will be close to 3,000 crores. And in terms of the order visibility, going forward, it will be a largely execution of our O&M order book, and which is around 1,500 crores presently. And we expect this to reach around 3,000 crores kind of execution in next 2 to 3 years.
Well, so that's a pretty interesting take coming in for this. But going ahead, Sir, what do you think would be the toll collection guidance, how the growth will be looking like? If you could just give us that perspective. Yeah. Oh, Sneha, for IRB Infra, if you could just give us that important update coming in.
Okay, sure. So in case of IRB, definitely the toll collection numbers has been really great, and they have some of the really marquee projects like the Ganga Expressway, which really underpins the growth visibility for, over the medium term. The overall EPC order inflow is currently subdued, but then the company is it is strategically trying to focus on building the O&M order book, which will provide the long-term revenue visibility. So in fact, their target is to take the contribution from the O&M revenue to almost 50% from the current 25-30%. So that will provide stability to their numbers and reduce the volatility which is there because of the EPC projects. So overall, looking at the attractive valuations and the strong order book, we are positive on IRB Infra, though the subdued order inflows at the current levels might keep the stock under check.
All right. Okay. So that's the view coming in on IRB Infra. I think the other one that remains in focus is Syrma SGS. Now, HSBC has kind of given it a target price of 1750. What they believe is that high growth manufacturing at a scale is leading EMS, overall as a sector and the company with a diversified customer base. And what they're saying is that the original design, manufacturing expertise, backward integration, and inorganic expansion is the key to growth from here on for this company. Plus, strong competition in lower value segments is a concern. That is something that they will be watching out for. But the target price of 1750 that they've given is the highest on the street for this particular counter, and that's why we're seeing gains of almost 5% coming in for this one. Sneha, a quick take on Syrma SGS and any other in the EMS space that you like.
Syrma is undergoing a structural transformation in its overall business model, and they're trying to move towards the value-added ventures. Recently, they forayed into the print circuit board via JV with a South Korean company, which really positions it well to tap the large domestic import substitution opportunity. Also, they recently entered into the JV with LA Master, which helps them to increase their presence in the high value segments, and also they did the acquisition of Elcom, which helps them to foray into the high value end of the defense segment. So they're trying to restructure their entire business, where they're trying to reduce the exposure towards the low margin segments like the telecom and the consumer business, and they're trying to increase the exposure towards the high end segments like defense, medtech and all. So with this, their overall margin profiles will improve, their overall product profile will improve. So that makes us really positive on the stock. And here currently we have a target price of 1300, which we might review post the Q1 numbers.
All right. Okay. Just shifting focus, the government has waived customs duty on key components used in display module and wireless charging module manufacturing to support domestic electronics production. Now, the move is expected to lower production cost and strengthen India's electronics manufacturing ecosystem. Rishabh is here with more details on this one. Rishabh?
Right, and what's going to be a major boost for the electronics components manufacturing ecosystem here in India? The government has waived customs duty on key electronic parts that are used and have wide applications in automotive displays as well as medical fields. What we have coming in is that the customs exemption is also been extended to components that are used in wireless charging for smartphones. So we're seeing an all-round sort of an approach in key components being completely waived customs duty. And why this is also important is because this is a customs duty waiver till the end of 2029. So this gives a very long-term vision for industries that are wanting to set up industries domestically. What we have is these exemptions. They cover display cells, backlight units, flexible printed circuit assemblies, as well as NFC coils. And these have very wide applications. applications when it comes to automotive, medical, as well as industrial display assemblies. What we also have is that these parts also are used in industrial clusters and instrument clusters, also infotainment displays that a lot of vehicles use. All 85 components that are used in lithium-ion batteries have also been exempted. So a very wide-ranging, what we're seeing is in terms of duty exemptions. The MeitY secretary also said that this has been a very important industry feedback that they received, and they're glad that FinMin has now approved these. So that's what we're picking up on the electronic parts, fresh waivers that have come in on customs duty.
All right, Rishabh, thank you so much for getting us those details. In fact, let's also listen into the reaction coming in on custom duties waiver from S. Krishnan, Secretary of the Ministry of Electronics and Information Technology.
We are very, very happy that these notifications have been issued. This will really stimulate the electronics industry, especially the electronic component industry in the country. This is an important requirement. This is an important change, and it would help us further deepen the value chain here and the ecosystem here.
All right, with that, viewers, we are completely out of time on this edition of Trending Stocks, but do stay tuned in. We have more updates and news on the other side of the break.
Superstar Stocks of the Day, presented by Tata Azura. Har raaste ka superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both awards.
Is firm above 24,000 even as sell-off pressure and global cues hover on the street. Green wave as broader markets mirror benchmarks while all sectors trade in the positive. Meanwhile, Dr. Reddy's is under pressure after the company flagged a quality issue in the active pharma ingredient used in certain semaglutide batches and has launched a root cause investigation. Government waives customs duty on key components used in display and wireless charging module manufacturing. The move is expected to lower production costs and strengthen India's electronics manufacturing ecosystem. Kalyan Jewellers continues to glitter. The stock has rallied as much as 24% over the last 2 trading days, extending gains for a second straight day today. All eyes, meanwhile, are going to be on TCS as IT Bellwether is set to announce its first quarter numbers. A muted quarter with modest revenue growth on the cards. AI-led disruption set to put pressure on margins and profitability. Good afternoon and thank you so much for tuning in. You're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is the show that's going to get you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But as we do that, first things first, let's take a very quick look at the markets right now. And when you talk about Nifty 50, some bit of strength really seems to be returning to the markets, managing to stay up above those 24,000 levels as well. That's the Nifty for you right now. And when you talk about Sensex as well, quite some strength and resilience that you're seeing after yesterday's sell-off come back to the Sensex as well, about 470 odd points higher. When you talk about the entire sectoral picture as well, it's quite interesting to see how that is also panning out against a tepid backdrop of thus far this week. You know, you do have Realty, Media, PSU Bank, FMCG, Pharma, as well as Bank, exactly in that order. There are leading gains across the board. There's a sea of green, as you can very, very clearly see on your screens as well. And speaking of green as well, let's also talk about some of the gainers as well. You do have something like a Kalyan Jewellers that is sparkling away in trade right now. So that stock is doing quite well for itself, with that 17.5% uptick really coming in. And it's rallied over 24% thereabout over the last 2 trading sessions as well, extending gains for the second straight day, like I mentioned earlier as well. And you do have CE Infosystems upwards of about 11% gain coming in for that particular counter. And even when you talk about some of those stocks from within the Nifty 50 pack as well, you're seeing some bit of strength coming in to something like an SBI Life. Some stocks from the pharma pocket as well, like Sun Pharma as well, 2.5% uptick coming in on that particular counter as well. Grasim, Shriram Finance, Bharti Airtel, Max Healthcare, all of those stocks in good stead right now. What's not doing so well from within the entire Nifty 50 pack is some of your IT companies, so something like an Infosys, and even some of your banking counters as well, something like Axis Bank, HDFC Life, Kotak Bank, also trading with a little bit of loss right now. And that's the entire setup as far as the markets are concerned. But moving on, let's also quickly talk to you about the entire setup when it comes to oil prices as well. And oil seems to be having a very volatile day in trade. We'll get you more insights in terms of how you should be positioning right now and looking at all of this right now. But you know, when you talk about some of the factors to watch, of course, on the top of that list is Strait of Hormuz shipping that remains crucial. And as you can see on your screens as well, Brent trading very close to those $78 a barrel level. Negative, but still just about managing to hold on to those levels nonetheless. You do have WTI as well trading very close to $74 a barrel. And in terms of some commentary also coming in, it's quite interesting that Goldman Sachs is also talking about how the Hormuz disruptions are going to be threatening the supply recovery going forward. So right now, the market just about seems to be shrugging off some of those supply concerns right now, or it could just be profit booking after that sort of surge that we saw coming in when it comes to oil prices. The escalation could really push prices higher, and that's also something that Goldman Sachs has highlighted. And they're also talking about how the tanker attacks still keep the shipping risks elevated. So it's not completely out of the woods when you talk about the entire oil market as well. And speaking of gold as well, is extending losses right now, and it's hovering very close to those $4,000 an ounce levels. We'll get you some of those insights in terms of what else you should be watching out for when it comes to both of these commodities. But first things first, let's talk about oil prices as well with our guest Ajay Kedia, Director, Kedia Advisory as well, joining us on the show right now. Mr. Kedia, a very good afternoon. It isn't a good afternoon for either oil or gold for that matter, because you did have some of those supply concerns that came back to the forefront when you talk about oil prices. Right now, prices seem to be really shrugging those fears off as well right now. What do you expect going forward for the rest of this week and heading into the next week?
Very good afternoon, Shreyansi. Yeah, definitely, yes. 2 days back when the escalation has started, we were not expecting so much of bounce, but yes, we have seen prices of Brent testing merely at 80 level mark. But now again, it's near to 78. Overall, we expect the story between US and Iran has been already be priced in, or we can say discounted, just like Russia and Ukraine. Maybe because of supply concern, there could be another $5-6 movement would be there, but it would not be sustained because we have seen OPEC continues to pump in more crude oil crude in the market. US is increasing their production. Even let's say if sanctions on Iran get exited, then definitely Iranian oil would be in the market. So I think ample of supply would be there for Q3, Q4 with us. No doubt with this escalations in meantime, prices might get some support, but it would not sustain above 80-81 level mark. Also, the support has been seen with the buying from SPR holding, which has depleted lowest level since 1983. That was expected in the line, but I don't think 80-81 should be holding at current level because of ample supply.
No, absolutely. And speaking of ample supply as well, just wanted to try and understand what you think is going to be happening going forward as well. What kind of levels are you then penciling in? And it's very clear that this is not a market that you can really time. But given all of those requirements as well, anything that you're looking at by the way of prices?
Actually, this was a totally surprise move when we have seen Brent prices move towards $70 mark, because as per our calculation, we were looking for 80-82 as a base, because whatever the infrastructure that has been damaged, that will take time to reinstate. But all of a sudden, we have seen UAE last year has exited. Iraq this year is expecting to exit OPEC, and because of that, the capacity of Iraq is around 7.5 million barrel, whereas in OPEC, they are contributing only 2.5. So I think because of OPEC's statement that they will be increasing prices has moved to that level. And by Q4, we expect prices should be around $62 to $65 mark, as supply would be more. As of now, whenever there is a heat, like news would be there, heat up talk between US and Iran, prices might go up to the level of 81, but would not be sustained. Coming on domestic side, today, MCX crude oil prices gain opened around 71.33, made a high of 71.38, but would not sustain. We expect prices would be trading in a range of, let's say, 6,400 to 7,400 for this coming 7 to 10 days. But overall, I think prices should come down again.
Absolutely. So that's what you're broadly also penciling in. Just quickly wanted to try and understand what you think about gold prices as well. It seems to be extending losses. What do you think investors should be doing if they've been waiting for the sidelines, or like on the sidelines for fresh buys as well?
So Janji, we were expecting gold prices would break 4,000 level mark, and we may see prices moving toward 3,450, 3,500 also. But with the crude prices correcting in the month of June, the concern for inflation has came down sharply. That is why we expect as of now, unless and until 39.20 doesn't break, a sharp recovery is expected in crude oil prices, because already Fed statement has clearly that last night there was a Fed minutes, and we have seen much was in line of expected. Only one rate hike is expected by December, and that is good sign for gold as of now. So we don't expect a major bloodbath in gold prices. Already prices has dropped almost 26% from the high. There is still concerns going on from the current level. We may see prices recovering to the level of 4180, 4200 as of now immediately for next 4-5 sessions. But overall for July, we are bullish. Market can touch the level of 4400 level in international market, whereas on domestic side, with a rupee weakness and making a strong support at 1,40,000, we prefer to be on a long side in gold around 143,500, 144 odd numbers with a stop loss of 140. Our prices can move to the level of 150,000 by this month, and one should go ahead and take a long position. Even from the physical side, we have seen some buying initiated has been done because of whatever the fall we have seen in the June month. So I think buying is now coming back in the market.
No, absolutely. And just a yes or no answer before we wrap the conversation as well. Silver as well, you expect this to also move in tandem with gold, right?
I'm more bullish on silver as gold-silver ratio is dropping. One should go ahead for silver, targeting at least $70 in next 1.5 month period.
Perfect. Thank you so much for taking time out and joining us, Mr. Kedia. So there you go. That's the entire outlook coming in. Time to be a little more bullish on silver. That's the commentary also coming in. When it comes to comparison between gold and silver, and it's actually the gold-silver ratio that's making it quite an attractive bet at this hour as well. But moving on, let's get to some interesting and important updates. the government has waived customs duty on key components used in display module and wireless charging module manufacturing to support domestic electronics production. Let's go across and listen into the word coming in from the MeitY Secretary S. Krishnan, who talked about all of this in terms of the customs duty waiver.
We are very, very happy that these notifications have been issued. This will really stimulate the electronics industry, especially the electronic component industry in the country. This is an important requirement. This is an important change, and it would help us further deepen the value chain here and the ecosystem here.
And we've talked to you about where crude is headed as well, going into the next week as well. But let's also talk about the ethanol blend. In fact, the government is weighing a calibrated shift to higher ethanol blends with E21 likely by 2027 as well. In fact, in an exclusive conversation with your channel, you do have the Petroleum Minister allaying some of those concerns over ethanol blending, saying that E20 has seen no consumer complaints in the last 18 months. Let's go across and listen in to a slice of that conversation.
The fact that there is now suddenly a raging debate with regards to ethanol, something that has actually happened months after the actual implementation, actual transition that has taken place. In your assessment, why is it that it's happening now?
E20, madam, has been around for nearly 2 years now. Nearly 2 years. Slightly short. I think E20 blend came into the market in April 2025.
Yeah.
So April of 2025 to April, and we're already in the month of July. Okay. But I ask you another question. Before we reached 20% blend, we were at slightly less than that. And we were at E15 for 3.5 years. I have never heard of any controversy then. Let me put it the other way around. Why does a controversy take place now? Especially, and I underline emphatically, there are 20 crore two-wheelers using E20.
Yeah.
20 crore. There are 20 lakh four-wheelers using E20. I don't call it a gut feeling, because people like me should not be going on gut feelings. But when I put everything together and I compile the evidence which is available, the fact of the matter is that we import 85% plus of our crude. Suddenly on 5th June, when we launched E85,
right,
in a limited number of stations, I think 47 in the National Capital Region, and we launched the largest selling, we launched means the company concerned, Hero Motors launched the largest selling brand as a conversion to E85. Suzuki Motors launched Wagon R, and Toyota Motors launched one of their hybrid using flex fuel, E85. My sense is that someone thought that if E85 takes off in India, this was on 5th June, which is World Environment Day, because things happened very rapidly after that.
Right.
Someone must have thought that, my God, if flex fuel takes off here and EV already there is a thrust coming, etc., let's cast a doubt.
You're raising a very significant issue
Well,
there,
I'm
sir.
raising it because you asked me a very penetrating question.
True.
And I had, frankly, before I came for this discussion, I kept, I appear in discussions with colleagues, individually, with newspaper correspondents. But I don't think we've had a firmer fix on the timing as we are getting out of this discussion.
True that.
Today we are on July the 8th.
Right.
And this controversy is what, 2 weeks old, 3 weeks old. And it's not that on 5th June suddenly it arose. We saw signs of it. But I think the counter information which has been put out, that this is not something we've done suddenly, that E20 has been around for at least almost 2 years, that E15 has been around for 3.5 years. And by the way, in the last 18 months or 24 months, there have been no complaints.
Let me take some of those aspects that you pointed out. First, you said that there is a clear pattern towards fear-mongering when you linked the LPG fact to what is happening now. Do you think that this pattern in terms of fear mongering or creating this kind of a fear psychosis, who's doing that?
Well, look, it's not for me to make those assumptions, or I can just point to some evidence. I went back to the LPG story only because fear mongering comes naturally to people who have an interest in and a stake in trying to run down governance procedures, etc. You remember when we've had to face the pandemic, our vaccine manufacturing capacity had been almost, I'm talking about our domestic vaccine manufacturing capacity, it had been almost completely stopped in the public sector between, I think, 2010 or 6 to 10 or 12, thereabouts. Therefore, when we faced the pandemic towards the end of 2019 and 20, we not only set up domestic vaccine manufacturing capacity, one plant in Pune, AstraZeneca, another plant purely indigenous in the south. We ended up making 220 crore vaccines and distributed most of them pro bono to free to our population, and exported also to 100 and 150 countries in the world.
So who's questioning India's credibility?
No, I'm coming to that. But where were some of our friends then? Modi ji, हमारे बच्चों की वैक्सीन कहाँ है? And I used to tell them that Rajasthan में आपकी सरकार ने कूड़े में फेंका उसको, पंजाब में उनकी सरकार थी, वहाँ पे मुनाफाखोरी. I'm not suggesting they are doing this. LPG, yes, they were in the forefront. When it
By they, you mean the opposition parties?
Absolutely.
All of them.
They were in the forefront. In LPG, you can see the MPs lined up. You have that. And it turned out that there was no shortage of LPG. We had some anxious moments because the supply routes were choked. We took a number of steps. We ramped up domestic production. We diversified our sources of supply. We passed orders on the demand side. We moved to many things. Domestic production went up from 35,000 metric tons a day to 54,000 metric tons. Yeah. A massive increase. But I come now to ethanol.
You know, the politics of it, you mentioned about opposition parties. Let me just quote exactly what Priyank Kharge, who's a minister in Karnataka government, has said, that this is actually an experiment on 3.6 crore Indians without adequate consultation. This is
what is an experiment?
The entire ethanol transition.
First of all, I would like to remind this gentleman you've named, the program of biofuel blending or ethanol blending is one that was started in the year of the Lord, much before we came on the scene. I was ambassador to Brazil in 2006, and I recall even before that, the Honorable Minister for Petroleum and Natural Gas, Shri Manishankar Iyer, statement, which I've seen played back on several of your channels, speaking in Parliament in 2005 that we will do ethanol blending, etc. Now, if they don't want to take the credit for it, I'm quite happy. But they should not distort facts. It is not an experiment. What he is referring to, possibly, and there was a lot of fear-mongering on that, the learned Attorney General, in appearing before the Supreme Court of India in a case which revolved around and was anchored in total procurement numbers, because there was a stay in the High Court of Calcutta, my apologies, in Karnataka, where a best endeavor clause in a contractual agreement was sought to be interpreted as a mandatory requirement. Okay. So he was saying that, look, he was appealing against that in the Supreme Court, and there he used the word experiment, but it's not in the context of blending numbers. He was talking in terms of quantity. And let me explain that to, and through you, to this gentleman and others who might be deliberately causing misconceptions and misleading people. When we wanted to do 20% blending, that was a target to be achieved by 2022. No, 10% blending by 2022 yes. November. We did it 5 months in advance.
Right.
We had a target of 20% blending, for which we'd made a calculation that you need to produce 11 crore litre, 1100 crore litres of ethanol. I stand corrected, 1100 crore. Today, the production capacity has gone way beyond that. because of a number of steps taken. A, it was a successful program. Secondly, we diversified the feed. We went from C-heavy and B-heavy molasses to cover sugar syrup, we covered maize, etc. And there were offtake agreements signed with banks. Today, the total capacity is close to not the 1100 crore litres, but almost double that amount. So the learned Attorney General was responding to that as an experiment, that the country is trying to assess how much it needs, etc. And we are trying to calibrate that. Now, he has misinterpreted that to talk about percentage of blending.
Okay, so you've clarified on that, but the larger point, which is that India has advanced the timeline. 2025 is when E20 came into being. It was earlier expected to be around 2030, and there are already now talks about E25 probably being brought in. The question that many are asking is that were independent studies conducted, given the fact that there are many individuals and consumers who are coming to light and saying that, hey, there's an issue with regard to engine, there's an issue with regard to my car, not performing properly. Independent third-party audits. That is what many are saying.
I'm very happy you're asking that question. Because the discussion today is on E20.
Yeah.
But E20 has been around for 2 years. My point is, why is the controversy coming now? If you are looking at independent studies for E25 that we haven't even launched yet.
Right.
We are conducting those studies now. Insofar as E20 is concerned, I can tell you one particular manufacturer, I think it was Hero Motors, they have serviced 1.5 crore vehicles using E20. Not a single complaint. Then, as I mentioned to you...
But complaint is for older vehicles, before 2023.
I'm coming to that also. In older vehicles, the evidence that came through was on 2 counts. Number one, these number of cars, vehicle service also covers that. But what you get there is that if you have a gasket which has to be replaced at 50,000 kilometers, because you're using E20 on an older vehicle, that is a vehicle prior to 2023, you can probably have to look at it at 30,000. But again, Gauri, madam, why were those complaints not coming now? They come after 5th June suddenly. Insofar as mileage drop is concerned, yes, this is well proven in terms of automobile engineers amongst the discussion there, those who are fuel specialists. Ethanol helps acceleration. Ethanol has an octane count of, I think, 108, whereas normal petrol has an octane count about 84 or so. So depending on the kind of octane, higher octane that you take, but the ethanol does result in some percentage of less mileage. But equally, automobile experts will tell you the driving mileage depends on a number of factors. Driving habits, the kind of vehicle you're using, the kind of speed with which you are going. If you are going on an empty track and driving at a consistent speed, I'm not suggesting you do that, but say 40 kilometers an hour consistently, without zigzags, without brakes, without red light, you'll get a slightly higher mileage. So driving habits are very important, but it is conceded ethanol will give you a slightly less mileage, which again depends on a number of factors. Now, I said somewhere that, listen, ethanol is not something which has been invented by us. It's not even been invented by the Congress party. Madam, 100 years ago, the Ford Motor Company, when it launched the Model T, I think it was called, was talking about ethanol usage. Ethanol has been used in all manner of engines. Ethanol has been used in F1. In fact, I think the standard fuel for F1 racing cars is E10. So I think there is a lot of deliberate fear-mongering, etc. And my simple response to this is, all right, prior to 5th June, prior to our launch of E85, how many complaints did you hear on ethanol blending?
You tell me, sir.
Well, I've been minister since, I completed 5 years ago, I think, one of these days. And to me, this was entirely new. A new set of people who have nothing.
Let's say there was a vehicle before 2023. Let's say it was purchased only in 2023.
Let's say 2021.
2022. Okay, yeah. 2021. So it's 5 years so far. if, let's say, it has breached that 50,000 mark when the gasket had to be changed, or it realized it was done sooner than that, you are saying none of those complaints ever came to light till 5th of June right now.
Ma'am, why should I say something unless I'm 100% sure on it? I'm not giving you my evidence. I'm giving you the evidence of auto manufacturers. I'm giving you the evidence of those who make two-wheelers, those who make four-wheelers. They've been serving. I'm giving you another independent. You're talking about independent study. How independent is independent? There is a person somewhere in Chennai. He's called Madras Mechanic. He's written an account, absolutely technical account. He said he has serviced, he has analyzed thousands of vehicles. He's never come across these. Yes, it is theoretically possible that if your car is running more than the average. First of all, it's very difficult to work out averages. You may own a car. How many kilometers a day do you drive your car? When does your car reach 30,000 kilometers as against someone who's driving, let's say, an Uber? Okay?
So
those are the only requirements that experience has shown, that if a car is really driven to its optimum use, and instead of 50,000 kilometers, you might have to change the gasket, which is a simple, inexpensive part, earlier.
Okay.
On very old, much older vehicles also, there may be some rubber parts which require alteration.
Okay.
Then there you go. So that's key commentary coming in from the Petroleum Minister. Let's put the spotlight on some of the comments that he's given to us as well. He's talking about how the adoption of ethanol blending is going to be reducing pollution, talking about how the E20 fuel launch is definitely not an experiment, and around 20 crore two-wheelers use E20 fuel in the country as well. That's also a number that he's given us. And in terms of ethanol blending, that can affect mileage to some extent, but it is even F1 cars that use somewhere close to the E10 fuel as well. So that's the key commentary coming in on the ethanol front. Other than that, he's also talked about how they're fully prepared if the war escalates again as well. So that was Petroleum Minister Hardeep Singh Puri talking about the future of ethanol blended fuels in the country and much more. But do remember to tune in at 4:30 p.m. to catch the full conversation, and that's something that you should be tuned into as well, to find out some more in terms of ethanol blending and everything else that he's talked about as well. But with that, it's a wrap on this edition of Lunchtime Trades. Thank you so much for tuning in. Small Cap Buzzers up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
The entrepreneurship in India is currently defined by innovation, technology, more customer orientation is something what
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. Now if you look at the markets, after the 500 points fall that we had seen on an intraday basis yesterday, we're seeing some kind of recovery coming in. At least 1/3 of the losses that we saw yesterday has been recovered by the benchmark index. Even the Nifty Bank index is up more than 500 points in trade. The good part is that all sectoral indices are trading in green with the best index being the Nifty Real Estate Index up around 3%. Nifty PSU Bank Index is up close to around 1.7% in the trade, while the index which has gained the least is Nifty IT, up just 0.1%, and that too because of the recovery that we have seen in the share prices of TCS from the day's lowest point. TCS has recovered nearly 2% ahead of the numbers. But again, a good day for the Nifty Small Cap Index as well, up around 2%. But Varsha, which are the key stocks here that are buzzing in trade?
Well, a lot of stocks in focus. Good day for broader markets. You have Unichem Labs buzzing in trade on the back of high volumes. You have Creative Peripheral, again, 30 times of trading at 30 times.
Right, but before that, let's go across to the SBI mutual fund. The company will be coming out with its IPO on July 14th.
Hello and welcome to the show. SBI Funds Management is coming up with a large issuance in terms of listing, and the IPO size is almost $1 billion. I have the top team of SBI Funds Management joining right here to tell us about the potential and what the shareholders should really bet on in this particular IPO. I have with me, and let me introduce Devashish Mishra, DP Singh, Srinivas Jain. Thank you so much, gentlemen, for joining us on NDTV Profit. Starting with you, Devashish Mishra, of course, SBI parentage is the main pull when we talk about SBI Funds Management, and of course, the AUM size also makes you the largest AMC and the fund management company in the country. When we talk about this particular IPO, what is your aim and SBI's vision in terms of this value unlocking?
Thank you for this question, and thank you all the viewers. So we came with this IPO to bring confidence in the market. For the last couple of months there has been uncertainty, but we want to say our investors that SBI coming out with a good value so that we become the market leaders in AUM as well as in shareholders. And this is to improve our governance, market discipline, visibility. We don't need capital. We're fully capitalized. It's not to raise capitals. But we want to make, being the largest AMC of the country, we also want to be listed in the market to bring more transparency and governance to our own, also be accountable to the market. So we'll be adding one more stakeholder. We had unit holders.
Yes.
We maybe had our own regulators, our own parent. We are adding now our shareholders. Right. So we're actually inviting more discipline to ourselves.
That's right. All right. So that's one part. But of course, two of your investors are also selling stake through the OFS, and huge value unlocking is taking place when it comes to SBI as well as Amundi. Srinivas Jain, when we talk about the valuations, it is at par with the privately listed fund houses which are already listed. So it's at par with the peer when we talk about your FY28 Ps. What's the rationale of this particular valuation? And with this IPO, are you leaving anything on the table for the shareholders who are really issuing into this particular IPO?
Firstly, thank you for having us. It's a great opportunity to speak to you. When it comes to valuation, obviously the valuation is a derivative of what happens in the market, the demand, supply, positioning of the company. To be fair, as a company, we don't talk directly about valuation. We are very happy to see valuation that comes from the market, but we are the largest asset manager and we've built a very large franchisee, and that franchisee's value is getting reflected today in the valuation that's there. Obviously, 6 other asset managers are listed, so there is a reference point out there. But clearly, we have a distinct advantage of being not just the largest, we've built a very large franchisee, and that reflects in the valuation that today market is giving us.
Right. So when we talk about the growth parameters, what is it that the shareholders should be really betting on? Why will they really bet for SBI funds management vis-a-vis the other private sector competitors?
I mean, we don't distinguish between private sector and public sector. We are competing in every single capability. We are largest private public put together. We are the largest asset manager in the country. To be fair, I think there is really no equivalence to the franchise that we've been able to build, whether it's a distribution reach, whether it's the retail penetration, the SIP book that we've created, a huge institutional business that we have built. And I think we have a lot more to look forward to. There's so much more headroom to go. I'm sure our CEO will add a lot of value on what we are trying to do as a company. But clearly, this is a very differentiated franchisee, completely different from what's out there in terms of capability, in terms of what we've already delivered in the market.
I'll supplement to what Srini said. Look at the way financialization happened in the country. 1.4 billion citizens, 950 million bank accounts, but only 55 to 60 million unique investors. So look at the roadmap we have. Even our parent, SBI, has got 530 million customers. So I've got a huge way to convert these customers, savers to investors.
That's right. So penetration is also key. It's a volume play, and with the large, distribution channel, especially of the parentage, also is an added example. DP Singh, in terms of the distribution mix, how is the growth potential? And if you can also share, what is the contribution when it comes to SBI as a franchise?
Thank you very much, Nisha, for asking a very, very good and very deep question. But just to take a clue from what you said, why people should look at us. Because we feel that we have just started our growth journey. Yes. Others have peaked. We are just starting, being the largest. And today the biggest amount, SBI is contributing only 21% of the overall AUM. But if you talk about the intermediate business or distribution business, we have 1/3 is coming from SBI, and remaining 2/3 is coming from the other channels and direct channel. So that's why there's no concentration risk, but at the same the biggest moat. If 1/3 of the business is coming from a distribution channel which is exclusive to you, that definitely is the very, very thick icing on your cake. Right. And I think that is what we feel that is what will bring value to the
I'll pick that line that there is no concentration risk, but this is the biggest moat. I think that will be the headline of the entire issue as well. But Debashish Mishra, also SBI is, after the listing, will be over 55% stakeholder, despite selling a minority stake in this OFS. Yeah. And after that, also it has that value unlocking as part of its SOTP. So that particular benefit is being given by this particular arm to SBI, and with the IPO, a lot of value unlocking is taking place with over 1 lakh crore rupees. But my question is that there is also a royalty fee that is being paid, which is a concern and needs to be also explained when it comes to the financial impact on the company.
So SBI, the biggest financial conglomerate in the whole country, and not only SBI Mutual Fund, we have got already listed 2 entities, that is SBI Life Insurance and SBI Credit Card. So the royalty part has been debated, discussed, and it is totally transparent for the bank as well as us. Now, this has no impact on the valuation, because valuation will go up as market grows and as we are listed, and we are going to recover more, we are going to earn more by the scale and by the way market receives us in the future. I mentioned 2-3 numbers. I'll give one more number. The whole household investments in financial assets has grown by 11% in last 5 years. In mutual fund, it's 41% CAGR. So the way we have been growing in the mutual fund business, which is anyway, as Mr. Singh said, bread and butter of our business. So we'll grow much more, much faster to recover the fees and give more margin to our shareholders and our unit holders.
Is there a risk also of that brand, being lost in future? What are the fortified steps being taken? Because this brand brings a lot of value to the company.
It's a very good question. In fact, this question asked to me by global investors. So you are matching with them.
Thank you.
So see, there are two ways looking at it. One, large number of SBI customers in hinterlands, in B3 cities, they depend on SBI for many other things than investment. Their own savings, their own banking needs, their own digital banking, all by SBI. So we have got this mandate from SBI to select products, to sell select products in those branches.
Right.
And there is a process. We can't just sell any other product in those branches. So that process we follow. And SBI has a confidence in us being the subsidiary that we follow the same values, same ethics as SBI has. And SBI has already categorically mentioned that this will be permanently available to us.
So that's an important bit and gives a lot of consolation and understanding to the market as well, that this will be a permanent brand identity when it comes to the SBI parentage on SBI Funds
One
Management.
small supplement to is SBI also has open architecture. It's called SBI Wealth, which are ultra HNI customers, which have been served for many like AMCs, but that is only some 1.1% of the SBI customers.
Right. Srinivas Jain, when we talk about your stakeholders, of course, SBI as a parent company, but Amundi is an investor. What is it that they bring to the table? And my second question, if you can also answer on their behalf, is that what is their strategy in terms of also value unlocking from the company, because it will be a listed entity, because that could be an overhang on the stock price as well.
No, it's a good question to ask, because some of the other joint ventures out there actually are kind of exiting the business the way we understand. In our case, it's a little different. Amundi is a fiercely committed, joint venture here. In fact, we had to jointly discuss and say we will jointly sell the stake. It was not Amundi who was trying to sell; it's both SBI and Amundi who was trying to sell the stake. And their commitment will continue to be there. That even after full dilution, they'll have a significant stake in their company, meaningful stake in the company, beyond 20% stake, which will make them a very important stakeholder. That's one part of it. The second part of it is not just stakeholders; they bring a lot of value to the table. Today, Amundi, beyond the shareholding, has a deputy CEO who comes from Amundi sitting here. We have about 5 to 6 expats actually working in the company. Best practices are shared both ways, between SBI Mutual Fund and with Amundi. We are working on projects on technology. We are working on project on fundraise. We are working on project on both, two-way, getting investors to India through our global, routes, and also to take Indian investors to the global markets through LRS routes and others. So there's quite a lot of commitment that Amundi brings to the table. Unlike some of the other joint ventures, which are either an insurance-led joint venture, which are on the out, Amundi is a serious long-term equity investors, especially when it comes to, they're the largest European asset manager per se, with $2.5 trillion worth of euros worth of assets, and they bring a lot of value to us, and they continue to have a significant stake in the company even post-listing.
That's right. So no in terms of visibility of their stake sale.
No, they are selling at proportion to what SBI is also selling.
Okay.
So their holding will be sold down, equal in the same proportion that they hold today.
Will
SBI holds.
SBI and Amundi have the same proportion of stakeholding in the company in future as well? Is that the understanding?
That's perfect. That's correct.
Okay.
Right.
All right.
I mean,
So
if you remove the
that
public
is-
holding, they would be at the same proportion.
That's
right.
a good understanding that you've given. DP Singh, across different categories, let's come to the products. What are the growth drivers? And in terms of AUM growth, it was a good amount of growth that you saw in the last financial year, 12% AUM growth. What is it that we are looking at for the next few financial years?
No, I think the growth is a function of the market sentiments, growth of net sales and mark-to-market gains. Last full year we grew by 12%, and this year from 31st March till date, we have already grown by 12%.
Right.
So that's the point you have to take in mind. This is market movement also, the fresh sales also. If we look at the growth engines of the country, other than the product, it's the solution-oriented approach or investor-oriented approach of the company, which is taking us to the next level, but we are growing much better than the industry. If you look at our last 10 years data, I think we would have grown more than 2x of the industry growth. That is something which is there, but for going forward, the product mix is already there. Then we are talking about the distribution mix.
Yes.
We are very conscious of the fact that we have to grow much higher in SBI channel, but the percentage term we don't want to grow more than what we are, maybe little more, so that the other channels also grow. So this will be inclusive growth of the company, which is the strategy. And we are very confident that we'll be able to do that.
All right. So growth-wise, AUM-wise, we are on the same run rate as last year for sure. We may beat it, but at least we will not be below that. That's
no, but what I am talking about the absolute number.
Yes.
What we did in 12 months, we have done in 3 months.
All
That's
right.
what I was talking about. I'm not talking about the annualized 12% number.
Okay.
What he's saying is it could be better than last year.
Yes, it will be much better than 4 times.
Right.
Because in three months you have already clocked it. So Srinivas Jain, when we talk about the profitability, of course growth is there, your distribution channels, India has the potential of penetration as well, and for that I'll come to you on the digital aspect. But first, in terms of profitability, margin play, that is going to be the key that the market will look at. How are we in terms of the blended margin, passive and active portfolio, and how is that growing, and what are the levers to push that growth?
So let me try and demystify 2 points. One is that I think at a profit level, we are one of the fastest growing profit pools out there among our peer group. So that's the first part. So whether blended or non-blended, I'll come to that later. Pure growth, pure volume, pure profit pools are very large and growing very fast. Yes. The second part about it is the blended volume, the yield part of it. See, at some level, we are a very large scale players. We are 13 lakh crores today as we speak. When we filed our DRHP, we brought 12.5 lakh crores, growing at a very fast pace. Secondly, we also have obviously there is a very large tilt towards passive assets that we have, which is kind of tapering out in the last 3 years. If you see, our active mix is growing faster than the passive mix. There's been almost 10% hike in our active assets compared to passive assets in the last 3 years. That actually has shown margin expansion.
Right.
We are one of the few asset managers where in the last 3 years the margin expansion is actually going up because we are catching up on that high active asset base for the company. So blended way is a wrong way to look at our business. Individually, when you look at it, we are either close to best in class or best in class in most of the category, and that's the way to look at our business.
But levers to push it forward.
The levers to push it forward is that our active mix goes up, and one of the things that we talk about is our SIP book. We have the largest stock SIP book in the country today, with almost close to about 4,000 plus crore coming month over month. We definitely have a very large active book that we are creating as we go along, and that obviously numbers are like 60,000 plus crores every year.
Yes.
A number as it goes up year over year, our active mix will only go up.
Right. So Debashish Mishra, penetration is the key. How is SBI's parentage really going to help in terms of expansion and go-to-market approach?
So first of all, we are now looking at 13,000 plus employees of SBI who are qualified, NISM certified to sell these mutual fund products. That is very good support to us, and also branches. In addition to that, SBI's whole YONO, the digital platform, digital banking which they have, has a smoothless, seamless connection with our mutual fund investment. Only one piece which is friction is the KYC. So as you understand from the regulators and from the government, the KYC piece will be resolved in 2-3 months' time.
Right.
So once it is done, then the whole journey of a customer of the bank or a investor in the mutual fund will be very seamless.
Right.
So that will be exponential growth in the whole investment industry, and we'll get the advantage because we are the largest parentage of SBI.
All right, so that is an important bit, but DP Singh, expense ratio, that being restructured by the regulator from 1st of April, what has been the impact?
Now, you look at it, see, first, this is the total expense ratio, the way we distribute our business. This is something, when we distribute, a percentage of the total expense ratio is being parted with as a distribution cost.
Right.
So the major part of the reduction which has happened has already been passed on to the distribution partners, and they have very happily expected it because we are the partners both. And see, the best thing about our business is when the markets go up, we get the benefit of the fee on that as well.
Right.
So that has been passed on, and we had the way it was structured, that we had some benefits also. So overall, we are revenue neutral. even after rationalization of 5 basis point expense.
So you managed to offset
we
it?
We have managed, we have optimized it.
All right. But you mentioned about it's a function also of the market. Devashish, the market has been quite uncertain with the resurgence of the war fear again coming in. What is the impact on the business? And do you think, and of course, this meteoric rise of the AUM that you have already spoken about, but for the rest of the year, do you see this as a worry at all?
I don't see. My favorite line is market will be uncertain, trust is not.
All right.
So with that strength of trust and my customers, my shareholders, I don't think market will impact much in our activities coming up. The second thing is, we have been seeing this now for a long time. Mumbai rains.
All right.
They always come in different times and they disturb sometime, but you are used to it. So now market is used to this kind of uncertainties. So I'm sure it will come up.
The level of confidence that you have is really infectious. Srinivas Jain, today is a digital age. Now, private sector is really going very fast-paced on that. And now you have more avenues of distribution, even on your payment wallets and everywhere. What is your company's vision towards higher penetration, better reach, and making more profits out of the digital channels? What are the steps being taken there?
To start with, I think we are a highly digitized industry already because of all the stack that's available. And almost 95% of our business today comes purely on the digital platform. So it's already fairly digitized. We've spent a lot of money digitizing the ecosystem. We've used all the stacks that's available. We build our own stacks, by the way. We have a stack called InvestStack, which majority of the industry also uses it for that. Secondly, I think the way to think about our business is business is going advice plus digital. That means transactions happen on a digital platform, advice is still physical, right? And there is also advice digitally, but advice is still physical. So we are enabling this huge growth of digitization, the friction-free environment that we talked about, as more and more, today the new KYC 2.0, when that kicks in, I think we'll have a massive benefit that will come to us. We've already integrated our channels with SBI channels, full core banking integration. YONO, which is the largest digital bank in India, much bigger than the fintechs out there, have a full integration with SBI Funds Management. So we've built a lot of digital, railroads for us to kind of benefit from it. And today, Invest app, which is our largest mutual fund app out there, has about 4 million customers on it. Has about 12% of our SIP book actually comes from that. We built a very strong ecosystem of digital assets, digital app. One of the big thing is AI. We've actually used AI at the last investor mile. Our Invest app is fully AI enabled. You don't have to go through menus and stuff. You can ask what you want and you get those benefits.
How do you compare yourself to other peers when it's
personally,
the
if you
use
ask
of
me,
AI?
Personally, I think we are best in class out there. That's good for me to say, but obviously it's for industry to judge. But Play Store ranking gives us 4.8 on a Play Store, which tells us that people are also voting with their feet when it comes to our apps and our digital ecosystem.
All right, so use of technology and AI mix really adds to the overall power of the company and the sector, like all businesses these days, and that could be one of the differentiating factors for your industry also going forward. Thank you so much, gentlemen, and all the best for the IPO.
Thank you so much. Thank you for having us.
Thank you, all viewers.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों
Well, it was a very interesting discussion with the management Nisha had done earlier, but I'll give you a 360-degree angle analysis from NDTV Profit, and let's get in the peer analysis of how SBI Funds Management actually stacks up. I have got you 10 important metrics that will help you make your decisions for this IPO. The first metric, let's talk about it, which would be in focus for SBI Fund Management, is the revenue and profit. This is the numbers to look at, especially ICICI Pru AMC is on the higher side, but looking at it, the profit is also at roughly 3,500 odd crore rupees. So that's an interesting take. The second comparison, let's have a look in this analysis, apart from the financials, is the QUAAM. That's the highest. That's nothing but your quarterly average annual asset under management. That is something to watch out for. This is the market share rate. It's the highest. Let's look at the third metric to see what's the picture looking like. The foreign partners, most of these players have their foreign partners also, and this is what we are talking about for most of these players. Apart from this, let's talk of the fourth metric, what's important in our analysis. And of course, this is the overall market share. In the passive segment, look at that. Almost 28% of that is coming for SBI Funds Management. That is where the interest lies. Let's talk about the next metric also, what's there in focus. The equity-oriented retail, it's a close second in the analysis for SBI Funds Management. And apart from this, let's look at the other metrics also where you should be very thorough in your analysis. And the active equity AUM, that's where the market share comes. It's slightly below the ICICI Pru AMC, but largely in the top two. Also, the next important metric would be the number of unique customers. This is, of course, on the higher side for Nippon Life, and compare that with SBI Funds, it comes in at almost 1.8 crore. These are all the data by RHP. The next one is a very interesting metric. That's the QM of parent bank deposits. So generally they have their AMC and they have a bank as well. And this is a very lower number. Look at that, it's only just 21%. That means there's a significant headroom to expand and use the users of the parent, which is the SBI. So this is a very positive point. Also next, let's look at the other key metric, and this is the valuation picture. This is what we have taken for the FY28. This is on the lower side, but on that number, it's 31 to 34 times. That's what we have taken from the price band. So it looks like fairly priced IPO. So this is the entire picture when it comes to the overall peer analysis with SBI Funds Management. But this is IPO. So this is where we do a lot of analysis also. Of course, in the strength, weakness, opportunity, threat. That means it's the SWOT analysis I'm talking about. And SWOT analysis about the company, I would like to give you some important points. It's the largest mutual fund asset manager in India. This is in terms of firm market share. Next point is also very much important. It's close to second in terms of actively managed equity hybrid schemes. The third important point for SBI Funds Management is the largest ETF and index fund. That's the passive segment by manager in market share. And if you can note it down, another interesting fact, largest market share in the B30 category. B30 is beyond the 30 down category as well. Also looking at the numbers, they manage the second largest number of mutual fund schemes if you compare them with their peers. And another important point is the largest fund universe amongst the listed AMCs. They have a total of 85 schemes, the least AMC quorum as a percentage of parent bank's total deposits. So this is definitely a positive point. You should note that down as well. And 36% of total AUM and almost 40 plus is exposed to passive funds as per the analysis. But what's the strength? Let's talk about it. Strength is a strong parentage and distribution. SBI, we all know that definition. One of the highest SIP inflows market share. They have roughly 14.7% to be precise. Also, another important portion is the passive as percentage of AUM is highest amongst peers. That itself is a strength as well. And highest margins, ROEs and cost structure amongst peers. This is what we have got the strength. But what's the weakness? There are some concerns as well. The revenue is lower than ICICI Pru AMC despite being on a bigger size. But remember, they have a passive fund exposure. Yields have been impacted due to this reason. The third important point, the weakness, includes, of course, these two fund houses have better negotiation rates as compared to the distributors, and the concentration of fund managers AUM in fund is the active AUM. So that is where a little bit of concern definitely comes. And the opportunities, let's talk about it. More headway for AUM growth via the parent company. And of course, they have a foreign partner also. Amundi is there. It's largely untapped. So that is where you will be watching this opportunity grow. Also, another reason is more potential in the B30 markets plus the passive book. That itself is also growing, and definitely it will augur well for the bank and growth in the non-MF segment. Last 3 years, the good momentum has come in this space. So we spoke about the most important things, but there are some threats also. Industry yield pressure. This is kind of cyclical, which impacts the mutual fund businesses. The second reason or a threat would be the rising competition from fintechs. Can it sustain? Of course, there are bigger names, but new names are definitely coming up. The regulatory risks are always there. We had spoken about the expense ratios, how things pan out, and also let's get in the current market sentiment, how things are moving. Is there a good grey premium or not? That's something we'll be watching out for, but the entire action will go next week onwards. So this is the entire picture I've got for you in this segment, but let's try to understand, the entire picture of how things move. And we have our guests with us as well. We have Vineet with us, and also we have our another guest. He's also joined with us. Hi, both of you gentlemen. Vineet, I'd like to start with you first. A very important update coming in from SBI Funds Management. Just to put things in perspective, good time to apply for this, because the valuation pricing seems fairly okay, and there's a lot of institutional interest which will come. So we'll start with Vineet on this first.
Thanks. The introduction that you gave on the SWOT analysis was bang on. And, you will see that SBI compares very favorably with the other peers which have got their own banking parentage. Now, if you see, all these funds quote at 1.5 times PEG. And at the current offer of 574, this company is available to you at 1.1 times book. So, given all these things, I believe that on listing, you can easily expect the stock price to move to 1.5 times. And given the parentage of the company, the micro-granular focus of the management, which is there to focus on, the smaller investors and also to grow across SIFs, I think that, it will sustain its 20% kind of growth rate going ahead. And we also expect a massive re-rating to happen out here because, it is the first offering from a very large fund house that is going to come into play. So I believe that, we are sitting on easy 50% profit to be made on listing. And I expect very healthy subscriptions to come at this.
Exactly, Vineet. We're just discussing on that. After a long time, we're seeing a big IPO coming in, a very strong parentage. There will be a lot of follow-on buying post listings from institutions also. It's largely known in the unlisted space. I saw the prices touching 900, then correcting to 575. So there might be a normalization back as well. Everything looks quite good. So it's a good stock to apply for the IPO, as well as, can it go, after the listing also, there could be some follow-up buying. How do you see this panning out, Vineet?
Yeah, so what I told you was all on the basis of trailing numbers, whereas the other valuations that I gave you on a prospective basis for FY28